Good morning and welcome to the last day of this first set of hearings. We will be starting with the Johannesburg fresh produce market. Mr. Derek Bowles will be the evidence leader. Over to you, Mr. Bowles.
Thank you, DC, and good morning, everyone. Morning, gentlemen. So maybe just to start, if you could please state your names, your full names and designations for the record.
Good morning, colleagues. My name is Charles Park. I am the Senior Manager Commercial Services at Johannesburg Fresh Produce Market. Thank you for having us.
Good morning to everyone. My name is Nkosinathi Baloyi. I'm the CFO for Joburg Market. Thank you.
Thank you. You'll notice that there's a laminated card on your table there. We've been holding these proceedings under oath. So if you could maybe just indicate whether you have any objections in taking that oath. And if not, then can I ask you to please just state your name and read out the oaths.
Thank you. I have no objections. My name is Charles Park. I swear that the evidence that I shall give shall be truth, the whole truth, and nothing but the truth. So help me God.
Likewise, I also don't have any objection. My name is Nathi Baloyi, and I will take an oath. I swear that the evidence I shall give shall be the truth, the whole truth, and nothing but the truth. So help me God. Thank you.
Thank you very much. Maybe just to start, in terms of housekeeping, we have divided the session up into two parts. The first part will be a 30-minute session, which will enable you guys to just take us through the work that you do, maybe explain a bit more about the Joburg Fresh Produce Market, and talk to any issues that you wish to raise. And then the second part of the proceedings will be some questions that the technical team has prepared based on your submissions that you've made to us already. All right, over to you. Thank you.
Thank you. I'll give a brief background on Joburg Market. I'll start with the mandate. Chair, I've written it down, so I'll read from my computer if it's in order. The company mandate is to manage and operate a market facility through the provision of smart market facilities and complementary services for fresh produce industry. This includes provision and management of facilities and services for the distribution of fresh produce, ensuring competitive, resilient, sustainable fresh produce trading platform, enabling market access, sustainable availability, and affordable fresh produce, ensuring food security, safety, and compliance to quality standards. We also have key regulating frameworks under which we operate. I'll just mention a few. The Agricultural Product Standard Act, the Agricultural Product Standard Act, Agricultural Produce Agents Act, the Market Bylaws, Protection of Personal Information, Promotion of Access to Information Act, Fresh Produce Export Quality Control Act, Occupational Health and Safety Act, Foodstuff, Cosmetic and Disinfectant Act, and the Municipality Financial Management Act, to mention a few. We also, in the industry and as the Competition Commission, inquiry relates fundamentally to the entire value chain. So in the value chain, you then have different strategic partners or even role players. So we engage with the Department of Agriculture, PPECB, Perishable Product Export Board, Product Control Board, which is PROCON, Department of Health, the Agricultural Produce Agents Council, which is APEC, and also growers associations like Potato South Africa, Citrus Growers Association, and then the South African Union of Food Markets. In terms of the value chain, I'll talk it, and there is a submission on this particular slide where we look at commercial farmers and your small-scale farmers, and we find that of the produce that we receive, roughly 90% comes from well-established commercial farmers and 10% from your small-scale farmers. And there are different distributing channels available to farmers. You get your export market, you get your national fresh produce markets, you get your retail sector, hospitality sector, and then farm stalls, and then obviously your processing plants. And through this value chain, it eventually reaches the consumer. In the marketplace, there are different, I suppose, definitions for what a market is. In short, in our business, it's a regular gathering of people to purchase and sell provision of commodities, an area or arena which commercial dealings are conducted. So the next point, what is the purpose of a market? It serves as an aggregator for buyers and producers. It serves as price-forming mechanisms, which fresh produce prices are discovered daily. It's a competitive environment where buyers can negotiate for a price, where you get a willing buyer and a willing seller. It is an integrated part of sales processes for producers in the country. It serves as a sales platform for all sizes, volumes, quality, grade of any produce, fresh produce there is. It provides provision for equal trade opportunities for large and small-scale farmers, allows fair trade without discrimination based on size, color, or region. It ensures product is compliant to minimum quality standards that is safe for human consumption. The products sold at the Joburg market are of high quality and standards. In terms of the role players, fundamentally on the market, you get a farmer, you get a buyer, you get a market agent, and then market management. The role of the market management, as indicated in the mandate, to provide a transparent and conducive trading platform with the required facilities and services. The market agent's role, fundamentally, develop and maintain a relationship with farmers, marketing fresh produce or farmers' products. The role of the farmer is to provide the product that will be sold on the national fresh produce market. And the role of the buyer is to purchase the products and distribute it not only in South Africa, but the SADC region as well. And all these transactions are conducted on our sales processing system from inbound to outbound. The services that we provide, and it's much more than I will share with everybody. Joburg Market provides the services and facilities to over between 11 and 14,000 buyers a day. There's over 8,000 farmers that make use of the market to market their produce at Joburg Market. Some of our services include to provide a central trading system for the trade of fresh produce. We provide financial services through cashiering, collecting cash, EFTs, etc. Ensure effective consignment control measures, so all the product that's coming into the market is recorded, is captured on the system, and we can account for it. It also brings provision for traceability. We know who the farmer is, we know who the salesman is, we even know who the buyer is that bought the produce. Market hygiene is very important, and we need to ensure that the market is clean. We provide security services for products, people, and property. Repair and maintenance services, which is a big issue really, but it's something that we do on a daily basis, and I think the CFO will share that the cost associated with that is immense. Then also we have what we call a quality assurance department that does product inspection on the market sales floor. We also have a laboratory on site, and we do testing on products. As part of our value proposition that we bring to the industry, number one is the element of price discovery. There's a variety of produce volumes available all year. We provide a fair and high competition. It's a one-stop shop for fresh produce, easy access for buyers and farmers, financial security. We pay the market agents on a daily basis. Once transactions are concluded and trading is done, the proceeds of sales are paid over to market agents on a daily basis. We provide a positive cash flow for farmers, so you don't have that 30-day or 90-day waiting period. If your product is sold today, most probably you'll get your money tomorrow. All sizes and grade are acceptable at the market and available. I indicated that we've got a quality assurance department that performs these functions. We're basically a 24/7 operation. I mentioned the centralized trading system. And another competitive or value add is that we have easy access to major highways. So both for the product that comes into the market and the product that leaves the market, the highways are available. I also made mention of our SANA's accredited laboratory on site. I see I'm already on my last slide, and there's something, I think it was Steve Jobs that said, great things in business are never done by one person. They are done by a team of people. And if you look at the value chain, it's a team of people that at the end of the day brings product to the consumer and for the citizens of the Republic of South Africa to have fresh fruit and vegetables on their table. I thank the Chair.
All right, maybe Chair, on my side, it's just a few things that I just want to clarify. And because I suppose you'll be meeting with the other markets, and it's important to note where Joburg market is a bit different from a trading system point of view. I thought Charles was going to touch on that. So if you look at Joburg market, we use our in-house trading system platform. So when it comes to data, the entire data, be it agents data, buyers data, and so on and so forth, that is kept in-house because that's a system that we own as Joburg market. Then two, I think Charles spoke about price discovery to say the purpose of the market is for the buyers and the sellers to meet and discover the price, what we'll normally call a market price. But I just want to emphasize is that from a Joburg market's point of view, what we provide facilities and we provide system so that the trade can be facilitated in an efficient manner. And through provision of those resources, we then earn a commission. So I want to emphasize that we do not partake in any price discovery or determination of price. We just provide facilities for people to trade, and if trade is undertaken, we then earn a certain percentage for that trade. Then three, probably maybe one of the key things to note is we're an entity that is wholly owned by the City of Johannesburg. But when it comes to the trading resources, so the money that we collect on a daily basis, those resources are ring-fenced. And that is the reason why we are able to pay the agents and farmers within 24 hours after trade. So I just want to emphasize that. So there was at some point a question about some of our resources being taken to the shareholder. But when it comes to the trade resources, those are particularly ring-fenced to ensure that within the next 24 hours, we do have the necessary resources to then pay the farmers and agents. So I thought maybe let me clarify those few things. But I think in terms of our submission, this is where we're going to end. Thank you.
Thank you very much, Mr. Baloy and Mr. Park. So you've covered quite a lot, actually, and maybe we can just delve into a bit of the detail. So you did indicate your value proposition that the Joburg market presents, but maybe focus on the value proposition for the informal trading sector and for small-scale growers, on obviously both the growing and the buying side for us, please.
Thank you, Chair. It may not be as easy. But I'll start with the farmers. And I think if you look at, and I think I mentioned it in terms of the value chain, that 90% of the produce, more or less, comes from commercial farmers, and then 10% comes from small-scale farmers. But then if you look, and I don't have the exact figures around how many farmers produce the 90% and how many farmers produce the 10%, I think the figures are staggering. So from Joburg market side, and I'll start with what we do, obviously the market is open to everybody. If a farmer has one box of Dania, he's welcome to send it to the market. We'll sell it with the greatest of pleasure. So what we do, and I'll start with our quality assurance department, where we conduct visits to farmers and then assist them with, as far as we know, and I think it's a role more for the Department of Agriculture, in terms of GAP, your good agricultural practices. Then we also assist them in understanding market operations, because it is not normal and it's not a conventional business. So there are some dynamics that is unusual, and I think it's very important for the farmers to understand. So we help them to understand, and then also we developed a booklet. That booklet then articulates exactly how to use a market and what are necessary to utilize the market. Another initiative that we have, I think last year, October, this very day, we had a Farmers' Day at the Joburg market, where we invite small-scale farmers, and then we also then share with them, best practices, how the market works, and to assist them in becoming or growing their business. Another initiative also is that we have farmers coming to the market, and I think this is very important, where they are able to see other farmers' products, commercial agents' products, and that they can have an understanding what is the competition and how their products must comply for them to be competitive, obviously, in the marketplace. And we found that to be very much of an eye-opener, because you can be at the farm level, and then you might be of the view that what you are producing, how you are packing, is right. But once you get to the market, you're a bit off. So I think that is very important, and we assist farmers with that. Also, we took an initiative for the pack house, a pack house that we're going to build on site. Oh, we are busy building, should be commissioned the next few weeks, where we'll provide that service to small-scale farmers to assist them fundamentally with compliance issues, grading issues. So the model, we've not actually finalized that as yet, where the producer would be able, the small-scale farmer will be able to bring the products in bulk to the market. We'll do the packing, we'll do the sorting, we'll do the grading, and then when the product is sold on the marketplace, it is fully compliant, and then it competes very well. I think if there's anything you want to add.
Maybe if I can just come in there. So, I mean, these are wonderful initiatives, and we're really happy to hear that. Maybe just take us through the, how it's progressed. I mean, we're sitting at a 90-10, as you indicated. But maybe in the past 5 years, when did you start these initiatives? Is this something that you've done recently, or is it?
I think the Joburg market has always been involved in one way or another to assist small-scale farmers. I think there was a period we actually bought trucks to take the truck to their production sites and to bring it to the market. So we had many initiatives.
Are you still doing that? Because the transport is an issue that.
A truck can only last so long.
Yeah.
So it's not in a state, but we found that there is value in that. And I think transportation, I think you mentioned, is part of the barriers to entry
Yeah.
for some of our small-scale farmers. So we try to cover that. 2 trucks, over 200,000, I think. Small-scale farmers, it is not that easy. But I think some form of partnership we need to develop with either logistic companies, Department of Agriculture, maybe look at your logistic companies in terms of reverse logistics, where a truck will be coming down, coming back to Johannesburg. It doesn't have to come back empty. Some form of arrangements we will have to try and develop and see how we can assist in that. I've conducted a few farm visits to small-scale farmers, obviously, for training and development and making them understand. And I can tell you the quality of the produce that I saw was absolutely amazing. I think the product that is produced complies. There are just small issues relating to packaging, transportation, etc. Another issue that we find is that, for a lack of a better term, access to finance. You know, to put a seed in the ground, you need money. First to buy the seed, then the irrigation, and then your security of the farm, the pack house. So I think finance is perhaps one of the issues that I think, again, we can look at and say, how do we assist, and how do we perhaps develop programs where you take small-scale farmers through a graduation program, if I may put it that way, that the growth eventually gets there. You also asked about buyers. Yeah, buyers, first of all, the market is there, so we keep the gates open, so they can have access to the market. So the market is free for everybody. What we have, however, done, we have what we call the Jamo market, where we have informal traders on site.
Sorry, can you say that again?
Okay.
I just missed the name.
Yeah. All right, probably to add on Charles. So I think he spoke about the small farmers,
Yeah.
but I think one of the initiatives, and I'm going to come back to this transformation element, and the reason why I want to come back to it, it's because it's one of the key objectives that has been elevated by the current board, to say when it comes to transformation, we need to be intentional in what we do. But let me speak about informal traders. So one of the things we do, one of the programs we have under the transformation program, it's an informal traders. We have a market for informal traders. And what we've done recently, and I suppose in the space that we operate in, some of our stakeholders were not in support of it. So we invested to the tune of 140 million to build A-class type of facility for informal traders and to increase the number, including the aspect of building cold rooms, which we are currently finalizing as part of our phase 2. So what we've done there is we've increased our informal traders from, I think it was 71. Currently, we close to about 190, if not 198, right? And you'd be amazed the role that they play and the impact that it has from an economy point of view. You know, on average, stats says an informal trader on a daily basis makes about 6,000 rand profit. So can you then imagine weekly, monthly, and the number of families that some of these guys or some of the informal traders support? It's a very key initiative because from an economic point of view, it contributes quite a lot. So we've done that. We've launched the facility in, I think in May. The informal traders started trading formally in that facility about 2 weeks, if not 3 weeks ago. It's one of the key initiatives. But I want to go back to the transformation element. And the reason why the board has elevated this objective. One is to address the 90-10 issue, right? The fact that big commercial farmers, which are 90%, they still dominate the market. And of course, they have long-lasting relationships with agents and resources as well, like Charles has indicated, and which is why we then came with the initiative to have what we call a pack house. So we've built a pack house, like Charles has indicated. It should be operational very soon. This is our first pack house because we want to then come up with what we call the POC, proof of concept. Once we've then proved that the concept can work, there is a plan to then build slightly a bigger pack house, right? So that then we're able to then attract these small-scale farmers who can bring their product uncleaned, but there is a facility that will then assist, process it, package it well, including sizes, so on and so forth. So that's one of our key objectives. But I think at heart as well is we also want to bring black agents into the floor. And Charles is going to touch on that. But it's not an easy element because you can bring a black agent into the floor, but if they don't have a produce, if they don't have relationship with farmers, they will sit on the floor, but they will not trade. So there are other dynamics that are affecting the value chain, but unfortunately, as Joburg Market, we are at the end of the value chain. But we appreciate that, and we say we can't sit and say we're at the end of the value chain, therefore we won't do anything. That's why we are now then coming with some of these transformation programs. Like Charles has indicated, we've tried with the trucks. Typically, it didn't work because you can bring the produce, you didn't have a pack house. So ideally, it means you needed to go to a farmer who has already packaged their product. You then drop it on the floor. So that initiative didn't work as much. So we are now trying the other initiatives. But the reality is that if we want to change the picture of the value chain and address some of the injustices of the past, it has to start from Department of Agriculture as an example. If you say Joburg Market provide resources to the farmer, what resources? Because in an ideal scenario, what we generate is just to self-sustain us. So little, that it can change. It can change from the beginning of the value chain. So those are the dynamics.
Mr. Beloy, all these initiatives that you've discussed now, have you had support from the Department of Agriculture in relation to these projects, or is it all self-funded from the Joburg Market itself?
The reality, all the programs we're currently running, they're we are funding them as Joburg Market. So we're funding them from the resources that we make, from trading. However, there is a relationship with the Department of Agriculture, but I don't think the relationship is well established to an extent that they'll then distribute certain resources to Joburg Market. But like I said, we're not going to sit and not do anything. Where we see there's a gap and we're able to then plug in resources and there will be benefits, be it a social benefit, be it an economical benefit or a financial benefit, we'll definitely do that as Joburg Market. So if you look at our allocation of resources, there are resources that are specifically geared towards transformation. And like I had indicated, this is one of the key objectives that has been elevated by the current board, so that at least in a few years, we should then see the difference. Probably when it comes to the pack house, probably the only market, I believe, that is moving towards that direction. But I think Charles can add.
Maybe, sorry, Mr. Beloy, maybe if we can just stay on this topic of transformation at the agents level. You indicated that it's very, very difficult to enter because of the sort of pre-established relationships that the agents have with the commercial farmers. Is there any requirements for the agencies themselves to employ HDI agents So salespeople working for those agencies, because I suppose we need to distinguish between the agencies themselves as well as the agents that are employed by the agencies. So we had the RSA group here and as well as DAPA last week, and they indicated that a significant number of their salespeople or salesmen are HDIs, and they're doing well, and they will have the relationships established with those farmers that are supplying them, even if they're still operating under the umbrella of the white agency. I mean, why are we not seeing those agents, who then are able to sort of gain experience under the umbrella of the agency itself, develop those relationships, and then maybe start their own agency? I mean, that would be a natural progression, at least to my mind. Are they assisted? Is there any assistance for that? Is there programs to assist them? What is preventing that next step from happening?
All right, so maybe where we can start, let's allow Charles to just give you the stats around that, and you will then have an input, because I think it would be quite interesting to then understand the stats regarding that. Thanks.
It's an interesting question, and I think it's also related to the historical history of this country. But on the Joburg market, and we did a survey some time ago, there is a total of 248 salesmen. Of the 14 market agents, there are 248 salesmen. Of that, 32% are historically disadvantaged. And of that, 8% are women. So we can already see there's a bit of a challenge. In relation to become a market agent, or what we call a BEE market agent, is something that we take very serious, and our track record will then show that we've introduced a lot of BEE market agents. In the past, there was a stage where ownership was 50-50, but due to challenges relating to getting stock, management, building relationships, it has been extremely difficult. So there are lessons learned around what we need to do to assist your black agents to perform and become very much profitable in the mainstream economy. So what we've done also with some BEE market agents, we've developed a policy. This policy will then assist the BEE market agents with support in operations, and we'll provide floor space in prime areas in the trading hall, preferably in the middle or next to the cashier points, if you understand the layout of the market. We're also looking at office space where there'll be a holiday period to utilize the office space. We're looking to invest in equipment for them so that they can have the necessary equipment to conduct the business in a way that that support would then enable them to focus fundamentally on trading, building relationships with farmers, getting products on the stock, etc. In that also, we are also looking to support them. For instance, if there is a Farmers' Day, we'll take them with and let them meet the farmers and engage with the farmers and explain to the farmers who they are, what they can do, etc. So these are things that we want to do for black market agents. In the past, there was other models that we tried where we would get an agency, we would, assist them in one way or another, but we find that doesn't work. If you really want an agency to perform and become successful, you need to have the stock on the floor. It is unfortunately as simple as that. And I suppose when you look at a backward integration process where we start not only linking up these particular agencies and salesmen to commercial farmers, but also small-scale farmers, I think if we get that right, they should be able to have stock on their floor.
So you probably jumped to one of my later themes, but the floor space allocation.
Yeah.
So what is the current allocation formula that is being applied? And does it differ from the other markets around the country?
I can't speak for other markets, but it's a part of our submission. In fact, the whole guidance document is part of our submission. It's fundamentally the size of the market. Then you look at the historical performance of an agency in terms of their turnover and then the mass sold, and then you divide it by 2, and then you take the space in terms of blocks per hall, and then if the market share of a particular agent is 15%, after the calculation has been done in terms of turnover and mass, then you get 15% allocated of the space. If your market share is 20, you get 20. However, for our BE market agents, we have allocated a space irrespective of the turnover. So you get your space, operational space, that allows you to pack your produce, allows you to sell, even if your performance doesn't justify that particular space, it's still allocated to you. And then we try and assist as far as we can.
How long does that allocation last for? I mean, is there a time period attached to that grace period before the formula starts being applied to you? So if you're a new entrant, you get that space. How long will you be afforded that space before the formula is applied?
I think this is a very important question. Where we are right now, it's indefinite. So if you get that space, you're going to get that time period to build your business. By the way, if you look at a PE market agent that started 2 years ago, he's competing with an agent that started 400 years ago. It's not going to be an easy journey. So I think I use the 400 loosely, Chair. So it's very, it's not easy, but at the end of the day, we give them their time and opportunity and assist where we can.
So if I'm understanding you, floor space allocation isn't a problem or isn't a hindrance to new entrants, especially HDI new entrants.
The process is not a problem. I know there are different views around the formula and what can change and what needs to change, but the formula is very objective. And I think some of the elements that people want to introduce in that formula is very subjective. But it's another discussion. At the end of the day, it's not the floor space allocation that's a problem. We don't have sufficient space. Right now, I think the market, in terms of volumes that goes through, is perhaps operating at 130, 135% of its capacity.
Okay. I think maybe that leads me into the next theme. We've obviously received widespread concerns, almost, from everybody that has submitted information to us, around the general state of deterioration and lack of maintenance and investment into the national fresh produce markets. What are your views on that? Is this something that is you're aware of, obviously, but is there plans in place to try and, maybe talk us through the sort of root causes of this?
Yeah, maybe through you, Chair. The reality is that the facility, and I'll talk for Joburg Market specifically, the reality is that the facility that we operate in, it's just probably over 50 years old. That's one. Yeah, the current facility, right? Two, of course, over time, the facility has deteriorated. And we do agree to that, and we do appreciate the concerns that are out there. However, I think what we've demonstrated in the past few years is the fact that we take the concerns seriously, and we've then allocated resources to address those concerns. In the main, we've allocated resources for repairs and maintenance. If you've been at the market 2 years ago and you go to the market today, there is a huge difference or improvement. So, of course, repairs and maintenance is to then close the infrastructure gap in a short term. But the reality, which also talks to the aspect of space, the reality is that we need to go into a program of recapitalization or infrastructure investment. And one of the programs we're currently dealing with is we want to convert the existing market into what we term a smart market. And the process we are in now indicates that over a period of 5 years, we're going to require about 2.8 billion investment to fully overhaul or refurbish the market to an extent that we're going to build extra trading halls, given the fact that we're already trading or operating above our 100% capacity in terms of holding stock. So there are those plans in place. In actual fact, when it comes to the 2.8 billion, we are currently in a process where we're engaging a transactional advisor so that they can do all the calculations to say, is this a bankable project? So that we are then able to approach different finance providers, be it a triple P, be it a bank, be it private equity. So those are the options that we are looking into. Of course, that's going to take us about 2 years to kick off. But what we've been doing, given the resources that we have, we've also been closing some gaps from a CapEx point of view. If you look at the allocation in the past 3 years for CapEx, including the current financial year, you're looking in excess of about 500 million. And there are key things that we've done around it. I spoke about the informal trade infrastructure that we've built. If you look at the new infrastructure compared to the old, there's a huge gap. Issues of power. Power is one of our key challenges as Joburg market. We've built a gen farm. We've invested close to about 28 million building the gen farm, which has been commissioned. It's about to be handed over to the market, which will then allow us to power the entire market, including our cold room facilities. Currently, we, as part of our normal CapEx, we are refurbishing our cold room facilities because we use an old technology called ammonia. It's quite a risky type of technology to have, you know. So we are also doing that to close the gap while we are waiting to then go for that big project. So from our perspective, I think we are addressing the concerns of our stakeholders, including maintenance in actual fact. One of the things we've done now, and thanks Charles for reminding me, what we're trying to move into preventative maintenance as opposed to reactive maintenance. And in the past, that's where we got it wrong, right? Now, what we've done, we've just recently appointed 5 disciplines: electrical, mechanical, plumbing, GB, so on and so forth, so that you then have these service providers ready available on site to then deal with some of the issues. And I think our stakeholders, which is big stakeholders, IMASA or the agents, probably they're going to come to this commission. They would probably attest that there has been improvements. But the reality is that the backlog, it's so huge that it's going to take us a little bit more time to then address some of those issues. But if you look at business continuity, we're able to operate on a daily basis without any issues. And like I've indicated, the key challenge is power, and we are addressing that. So through the Gen Farm, we're currently installing solar panels to power cold room facility. We're also, because that area where we operate as Joburg Market, it's prone to cable theft. We're also building a new line with the city power to ensure that if one line is down, we're still able to then operate on the other line. So if you look at our energy mix, it's the main source of energy from Eskom. It's the Gen Farm, which is generators. It's not the most efficient, but because we're a company that cares for our stakeholders and our farmers, we had to invest in that. Solar, it's one of our alternative energy. It also forms part of our overall energy strategy. So in summary, I think we are addressing the concerns. And if you look into the current financial year, it's probably the first time ever where we were able to allocate over 60 million rand on repairs and maintenance. Previously, it would be 10, 20 million. But remember, the facility is so huge. I mean, if you look at the value, the historical value of the facility, you're looking close to about 1 billion. So if you're going to allocate 10 million or 20 million, that's nothing. In terms of the standard norm from National Treasury, at least you need to allocate about 8% of your asset base. So if you're looking at 10 million, at least about 70, 80 million, you know, we're not far off. Current year, we're sitting at 60. Next financial year, we're sitting about 65 and or 72. Thanks, Charles. So we are, I think, addressing the concern. But I think my departing point on this topic is that one of the key things that we are currently doing is that we're just not allocating resources, but is to ensure that for the resources that we are allocating, we get value for money. Because for me, I think that's the critical aspect, so that there can be a difference in what we do as Joburg Market. Yeah.
So maybe as a general proposition, and this has been put to us, is that there's generally an inability from the municipalities to reinvest that 5% levy that is raised. But it seems to me that maybe you're not plagued with the same problems that have been raised in relation to some of the other NFPMs. Is that right?
Yeah. So in our context, as much as our resources go back to the municipality, but I think we have the ability to then get back the resources and utilize them. So I don't think the resource allocation, it's the biggest issue. However, when you look at the 2.8 billion investment, it is an issue, you know. Of course, currently, that's not a priority for the municipality to then invest the 2.8 billion, given other constraints and other challenges that the city of Johannesburg is facing. However, it's important to therefore note that we have a green light to go to the market and look for the 2.8 billion, which of course ultimately the city will still guarantee that. You know.
So you mentioned that the trading resources are ring fenced.
Sure.
So that's I think that is the money that you're collecting from the agents. Is that correct?
Correct.
So let's call it 7.5%.
Correct.
The 5% that is collected from the market itself, that's not ring fenced.
Of course, that is through the group treasury policy, because we invest as a group. That money then is taken back to the city to then invest, be it in a money market or whatever the case may be. However, I need to indicate that the resources that we send to the city, we still have access to them as Joburg Market. What we need to do is to just request for the resources to be reallocated to us.
So what percentage or what proportion of that 5% is then reallocated back to you?
I mean, essentially, everything that is required for us to run our working capital, for us to service the budget that is approved for a particular financial year, those resources are sent back to Joburg Market.
Okay. And you mentioned that the budget, like the maintenance budget, for instance, used to be around 10 million, or
Sure.
if I understood you right. Now it's jumped up to 80 million?
60.
Sorry, 60 million. What necessitated that change? Was it the response from the market itself saying that we need these resources and they were then allocated? So it was just poor budgeting before. I'm just trying to understand what's changed.
Sure. I mean, I suppose, you know, without speaking ill of my predecessors, you know, so I've been at the market for about 16 months now. From our perspective, I think we looked at what are the needs of the entity through demand management process, and we then costed that, and we went to the city and said, this is what we're looking for. Furthermore, to also indicate to the city that what we were allocated on repairs and maintenance before, it was way below the minimum standard set out by National Treasury, which it should be 8% of your asset base. So you can probably maybe say maybe the budgeting wasn't done correctly, but from our perspective, we went to the city and said we are able to generate sufficient revenue to cover our expenses. Therefore, there is an opportunity to then bump up our repairs and maintenance so that it can be at the adequate level, as well as to ensure that we address the concerns of our stakeholders. Some of our stakeholders are very proactive in raising their concerns. So I suppose maybe through that process, we're therefore then able to get the required resources allocated.
So the 2.8 billion infrastructure investment plan that you have, putting that aside, how long do you think it would take for you to get to a point on sort of the current trajectory, to get the market to a point where it is at a level that you want it to be, what it needs to be?
Yeah, I mean, probably in the next 3 years. One of our key problems or key challenges is our complementary services. If you're looking at into our trading space, I think we're doing fairly well there. You know, it's just that we need to do routine R&M, right? Where we have biggest problem, it's our complementary services, because like I had indicated, we're dealing with an old technology. We're also dealing with an infrastructure that has been there for just over 50 years. You know, so in terms of our calculations, at least we need about 200 million to fully refurbish the complementary services. And if you look at the resources that we generate on an annual basis, pretty much in a period of about 3 years, we should be able to do that. If you look at our midterm budget on the current trajectory, for complementary services, we're looking at an allocation of about 80 million, you know. Of course, it's for us to then go back and say, guys, can we allocate an extra 120 million to then fully refurbish our complementary services? But you look at our road infrastructure, it's not that bad. Recently, we've closed all the potholes. We've just refurbished our consignment entrance point. Yeah, I mean, I've mentioned some of the initiatives we've done. The Gen Farm, we're building an extra line. We're doing solar panels, which energy is one of our key challenges. So from my perspective, with the current trajectory, 3 years, we should be good. But of course, it limits us as Joburg Market from an organic growth point of view. Like Charles has indicated, space is an issue. If we continuously say farmers must bring product to the Joburg Market, we should therefore then be doing something with the space. That's why we are chasing this smart market project with an estimated cost of about 2.8 billion.
So the debate yesterday with the department was around the ownership and management structures currently, that the ownership falls with the municipalities. And that was, if I understood their submissions correctly, that was really, the blame was sort of placed at municipal level. But it doesn't seem like you guys are plagued with those problems. I mean, would you support a sort of restructuring from an ownership management perspective, or is the current model in relation to the Joburg market working?
Yeah, I think from my perspective, with the 16 months that I've been there, for me, I think the model is working. I think the concern that was there before was the fact that the resources that go to the city do not come back to the Joburg Market. But since I've been there, we've engaged with the group head of Treasury to indicate that we are running a commercial business here, right? And in terms of allocation of resources, we need to be prioritized because we generate money on a daily basis. Can you imagine I tell 14,000 customers the next day that I could not buy tissues for the toilet because the city could not allocate resources for me, because we generate money on a daily basis. So from my perspective, there is that understanding to an extent that Joburg Market, we are also allowed to manage some of the resources on our own as part of our working capital, so that we ensure that we service some of our service providers, and we're able to do some of the day-to-day operations. So from my perspective, the model is working. I don't see anything wrong with it. I think the buy-in we just need from the city is for us to go and get the 2.8 billion. That's the only buy-in we need. We understand that the city might not have 2.8 billion to give to the Joburg Market now, but out there will be someone who's willing to invest and get the return over a certain period of time. So from our perspective, the model is working. We're a legal entity on our own. We have our own executives. We have our own board. We make our own decisions. The only difference is that when it comes to budget, our budget has to be appropriated at council. You know, that in the main, that's the only difference. But the model is working for us. There is some level of flexibility, and I think the city understands that Joburg Market is a commercial business, and it should be supported as such, because we generate money on a daily basis.
Maybe just lastly on that point, the current space that you've got, you mentioned that it's small and it's at capacity. Is there, on the current location that you have, is there space or is there space to expand? Put it that way, or do you have to look at potentially moving the site from where it currently is?
I'll allow Charles to expand on that.
Thank you.
The market is 63 hectares in size. The trading facility is around about 75,000 square meters. So there is definitely there is space. The layout and traffic flow, product flow, we still have to sort that out. But definitely there is room for expansion.
Maybe just to add on what Charles has said. In actual fact, if you look at the smart market project or concept that we're going for now, what we've done is what we call the conceptual design, right? So we've looked into the existing premises, and we've looked at the space that we have, we've looked at the traffic and so on and so forth, and the engineers then they came up with what we call a concept design in terms of the look and feel of how this market is going to look in the future. So all those considerations have been taken into account to get to where we are now at this stage.
And part of that is there perhaps a model, an online platform model that you're looking into, or is?
It's an interesting question. It's also a difficult question. But there is no doubt that the world is changing, and how business are conducted is evolving all the time. And definitely, Joburg Market will have to look in that space going forward, and the value proposition it will not only bring to Joburg Market, but to the farmer and to the consumer at the end of the day. So it's the world, and you can't be left behind.
Thank you. Yeah, I think that just my last thing I wanted to discuss is going back to the market agents, and we received some concerns around practices being implemented by the market agents, specifically relating to credit sales, reserve buying, late sales, and the like. Can you maybe just talk to those and whether they are issues that you've encountered, and more specifically whether those practices have an impact on the price discovery process at the market?
I find that as I'm sitting here, your questions are getting more and more difficult. Credit sales. Joburg Market is fundamentally a cash business. everything that's purchased on the floor is bought with hard cash. Obviously, you use systems through which the cash flows. So, on the market, there is no credit. Agencies, however, do buy on behalf of a buyer, if so requested. So there's no credit. The issue around late sale, I think this name started in 1652. It's not a correct name. It is what we have is that fundamentally is this particular documentation that we use is when there's a total blackout on the market. There's no power, the SPS, the sales processing system is not working. You must be able to still trade because you're dealing with perishable products. This particular document is then used to conduct trade, and then it gets then captured on the system the next day or whenever the system is on. It's not a very nice thing to go through. Any market agent will tell you. But it is there. But when it comes to credit, there's no credit.
Okay. And if there was credit to be extended, I mean, would that have an impact on the price discovery process?
Your questions. I think your price is price. When you go to a petrol station, I'm just making an example, and petrol is a certain price. Whether you pay cash or whether you use a credit card, that's the price. So I don't foresee that it will have an impact on price discovery. It's just the methodology of payment is different, but your price is the same.
Okay. So it doesn't create any distortions?
I don't see it.
All right. Maybe just, and lastly now, that in-house trading system that you've developed, is it different to the systems that are being used nationally, and does it feed into that national system as well? So somebody who's trading in Durban, for instance, can have the same access to that system that you've got. Does it plug into a national system so for price discovery purposes?
I think the system doesn't discover the price. It's captured on the system.
Yes, well, that's what I mean. Yeah. So somebody could access.
Yes.
Yeah.
So fundamentally, at National Fresh Juice Markets, there is two systems. One is a fresh mark system, and I don't know if I'm allowed to use their name, but there's a fresh mark system that I would say 15, whatever number of National Fresh Juice Market use to conduct trade and transactions on. Then there's a Joburg market system, which we call the sales processing system. The fundamentals of the systems are the same because the business is the same. So you need to comply with the regional bylaws, and you need to comply with the APEC Act. So the system is almost like an automation of those activities or compliance that needs to be undertaken. So the systems are pretty much the same in terms of its endeavor.
And do participants on both sides of the market have access to that? So would buyers and the sellers have access to real-time information?
I can't speak for other markets, but at Joburg market,
yeah.
The people that have access are registered users. So your registered users are your market agents and your sales personnel.
Okay. All right. Chair, I think that's the, oh wait, sorry. So there's one more that came here. With regards to is there more? There's more. So with regards to produce that arrives at the market, which is unassigned. So produce maybe from a small scale farmer, which he got some space on a truck, landed there. They didn't make prior arrangements with agents. How does that produce get allocated? Is there a system that you would allocate unassigned produce to specific market agents, and how does that happen?
I think we'd only market it actually as a consignment control division at the gate. So if a product arrives on the market, and the particular say farmer has not made arrangements or has not made contact or established a relationship with resident agencies, the consignment division will then, and I'll take it through the process, will then quarantine the truck, take the particular person to the office, explain how the market operates, and then take that particular person to a relevant sales floor, depending on the product. If it's fruit, they'll go to the fruit hall. If it's potato, onions, we'll go to the potato hall, or if it's vegetable, to the vegetable, and then introduce them to salesmen there that they are able to use. Preference, obviously, under such circumstances are given to our BEE market agents, but it's not something that happens a lot. Also, I think the use of technology has improved this a lot. You are able to go on the website, you are able to make a phone call, you are able to get this information. It's not as it used to be. It's marginal.
Thank you. So taking you back to that informal trading space that you've created, can you maybe just explain a bit more about how that facility operates? So where do the informal traders obtain the produce, and can they source directly from the farmers?
There's no sense in buying a bed and let your neighbor sleep in it. So I think when they are allocated the space, they are compelled to purchase from the commission floor. They must buy from the floor.
Sorry, I'm just reading the questions that are coming through. Okay, so going back to the instabilities at municipal council level, we've heard that there's been a sort of significant changing of the guard. I think we heard it was 19 or 20 different council members or managers at municipal level that have come and gone in the past few years. I mean, in your experience, how does that impact on the operations of the market? And is there some sort of succession, or I'm not sure if I'm reading this right, but yeah, is there something? What is the knock-on effect of that happening on operations of your market?
Yeah. So the reality is that the market will always be the market. And the market will operate and do what it's supposed to do on a day-to-day basis. And one of the things that we're fortunate about as Joburg Market is that only the CEO and the CFO are on contract. The rest of the team underneath CEO, CFO, they are all permanent. So from a stability point of view and from an operational perspective, I don't think much changes. However, from a strategic direction point of view, of course that will be impacted, because a change in the political space could potentially influence a change in the board, and which the board is generally there to provide the strategic direction of the entity in the next 3 to 5 years. For me, I think that's where the concern is. But in the short to medium term, I don't think any political change really changes how the market operates. More especially if the team underneath CEO, CFO remains the same. But of course, strategic direction, it will always change, because every board that comes into play, they come with their own different vision as to where they want the market to be in future.
Thank you very much. Chair, that's all from us.
Thank you, Mr. Bowles. Mr. Mara, do you have any questions?
Thank you, Chair.
Thank you.
Gentlemen, so I want to start with something we've heard about from some of the agents that are also operating their privately owned facilities. And I'd like to get your views on what is the role or the impact, if any, on the Joburg market specifically in relation to those privately owned facilities. I mean, in the sense of, are they a threat? Do you view them as competitors? Do they play any role in your decision making? Do you take consideration of those privately owned markets, or is Joburg completely insulated from what's happening in those markets?
From a food security perspective, it's excellent. If you look at that food can be distributed in the country and there are people that are able to do that, it is good. From a business perspective, obviously, any normal person will say, hey, we're going to lose business. And does it make you review? Of course it does. Does it make you to say what strategic direction we need to take? Of course it does. Does it then compile you to then look at it differently? Of course it does. So yes, it is to a degree concerning, but then if you look at the bigger picture for the community of South Africa, that they'll have access to fresh fruit and vegetables, it's excellent.
All right. For the next question, I want to ask you to sort of take a step back. Maybe take a general view, a very sort of broad view on this question, and it has to do with the sort of recurring theme that we've come across, that the roles that NFPMs, and Joburg has a special place because it is the largest in the country, right? So Joburg, the spotlight is very firmly on the Joburg market. The recurring theme that we've come across is that NFPMs play, crucial roles for things like price discovery, for things like market access, for things like participation, not only for SMEs but HTPs, but all producers, including the large-scale producers. So in that context, and specifically in your experience, I mean, what are, and I think we use the word distortions, have you observed that negatively impact on the efficiency of the platform? So, I mean, and that can be, from a governance perspective, from a trading perspective, from a long-term sort of strategic perspective, what are sort of the distortions that you have observed that impact negatively on your efficiency?
Thank you. Sounds like 8 questions. But the market dynamics, and you got to look at it more macro. It is different, and things are always evolving. And these days they call a word, they say disruptors, and there are disruptors that changes the dynamics of the landscape of the agricultural sector, both in production and marketing side. So definitely it has its impact. And if I understand other part of your question in terms of from our side, I think from our side it's very, very, I won't say simple, but for the lack of a better term, we have failed actually to invest in the infrastructure, to have the market at industry standard requirements, to ensure that the services and facilities that we provide, the CFO made mention of the complementary services. For clarification, not clarification, expansion. The complementary services is both the banana ripening facility and the cold room facility that we need to invest in. So I would deduce it to those particular measures. And I think the CFO also indicated that we are looking at CAPEX to address some of these issues that has a backlog that needs to be addressed. There was a question in your questions around price discovery. Just help me with that question.
Yeah, so if you look at price discovery in particular and the roles that NFPMs play in terms of the way that others use the NFPMs to sort of benchmark the prices for fresh produce, are there any distortions that you have observed that impact on that sort of price discovery, that phenomenon where the NFPMs are used as a benchmark? Anything in your experience that distorts that role?
I think, and again, I'll speak from Joburg market perspective. And as I indicated, that when it comes to price discovery, it's fundamentally an agent, or shall I say, a willing seller and a willing buyer's functions during the negotiation. When they negotiate for the price, we then capture it. We then, obviously, after trade, publish these prices on a daily basis. So it is open to all our farmers. It is open to all our buyers. In fact, it is available worldwide. So people can have an understanding, or businesses can have an understanding, or know exactly what the prices were achieved at Joburg Market on that particular day. I think, I don't have my glasses. Come 1 o'clock, 2 o'clock, we'll publish the prices of today. What people do with it after that is unknown. But I'm sure that there are both positive activities that can come from it and perhaps negative.
All right. I want to return also to a question that was covered by the evidence leader, but just in a bit more detail to clarify. And it was around this perception that NFPMs generate a lot of cash for the local municipality, but then those funds don't get reinvested. And I think we have clarified some of that misperception. But what I want clarity on is perhaps in the terms of figures. So specifically, we're talking about, and for Joburg Market, and let's take a sort of a yearly view, what is generated relative to what is required or needed. And perhaps you can respond here in terms of operating expenditures, but also then, and I think we've spoken about the capital expenditures, but maybe in particular the figures, what is generated versus what is needed.
I'll start and you'll do the rest. Yeah. Thank you. And thank you for helping with the answer when you use the word perception. There is this idea or perception that, and I think in the beginning of the process, about ring fencing funds from markets back into that particular market. Now, in the Republic of South Africa, there are 16 markets, if you don't count the private markets. In the last financial year, turnover for these markets was around about 22.6 billion rand, of which Joburg Market generated 10.3, round figure. And Joburg Market then has a market share of around about 45–46%. Now, I suppose when you look at all these markets, I think there's 2 or 3 markets that are perhaps an anomaly, where such a discussion can be held and perhaps get to some point. But if you look at the markets that are like 3% of that particular basket, and I think it's one market that did 1.7 million rand. Now, if you take 1.7 million rand and you give that market 5%, if I went to school, it's 89,000 rand. Now, what are you going to do with 89,000 rand? So it's very important that you look at this thing from all angles and don't make a statement and say, this must happen. I think you've got to look at it on a case-by-case basis and then say what is possible and what is not possible. The danger there would then be when there's a law passed, and I speak under correction, they say, this must happen. And then what's going to happen there? So I think it is maybe easy to make a blanket statement, but if you go into the detail, you'll find that it is not that easy. Thank you.
All right. Trying to switch off. Yeah, maybe just to respond to your question. All right. There is a perception that the money that is generated by Joburg Market is not utilized by Joburg Market, right? And I think, I mean, it's fine to have that perception. But I think what I want to start with is to indicate that Joburg Market is self-funded. I think that's the most key part, right? So there is no subsidy, there is no grant that comes to Joburg Market either from the parent company, which is the municipality, or any government sphere. So if we now go specifically to the numbers, if you look at the previous financial year, and I'm just going to confine my response to the commission business, because we also have other businesses that we run as Joburg Market to augment our revenue. One, it's our rental facility, it's our complementary services, so on and so forth. This is to then augment our commission business. But our commission business remains the biggest, which is about between 78 and 80% of what we generate as Joburg Market. So if you look at the turnover that we had in the year that ended 30 June 2023, we had a turnover of about 10.3 billion. If you round off the numbers, we made revenue of about 500 million in terms of commission. You then go back, you look into our costs. Our costs, our operational costs, including employee costs, they range last year relatively looking at about 450 million, right? So in principle, if you just confine it to the commission business as the resources that fund all the operational costs, you've made about 50 million as revenue, right? So for me, that's not much, given the perception that is there. And again, that 450 million, you funded it using the 500 million. Remember, we generate our revenue. It's a cash business, right? And when you look at our operational cost, you look at our creditors, we pay within 30 days. So technically, the 450 million was paid from the 500 million. So we were left with 50 million, you know. Of course, like I indicated, that money will go to the city, but it will then be allocated. So you closed with 50 million profit. You therefore then look at your CapEx that is allocated in the new financial year. It's 150 million, right? So you've tapped in on the 50 million that you closed with as the operational profit, and you tapped in another 100 from your cumulative profits that you've made in the past, right? So that perception, it's kind of skewed, right? However, I think where I agree is that probably in the past, the city should have allocated more resources to Joburg Market. But we can debate that. Was it that driven by the fact that not a correct budget was tabled, or was that driven by the fact that there were limited resources from the city? So from my perspective, the money that we generate as Joburg Market, it gets reinvested into the business, either through funding operational cost or funding CapEx. Of course, the reason why the conversation is a bit elevated now, it's because of the infrastructure challenges, right? Had we allocated the resources in a consistent manner and adequately, we're not going to have this conversation, because you're going to be sitting with an infrastructure that is operational, so the conversation was not going to be there. So it's just easy for people to say, the reason why the infrastructure is like this, it's because the city did not invest. And again, if you look at the cost of the infrastructure, I spoke about 800 million, and you look at the replacement cost of the same infrastructure, you're talking in excess of 2 billion. So the price change, it has compounded so much that it's not matched by the growth of your revenue. As much as we've done 10 billion or 500 million last year, but the increase in our revenue base, doesn't match the increase in the replacement cost of our infrastructure. So that's why the conversation is a bit elevated. But in summary, the resources that we generate are reallocated to Joburg Market. And I want to mention again that I was just confining the 50 million profit to the commission business. But ultimately what we made as profit, including the other element of businesses that we have, we made about 150 million last year.
Thank you, Mr. Baloyi. I think that is an important clarification. I think I'm almost done, Chair, and I think the next topic is in terms of wholesalers. Again, we've heard in this forum, but also in written submissions, about the role that wholesalers play. So maybe if you can enlighten the difference that the Joburg market takes, perhaps relative to Tshwane market. That was the example we had in the hearings. And then maybe, on that, your views on which of the systems works best.
Yet again, I cannot comment on Tshwane, but I'll comment on what happens at Joburg Market. Wholesalers, we do have resident wholesalers on site. They do pay rent for the use of the facility, and I'm talking about fresh produce wholesalers. There are other wholesalers that sell other commodities. And those that sell fresh produce are compelled to purchase fresh produce from the commission floor. They must. So they play also a very important role in terms of buying, and then they've got their own channel of distribution, obviously, which is their own business. From a issue I know it's always raised is that these wholesalers at Joburg Market do bring in produce direct. That is true. And there is a process to follow if you want to bring products in direct. And that is for one or another reason that the product is not available on the commission floor. You do an application, and then obviously it's either approved or denied. So we've got about 4 wholesalers that brings produce in direct. In the last financial year, the produce that was brought in direct equated to 2.5% of the entire turnover of 10.3 billion rand.
Maybe,
Thank you.
I'm not
Yep.
sure if I can add.
Sure.
I think, just to add on what Charles has indicated, I think one of the key things, it's because our main focus is the commission business. So anyone that we bring within the premises of Joburg Market, we emphasize that you need to buy on the floor, because we don't want to be misdirected as business. I think our core business is the commission business. Anything else, it's just an add-on. So that's why we, therefore, in terms of our bylaws, we restrict people in terms of bringing products. And I think one of the things that maybe Charles didn't touch on, the ones that bring the product direct or directly, we also then charge a similar commission that would have charged had the product been bought on the floor. So that as Joburg Market, we are not shortchanged. So from our perspective, we want to protect our core business, and that's why we'll never allow anyone to bring a product that is on the floor.
And I think in that perspective, I think you mentioned to protect the business. So if it doesn't happen through the floor, if it doesn't follow a similar system, I mean, what does that mean for the commission business? I mean, if you said it threatens the business, it doesn't protect the business. Just perhaps if you can clarify. I mean, does it mean less volumes, less revenues? What does it mean?
I mean, and Charles is going to come in. Of course, the less volumes you have, probably it also impacts on your price discovery, right? Two, if we're going to encourage people to bring their own product directly, then the core business of Joburg market, it's going to deteriorate over a certain period of time. So that's why we have bylaws, because I think at heart, including the element of food security, including the element that we have about 15,000 buyers working the market on a daily basis, including the key aspect that Joburg market plays in the fresh produce value chain and in the economy. It's in our interest to protect the core business. Charles, you can add?
Everything that enters the market is recorded. So whether it, as I indicated earlier, we have a consignment control that controls all product that comes in and captures it on the system, whether it goes to the commission floor or it goes directly to a wholesaler. It is captured, it's followed up, it is recorded on a sales processing system, and all these things are transparent.
All right. My final question touches on the bylaws, and this is from the perspective of a producer saying I've got a choice of different markets, particularly the big markets, Joburg, Tshwane, those two. They're fairly close together. I have a choice as a producer which one I'm going to access. We've heard views that because the bylaws are different, some allow, for example, credit buying, others have an absolute rule against things like credit buying, as an example. I think the point is that the bylaws differ. And as a producer, that sometimes impacts the choice, so it makes it more difficult as a producer to access because they're not uniform. So in your view, is there any scope to harmonize the bylaws across? And it can't necessarily be a Joburg-driven project, we understand that. But from the point of view of saying, can we harmonize the bylaws so that they're all more or less the same, except where there are sort of very specific regional perspectives, regional issues. Is there scope from the Joburg market's perspective to say we're willing to listen to sort of harmonizing bylaws?
Without a doubt. I think if you look at or what I said in my opening remarks is that the businesses are fundamentally the same. So your control measures, your compliance issues should relatively be standard, especially if it has an impact on the farmer's prerogative in terms of what he will or may or may not do. So it's definitely a discussion that we can enter into. And yet again, as I indicated earlier, we must be wary of the different dynamics, the different geographical area, the different populations in different areas, but definitely.
Thank you, gentlemen. Thank you, Chair.
Oh, thank you, Mr. Murray. Thank you very much for the submissions. May I just ask maybe a few questions? Just maybe, I think we can look at your submission as well. I think the first submission, how you have estimated, I think it's probably page 4 of your first submission. You can check, which is something. But it's that value chain picture, you know, how you have put the page of your. I don't know whether you also, let me just use our bundle, but I think the team can
1571
can help as well. Yeah, the very first submission. It's 1552. Right? Yeah, that's 1552. You got that. I just want you to clarify, because I think we got a submission that, you know, there could be I don't know, maybe clarify what you mean by BE farmers relative to overall commercial farmers, this 90-10 picture. What's the 90%? And in your understanding?
Thank you, Chair. That particular diagram, and the one that's an upside down triangular, that depicts 90% commercial farmers. What that really represents, Chair, is that this is the volumes that is received from white established farmers. And then the 10% is then the volumes that is received from small-scale black farmers.
All right, okay, no, so thank you very much for that. I just need to understand so that we can see the picture very well. Now, do you look at the conduct of market agents in any way? Do you look at the conduct of market agents? I just want to know.
Every day, we work in the same premises. The Joburg market is an oversight in the interest of the farmer and of the buyer at the end of the day. So we then do it through multiple measures. There is the sales processing system which they are compiled to utilize. As I indicated earlier, it's then the mechanism that is utilized to comply to the Act, to the market bylaw, and for trading. So we do do an oversight inspections. We also, there's a lot, but I'll just touch on the key issues. We do stock take every day. So in other words, if a farmer sent in 20 pallets, the salesman sold 9. When we do stock take, there must still be 11 on the floor. So we do do that oversight. We also provide customer services to the agencies and to the market users. We have cashiering services that collects the money. They're not allowed to take cash. So on a daily basis, yes. And we have obviously our meetings, and we engage on industry-related issues on a regular basis. So yeah, we do have an oversight of their conduct. And if there is any transgressions, we do institute disciplinary inquiries as well.
No, thank you very much. I just needed to ask on one particular, I think, conduct. I think there's this concern that the agents do prefer the produce from other farmers relative to others. So do you track that, whether there is unfair prioritization of batches in a way? And I think the last one will be, I think you tried to explain this, but it sales outside, are these late sales, the sales outside the trading time. So just those two things, if you can clarify.
You're asking me to go into the mind of a salesman. Chair, one, when it comes to the agent's rules, it then states that, I think under Code of Conduct, that they must treat their principals equally, fairly, and with integrity. So by law, they are not allowed to treat one farmer different to another. It's against the law. They must represent their principals equally.
Picked up any of those practices? I just want to get a sense from you, from the market. Are you getting complaints from farmers that maybe their stock is staying there for longer periods?
Yes, we do get complaints from farmers that perhaps that their product was not sold. We do get complaints that the price that they've received is not aligned to the average price. that the market achieved on that particular moment. Then we do, through our resources, conduct investigations to indicate and to find out exactly what the process was. And there was instances in the past where we could see that the salesman could have done better, and then we then, as market authority, then force the agency to put that difference into the farmer. So these are functions that we do perform.
Okay, thank you for that. And on the, because there's an issue about the quality of produce and the grading and so forth. What grades are you, grade of product are you selling at the Joburg fresh produce market?
Top quality products. Obviously, Chair, there are different grades and there are different sizes and there are different packaging. So any product, but yeah. So we sell all grades from class 1 to class 2, class 3, lower classes, and there are different buyers for those products. There's no doubt about it. But obviously, we will not sell any produce that is not fit for human consumption. That not allowed.
Why I ask, I just want to see whether we can be able to compare the products. So there are retailers that are going direct to the farmer, and there's product that is being sold through the national fresh produce markets. Whether we can compare those products, like for like, as an example, because I just want to get a sense, because there's a very transparent price discovery from your end, but on the other side, it's not very easy to know what the farmers are charging each individual retailer. Just wanted to check if that comparison is possible.
And you're talking about quality?
Yes.
Quality is the same to a large extent. I see, Chair, behind you there is a tree. You see that tree? When it produces an apple, and it produces 20 apples, from that tree, those products go to the markets. There's not a tree that they picked 20 years ago, now it's coming to them. No, it's the same tree, it's the same product, it's the same quality.
I think if I understand your question very well, and Charlie will help me here. So I think if I understand your question very well, you want to compare a certain type of grade that is sold at the market, which is a price discovery place, versus the same product but sold at the retail level. So you want to compare from a price point of view. And from where I'm seated, you should be able to compare, because the product, it should be the same. Of course, it's a matter of, do you have the right data to then compare?
Right, okay. Then do you have the data disaggregated in terms of classes? I'm sure you do, right? The one you publish every day.
In terms of the different classes?
Yeah.
Yes, we do.
All right, okay. No, thank you.
And it's on our website, Chair.
Yes. And do you, by any chance, track the price transmission across the value chain, just for your own information? If you see potatoes per kg are discovered at this price at the markets, do you ever look maybe the other channel, like retail, and try see how eventually the consumer pays?
Not deliberately, Chair. I have the unfortunate task to do shopping with my wife And then when you get there, you see the different prices of fresh fruit being sold at retail stores. And my personal experience is that that you find that the prices that are displayed at retail stores, and with a little bit of understanding or knowledge of what the product is currently doing in the market, I find that I don't allow it to buy it because the prices are relatively high than the market prices.
All right. Okay. No, thank you. But I think you don't formally track as the market.
No, Chair.
All right. Okay. No, thank you. Thank you very much. Maybe the last question, I just want to, because I think, Mr. Baloyi, I think, because we do have your financials, right? And I think it's good that you are here, we can ask. And there's, just want to understand the governance mechanism of Joburg Market SOC Limited, right, in terms of the protocols, right? It seems there are a lot of things. Of course, you do declare revenues. I just want to see how does this work? So you declare revenues every year from commissions and everything, but that money you have to pay it over midway. Just explain to me what you keep as what you account for. Obviously, there's some monies that you account for, but what's the governance vis-a-vis other SOEs in your
space?
Yes.
Sure.
Yes.
Yeah, Chair, I think it's important to note that we are a legal entity, and which is why we're an SOE. And from a governance process point of view, MFMA, which is a Municipal Financial Management Act, is applicable to us. The Companies Act, it's applicable to us. And it's also important to note that from a reporting point of view, we are governed by what we call GRAP, Generally Recognized Accounting Practice. So in terms of our financial statements, we are required to disclose everything we make, Chair. So there are no resources that we do not declare. And I think, Chair, the relationship, because I think what tends to confuse a lot of users or people who have interest in Joburg Market, it's the relationship we have with our parent company, and the fact that the money is going to the parent company. And I suppose maybe I need to take this opportunity and simplify and clarify it. So you need to see our parent company as a bank. So we take our money to the bank. We calculate what is our working capital needs. We then take our money to the bank, because if you keep the money here, you're going to earn 2% deposit interest. But if you go invest your money in the money markets, potentially you can earn between 5 and 7% over a certain period of time. So our municipality is like a bank. So excess resources that we have, we then invest in the bank. We are fortunate that our municipality has a function called Group Treasury. All the other municipal entities of the city of Johannesburg, they don't have that function. So we've centralized that function. So this team in Group Treasury will then take the resources and deploy them in various instruments that are traded in the money markets. Be it your call deposit, be it your fixed deposit. So that's exactly what we do with the municipality. When we now looking for our money, of course, if it's a call deposit, I can call, can I get my money? If it's a fixed deposit, I need to understand what is the timing for me to get that money back. So that's the relationship we have with the city. So through investing, we then make money. So if you look into our financial statements, there is a line item under revenue that says interest received. And if you go to that note, it then indicates this is the money that is invested through the city, of ultimately the city sends it to the money market or borrows some of our entities, and we earn money. So it's a cash flow management aspect. So from an accounting perspective, the resources that we would have sent to the city will then account for the city as a debtor, to simplify it. It's an investment, but let's call it a debtor to simplify it. This is the money that the city is owing us, and this money is bearing interest of an X percentage over a period of time. But from a revenue point of view, we account for all our revenue. From an expense point of view, we account for all our expenses. If you then look into our cash flow statements, you'll then see the money we generate from the commercial business and other businesses that we have. If you have a look at the operational activities, that's the money we generate. You'll also see the money we pay to run operations. Then underneath investments, you'll then see whether we've sent money to the city from an investment point of view, or we've withdrawn money from the city as a withdrawal from an investment to either cover our capex requirements or cover some of our operational activities. So that's that, Chair. And from a governance structure point of view, Chair, there is a board constituted for the entity. And of course, then there is executive management, which is the CEO, the CFO, and the COO. Then, of course, because it's an entity, there is a political oversight from MMC of Economic Development. That's where the entity belongs from a political oversight point of view. And of course, there are also all these other statutory reporting that will then have to do to the parent company.
Okay, so thank you. So who then? So what happens to the surplus? Is this do you retain the surplus, or do you pay it over to the shareholder? What's the arrangement?
So I think one of the things that we've been fortunate about as Joburg Market, and I think it's probably all the other entities within the city, we haven't had a situation where the shareholder is asking us to distribute the returns that we've made, which is the profit. In general terms, you will call it a dividend, Chair. So we have not had that situation. So technically, the shareholder is leaving everything that we've generated into the company. The only aspect that the shareholder does is just to do the investment on our behalf. Of course, as the shareholder, when it comes to how we then utilize our resources, they have a say in terms of appropriation of the budget. But in terms of distributing what we've made, we've been fortunate. We keep the profits. And I mean, Chair, if you were to look at our financial statements, you would probably see that our retained earnings are probably in excess of R1 billion, because that demonstrates the profit that we've earned over a certain period of time. So I think we just need to differentiate that when it comes to allocation, because remember, as a municipal entity, we cannot use resources that are not appropriated. So you have to go through a budget process to then appropriate the resources that you have, right? That's where the shareholder then tends to have a say, right? To say, oh, probably you need to appropriate up to this level, but the resources still belong to Joburg Market as such. And I think what we are driving now, Chair, as my last point, is to then say, previously the allocation on capex and repairs and maintenance was very minimal. As Joburg Market, we have the resources. Can we then appropriate more of those resources into the budget so that then we're able to cover some of the infrastructure backlog, including the repairs and maintenance that we've alluded to previously?
Right. So maybe just as we close this, is because there's this I suppose, sense that the municipality, I have to ask it in the very most basic way, the municipality takes the money from the market, the profits from the market, and it uses it to, I think someone says, to build schools or what, something like that, right? So this is the basic form of how it's being submitted to us. That's why we are seeing challenges in the market, because the money is being taken away by the city. And I think maybe if you can explain, yes.
I mean, Chair, if we were to go on that lane, technically what the municipality would have done would have borrowed money from us. Remember, I said to you the municipality is like an investment vehicle to us. So in that instance where they would have taken our money and decided to build a school or decided to borrow one of the entities, it's still our money, but of course, over a certain period of time, because they've borrowed that money, it would then be earning interest. But Chair, in terms of distributing profits, like I said, we've been fortunate we have not. But I think what we've been emphasizing to the shareholder is to then say, what we've borrowed you to invest, we want you to unlock it now so that we can then redirect it to then fund the infrastructure and repairs and maintenance. I suppose maybe what was not done in the past is to go to the municipality to say, remember, these are my resources. I've borrowed you. Can you unlock my resources now so that I invest? And like I've indicated, Chair, this is demonstrated by the element that we're able to move our repairs and maintenance from the tune of about 20 million to about 60, 70 million and 80 million in the next midterm, right? All those are funded from the cumulative resources that we've accumulated as Joburg Market. Furthermore, one of the arrangements we currently have with our treasury function now is that we are not going to invest all the resources at the same time. Right. There are certain resources that are going to be kept in the entity to ensure that operational costs are funded within, because we're a municipal entity and there's a guideline from National Treasury, we need to service our service providers within 30 days. So there's certain buffer that we keep to ensure that our short-term working capital needs are covered. Right. But in terms of utilizing the resources, Chair, the resources are there for us to utilize. However, and I want to emphasize this point again, the city plays a role when it comes to appropriating the cumulative profits that we've made. Maybe we may have a wish to appropriate 1 billion next financial year, but the city says, guys, we can only appropriate 500 million, because let's be mindful that ultimately we are part of the city. So when the city does its funding and budget, they also need to look at the consolidated view, taking into account the entire group of companies that are there.
So now on, maybe I know that we're taking a bit longer, but I hope you bear with us. So because you have now the requirement of 2.8 billion over a period, and you say you've been given the blessings to go raise the money. But out of the accumulated surpluses, have you calculated the accumulated surpluses, I suppose we can say, post-94, that could be sitting in the municipality coffers vis-a-vis the 2.8 billion that you need now?
All right, so I think what I've done on my side, Chair, because some of the accumulated surpluses have been utilized previously. So what I've done is that I looked into how much are we being owed by the city from an investment point of view. So you're looking roughly at about between 700 and 800 million cash reserves that are there. Of course, we won't be able to, to fund the entire 2.8 billion. But is it something that we can start with to close the gap? Indeed, right? But again, as indicated before, the 800 million or odd, it's purely there in the eventuality that the same trajectory remains. Because remember, as much as we're going for the 2.8 billion, it's going to take time for us to start making money on that 2.8 billion investment. Of course, we still need resources to be there to operationalize our capex and to ensure that there is business continuity, right? So that 7 or odd million rand that we have is to then cover that gap. It can happen, Chair, that we get the 2.8 billion funding, but we then decide to use 2.1 billion because we're then going to tap into the 700. But for now, we just focus to say, let's get the 2.8 billion. And if there is an opportunity to tap into the cash reserves, we'll certainly do that, because that would be less costly for us as Joburg Market. But in the current state, as I've indicated, the 150 million capex that we are funding now, we are funding that from our own cash reserves. Yeah.
No, thank you very much. I think that's quite clear. I think that's quite clear, and I think you've explained that the city guarantees, right? Even that, so which is clear. Maybe the last, because there's a note on the loans to and from the shareholder, and sometimes they get impaired. I've not done, what is the, just so that we understand, we don't misinterpret the note in a way.
I'm not sure, Chair.
I was looking at
which year
2022. We have up until
2022.
Yeah, I think so.
Okay, so.
But you can just explain in broad terms.
No,
just
that's fine.
so we understand the note, not to.
So the loans to and from shareholders, it's precisely that investment I was talking about. So the money that we send to the city for the purposes of it being invested, it then becomes the loan to the shareholder, right? On our side, previously we had a loan from the shareholder to fund our capex, but we no longer have. And I think in the set of financial statements that you have there, it's the year that we settled that loan, right? So the only loan that is there, it's the loan to the shareholder, which, if you remember, I said you should term it as the investment of our cash reserves into the entity. And I think, and maybe my departing point here, Chair, and I know some of our stakeholders are complaining about the fact that the money is going to the city. Let's be mindful. If Joburg Market fails to spend on its operational budget that has been approved, it's not an issue that the money has gone to the city. It's an issue that Joburg Market did not have the ability to spend the money that was appropriated. And if you go back historically, the challenge was the fact that the money that is appropriated is not spent. In 2022 financial year, probably that was the first time Joburg Market exceeded its 85% target on capex and reaching 100% on repairs and maintenance. In 2023 financial year, it's the first time in a long time Joburg Market reached 100% spent on capex, as well as significant spent on repairs and maintenance. So sometimes the manner in which the message is communicated is a bit different. At least spend what you are allocated or what is appropriated. If you are failing to spend what is appropriated, what are you going to do with 800 million? So that's the driving force that we've implemented in the entity, so that because we have an opportunity during budget adjustment to then go back to the parent company and say we can demonstrate that we have the ability to spend in terms of our infrastructure and repairs and maintenance. Can you appropriate more resources? So I think sometimes the conversation is a bit misdirected, that we are not spending because of the money, but we are not spending because previously we lacked the ability to spend. Probably our SCM processes were not efficient, and maybe we didn't have capacity to spend the resources that were appropriated. And I think this year we need to then demonstrate to our stakeholders, can we spend the 62 million on R&M? Can we also demonstrate to value for money for the 62 million on R&M, including the 150 million on CapEx? Then I think we'll then now be changing, the wheels will be changing slowly, but moving in the right direction. Yeah, thank you.
No, thank you very much, Mr. Baloyi, for that explanation. I just want to check if you have any closing remarks. Mr. Parks, I hope you are Mr. Parks, right?
That's correct, Chair.
Mr. Parks, yes, Mr. Parks, yes.
Maybe, Chair, on my side, I'll probably start and say, yeah, thank you so much to the Commission. I think from day one, when we got the request to provide information and subsequently to participate in the public hearing, we're always open. You know, we want to be transparent. With the Commission, we want to provide all the information where necessary and possible. So on our side, the Commission can always reach out to Joburg Market. Our doors are open in the event that you still require further information. But I must say thank you for inviting us, and thanks for grilling us as well. Much appreciated. Probably will be better people when we leave here, Mr. Park. Thank you.
Thank you, Chair. Chair, thank you for the invite. Going forward, Chair, I don't know what the process would be, but I think Joburg Market would be very interested in getting information around the challenges in the value chain and perhaps some of the solutions that can be implemented. And we would like to partake in changing what needs to be changed to improve what needs to be improved. Thank you very much.
Thank you very much. We will keep you updated on the process. I think there is an administrative timetable. We're doing now the hearings, but we will continuously engage the stakeholders. And if there's something that we require your input specifically, we will also reach out. So thank you very much for your time. We appreciate it. Thank you. Thank you. All right, so we will be moving to our next stakeholder, which is the Durban fresh produce market. So let's just take 5 minutes to rearrange the setting, and then we'll proceed. Thank you. We are ready to proceed with the Durban fresh produce market. Welcome. I know that we are slightly behind schedule. Please do indicate if you have any time constraints that we should note before we proceed. But Mr. Derek Bowles will lead the questions. Thank you.
Thank you, Chair, and good morning, and thank you for coming through. Just for some formalities, please, can you state your names and designations for the record, please?
Good morning, all. Thanks for the warm welcome. It's Andre Young, Senior Manager, Operations and Marketing at the Durban Fresh Produce Market under the unit Business Support, Tourism and Markets Unit. Thanks, Chair.
Good day, all. Jason Munsami, Senior Manager, Business Services and Systems Control, Durban Fresh Produce Market. Thank you.
Thank you very much. You'll notice there in front of you there's an oath or affirmation. We have been running the proceedings under oath. So would you kindly just indicate whether you have any objections to taking the oath? And if not, could I ask you please to just read your full names and the oath that is in front of you?
No objection, Chair. I swear that the evidence I shall give shall be the truth, the whole truth, and nothing but the truth, so help me God. Thank you.
No objections, Chair. I, Jason Munsami, swear that the evidence I shall give shall be the truth, the whole truth, and nothing but the truth. So help me God.
Thank you very much. So just in terms of housekeeping, we have divided the session up into two parts. The first part will be a 30-minute allocation to yourselves, where we invite you to just tell us a bit more about the Durban Fresh Produce Market, your operations, and also you're free to raise any issues or discuss anything that you want to discuss with regards to the inquiry. And then the second portion of the session will then be run by myself, where I'll be asking you some questions on behalf of the technical team. With that, over to you. Thank you.
Thank you, Chair. We'll do a brief presentation in both parts. My colleague will cover his part relating to the presentation about the market. Having said that, I want to use this opportunity to wish him happy birthday. It's his special day today. He cancelled his half-day leave to be here today. So happy birthday to Jason.
Thank you and happy birthday. Yeah. Thank you.
Thanks for allowing me that, Chair. Chair, yes, Durban Fresh Produce Market, as you know, is the fourth largest fresh produce market in the country, encapsulated as a department within a unit called Business Support, Markets and Tourism Unit within eThekwini Municipality. It was at some stage, many years back, a standalone unit on its own, with its own executive director and head, and subsequently with restructuring over the years and the merging of departments and sections, probably also relating to streamlining services and budget cutting, we've become a department in a broader unit within the city. Currently, we exist in terms of structure like most of the bulk fresh produce markets, where the market itself is owned, managed and controlled by the municipality in partnership with private sector role players such as your market agents, who trade on the fresh produce markets. We have role players like the registrar that just entered, APAC, which performs a regulatory function specifically relating to market agents, and a very important role, may I say so. We operate within a market trading system, and I mention it specifically because it also plays a role in terms of the integrity of the system and the market and the transparency that the entire system brings to bear. Market agents I've mentioned has been the other role player in this private-public partnership type of setup. And as we know, the famous model that we operate on is the commission market system, where basically prices is determined on the economic forces of supply and demand. Price determination also happens via negotiations within a robust trading floor, almost like the Johannesburg Stock Exchange, with various factors playing a role in determining price, such as quality, very important, quantity being procured at the particular point in time, the relationships between market agent and market buyer. As I mentioned, quantity that's purchased also plays a role in your price determination. So that are we in a nutshell. In the market, we have other role players who participate in the business of the market, such as a farmers market, which caters for our smaller emerging farmers, where the cost of the bulk market is not within their bracket. They have a cheaper facility on the market where they already have a captured buyer market to trade their produce in. We have informal traders who rent out trading areas in and around the market where they can also trade their produce from the market. We also have what we call a housewives type of market for those that want to buy the ones and the twos and the threes and don't want to buy in bulk. And then we have another role player that purchases in bulk but uses the market as a warehouse, and they are able to deliver to their customers at any time, weekends, public holidays, after hours. The idea behind that is, with the increase of competition, we found to keep buyers on your market is to provide them with additional facilities and services for them, the ease of purchasing and the ease of delivering to your warehouse on the same facility. That's also cutting down on transport cost, etc. So that's by way of brief introduction. Just to encapsulate all what I've said in terms of our objects, one would be to provide a trading system, effective trading system for sales, provide facilities and services to service the customer, the buyer, the farmer, and the market agent. Most importantly, providing effective management of the entire facility, provide for the licensing of our market agents and salesmen within the agents, as well as providing permits for employees within the agents on the sales floor, and important, regulate the conduct of persons trading within the precinct of the market, and generally to provide an environment that is conducive to trade. We obviously provide for the setting of various levies, commissions, tariffs, and rental for the provision of such services and facilities. Thanks, Chair.
Chair, my colleague has pretty much covered the essence. However, just to add, I think it's important for the Commission to appreciate that whilst price in the main is determined based on the fundamentals of economics in terms of supply and demand, we can't ignore the role or the impact that Johannesburg market ultimately plays in terms of pricing with regard to other smaller markets as such. In effect, a producer will ultimately send his product to a market where he would obtain the best price. And as a result, our salesman in Durban very closely monitors pricing on Joburg market and essentially, in the main, aligns their pricing to that of what's occurring on Joburg market so that it becomes a viable proposition, more so for your producers who send their product from outside the province. In addition, there too, obviously the additional transport costs, etc., are added to the base price of what's occurring in Joburg. I think from a commission perspective, it's also important that you become aware of some other dynamics that exists with regard to pricing. As at times, what occurs is that the same brand, so in effect, the same supplier product that is being sold on Durban market can be purchased by buyers outside the market, meaning within the precinct of the market in terms of wholesalers who are located outside the market at a cheaper price. That very same product, in the main, is often purchased off Johannesburg market. However, in view of the fact that producers essentially monitor the average price of product, if you were to scrutinize the detail, then you would identify that a fair amount of product are sold essentially to competitors of Durban market, meaning buyers of Joburg market, however, at a lower price, and that enables them to be able to compete for the same brand from a buyer perspective on Durban market. Then my final point, my colleague made reference to the facilities that we made available to informal traders. In order to assist with regard to that process, we've offered these grouping of informal traders a discounted rental over a 3-year period to assist them to be able to compete more effectively with existing traders occupying space. Thank you, Chair.
Thank you very much. Maybe just to pick up on the point about the Joburg market almost being used as a pricing benchmark. What kind of real-time pricing access do your market agents, and on the other side of the market, the buyers, what kind of access do they have to that, or visibility at least to the Johannesburg pricing? Do your systems allow for that kind of visibility?
All right. Yeah, thanks. So in terms of that aspect, in the main, it is relationships that exist between salesmen on Durban and their colleagues, more so other national agencies on other markets. However, they also point out at times that they are misled because effectively there's competition for the same buyer, more especially when it relates to the bigger buyers. Your smaller buyers are unable to compete in terms of product of Joburg market because they don't have the capacity to be able to bring down that product quickly, etc. And the volume of product that they want to purchase doesn't enable them to be a significant competitor on Joburg market as such. So in the main, it is via telephonic engagement at large, and then also as well, your bigger buyers who purchase of Joburg have relationships with other wholesalers and players on Joburg market who perform the role of purchasing the product and then transporting it down to these buyers at Durban. Thank you.
So to answer the first part of that question, no, the systems don't speak to each other.
Okay.
So you cannot pick up that trading information on the trading system.
Do you think that's an inefficiency within the system, the sort of broader system, that you don't have that real-time visibility or real-time access to pricing?
Yeah, so that's an interesting question, but there's certain dynamics that we need to be aware of. So for instance, Joburg market operates, is the only market in the country that operates on on a non-fresh mark system. So all markets in the country utilize the fresh mark system, and Johannesburg market utilizes their own market, their own system. However, Durban is a competitor to Joburg. So if I was Joburg and the pricing on our market plays a significant role, I wouldn't want to share that pricing ordinarily. Yes, from a Durban perspective, I want that pricing. I want that, but not necessarily to share that info. So from a Durban perspective, in terms of our pricing, etc., at the end of day, we make available products sold and the pricing as such. And then Joburg, my understanding, is also on a daily basis, they make that pricing available, but there's no agreement or arrangement or any attempt in the past to create a common platform for the real-time sharing of pricing.
Just in terms of pricing, I mean, would your bigger markets, your Joburg market, for instance, would it have attract higher pricing than perhaps one of your smaller regional or your smaller national fresh produce markets? Just maybe sort of the dynamics in pricing there.
All right. So that's an interesting question, and it's difficult to say yes or no. However, the other fundamentals that informs pricing that my colleague made reference to needs to be taken into account, in that we need to ensure that we're comparing like with like. Your buyers always point out to you that seeing what you purchase is always first price. So if they're able to purchase the same product off the floor, of Durban market floor, that will be the first option, because there's somewhat risk aligned to purchasing of Joburg for various other factors, in that there's issues with transport, and then more so with the other risk factors in terms of the N3 link and the incidents that have occurred over the past 2-3 years, and then also the pricing with regard to transporting in view of the high transport costs. So it's not a direct yes or no to that particular question, I would say.
Maybe just expand on that. You've got a market, a smaller market just down the road in Pietermaritzburg. Do they then benchmark their pricing on yours?
Yeah, so Maritzburg in the main is not a real competitor to us, and you would find that over the years, the bigger buyers of Maritzburg have tended to move away from Maritzburg and come purchase directly of Durban market for various different factors, but I think it's more so on the fact of availability of product in terms of a wider range, both in terms of volumes, and I think also as well I could possibly argue that the quality is probably somewhat superior as well.
Thank you. So following that, I mean, what is the significance of the Durban fresh produce market as a route to market for farmers, and maybe focus on the value proposition that you present to both sides of the market, your farmers and the buyers?
Interesting question, Chair. One of the challenges Durban market faces, it's related to its locality and it being further from the source of production. So when a farmer makes that call to send to Durban market, he has to get his sums correct. Also, in terms of our population, which is more or less the size of Joburg, we have a larger spread of our population throughout the province, extending from north to south. We're not condensed of having your 8 to 10 million people in a small geographic area. So though that brings indeed challenges to Durban market. However, also the uniqueness of the distance, the spread, also brings opportunities, perhaps in terms of pricing of produce. So therefore, that's why at cases we can accrue higher prices on Durban market, unfortunately to the detriment of buyers, than what Joburg market. Joburg market tends to get a glut because of their locality, because of their geographic size, and at many cases sometimes is oversupplied with product. And that's how, as my colleague mentioned, the market agents can offload some of the product to Durban buyers at a much lower price than what they trade to their own buyers located in the Gauteng region. And that buyer can transport the product to Durban, covering the transport cost, and have a markup, and at the same time trade his produce cheaper than Durban market with all those added costs in. So that is the dynamics that we find ourselves in. Durban market has a value position of being an extremely stable market in terms of its management, in terms of its structure, in terms of its renowned cleanliness of the market and the hygienic standards that are practiced at the market. And having a hands-on management basically almost throughout the week, throughout COVID period, throughout the ride period, Durban market remained functional and operational, ensuring food security on a continuous basis. I want to just mention the point earlier on, which you mentioned about pricing and the non-display of pricing because of the competitive nature. However, my colleague having said that, on the market we have a standalone system linked to the trading system that allows buyers to walk onto the market and enter his details on the system for him to pick up how much produce is available on the market and what's the current going average price on that particular day. That's real time. The other end of day is the loading of the prices for retailers, etc., the public to view. The buyer doesn't have to enter this massive facility and walk around and see which agent got which product, and so he then can hone in his negotiation skills because he knows, one, there's an oversupply, and out of X number of agents, 4 of them got this product. He can see the quantity of product on the market and which agents has the product and what is the average going price, which assists him in his trading. So you have that flexibility in terms of transparency, while at the same time wanting to protect your business trade, because even locally, some wholesalers and retailers are also our competitors, because they are attempting at all times to get producers to send directly to them and bypass the market.
Those wholesalers you're referring to, do they occupy space on the markets like you'd find at Tshwane or Joburg, or are they operating elsewhere?
I'm referring to wholesalers off the market, who are attempting to bypass the market and having the produce sent directly to them, and obviously negotiating a lower fee.
Do you have wholesalers? Sorry to interrupt you. Do you have wholesalers operating on the market as well?
Yes. Like I've indicated at the beginning, we have wholesalers who have facilities on the market as well.
And they have to then purchase through the agents?
They purchase through the agents in the main, but they are permitted when the agent does not have a particular line of product or is running short of that particular line of product, and because they have to provide continuity of product to their customers, they are permitted to then bring in produce onto the market for that purpose. But their first port of call, they want to purchase from the market because the transport cost is practically eradicated. You lift it with a forklift, couple trolleys behind, and you move this bulk produce round the corner to your warehouse. So that was the business principle behind having these big wholesalers like the Boxer Group, etc., located on your facility. And if I had additional space, we landlocked at the moment, I would actually bring more of my buyers onto the facility to make the ease of trade economically, financially easy, and have them purchase from the market rather than them purchasing from farmers direct and delivering to their warehouse or their stores. Thanks, Jim.
So you did indicate that the distance from the market itself is quite significant to the growers. So what sort of initiatives does the Durban fresh produce market, are you involved in, at least in attracting, making it an attractive option for farmers, specifically small scale and HDI farmers?
Yes, Chair. Sorry. One of the things we do at the end of the day, money counts when you make business decisions. The transport cost is levied or paid for by the farmer himself delivering to the fresh produce market. So that's always going to be in his consideration when making business decisions. But yes, we do attend market days of producers. We visit producers and suppliers and buyers alike, obviously marketing Durban market, the facilities, the services we provide, the quick turnaround time, attempt to improve services on the market. That's additional to what the market agents obviously also do. They do the direct business because they do the procuring or the soliciting and bringing in of the produce directly. So we sort of buffer with them along from the marketing perspective, but not punting any particular one agent in that regard. We get hit heavily when we have, the trucker strikes along our highways. We then have a slump in produce on the market. The fear factor sets in when you see those visuals of burning trucks along the highway. Those things do in fact affect us. And you would have noticed over the years, it's happened on quite a few occasions on the Durban route. And those are negative aspects that then impede our efforts in marketing and showcasing Durban fresh produce market. Thanks.
Sorry, yes.
Yes, to add, I think also as well, there needs to be an appreciation for the different regions from which product comes through. So the most amount of product to Durban comes through from the Western Cape. So that accounts for approximately 24% in terms of our last financial year. In the main, that product is more fruit. So the seasonal fluctuation of production also plays a key role in terms of where the product actually comes through from. In terms of KZN constitutes approximately 20% of our volumes.
Okay. And just in terms of those volumes, what proportion of that is coming from your large-scale commercial farmers relative to small-scale farmers or HDI farmers? Do you track that?
Well, the vast majority of it is from commercial producers.
Okay. And maybe coming back to my earlier question, are there any initiatives that you've undertaken to try and increase that proportion of HDI and small-scale farmers in participating on your markets? In terms of training, in terms of outreach programs, maybe arranging for some partnership for transport, those kind of things, assisting with packaging requirements, the general know-how and things like that, how the markets operate.
Maybe I need to draw to your attention that we have what we refer to as a farmers' retail market. That is a platform that was created historically to assist small emerging farmers and what we refer to as bundlers as well, the smaller grouping of traders or producers to bring through their product to the market and use that as a platform to sell their product. We probably, some 20 years ago, I think it was probably in the region of 2004 or 5, whereby we revised our mechanism in terms of tariffs, and we've done away with the 5% commission for that grouping of emerging farmers and introduced a somewhat lower table fee and aligned that to a quantity of produce in order to reduce the impact from a cost perspective for that grouping of farmers. Within that grouping, there are also a number of farmers that also utilize the bulk market as a platform to sell their product. So whilst at times they utilize the farmers market, but also sends through product to market agents. And then you have the other grouping that will primarily only utilize the farmers market for that purpose. So with regard to that particular facility, it's broken up into three core categories: your bona fide small emerging farmers, then you have your bundlers, that's more so individuals who bring through a smaller quantity, and then we have what we refer to as the speculators. Those are individuals who go through to these smaller emerging farmers, purchase the product off their farms, and then bring that product and comes through and sell that or at the farmers' retail market. However, with the speculators, they are charged a full 5% and not the discounted tariff for table fee as such.
The Chair, if I may, to follow up on the question. Yes, in the past, Durban Market used to be directly involved in outreach programs, also in terms of training and development, where we've partnered with the Plum Producers Organization, conducting market tours, but not anything directly in terms of transport facilitation, financing, packaging financing. So what we also do now is that we've also found that in terms of the training and development, there's been a lot of cross-pollination where our KZN Provincial Department of Agriculture does a lot of outreach programs for emerging producers, farmers, suppliers, packers, repackers. APAC does quite a lot of training, and where we've called in to assist in terms of partnering with them or providing training in that regard, market tours to institutions, universities, our neighboring provinces such as Lesotho, Botswana, often sending delegations to us on educational tours of the market directly. We involved from that perspective. And the second point is that within the municipality, and perhaps we can also give you some of those programs, we have a department that deals with agri-business development within the city, especially also in urban agriculture, emerging producers, and another department within the city called business support, where business support assistance are provided to such type of producers, emerging producers, and also to buyers. So there are those initiatives and programs happening at a level within the city relating to buyers that come to the market and farmers that supply the market, together with the Provincial Department of Agriculture.
Great, thank you. Moving on to the market agents. How many market agents are agencies are operational on the Durban floor?
With the one that we closed down a few years back, it's now 5 total.
5. And how many of those are HDI owned?
Jason, would you be able to give us the statistics of the breakdown?
Yes, Chair, to clarify firstly, so the reference to 5 is broken down into 4 commission market agents, and the 5th is a wholesaler that's been introduced or commenced trading just over a month ago in early September as such. So that's the distinction in terms of the numbers. With regard to HDIs, 100% HDI would be that of your wholesaler. We've had historically other 100% HDI agents operating on Durban market, but for various reasons, the models changed in terms of sales thereof of those particular agencies, and also the closing down of those agencies that my colleague made reference to in the past. In terms of
Can I ask you, sorry, just pause there. What challenges have those agencies experienced, and what are the reasons for them struggling to to expand on that market.
So in terms of that, there's been many contributing factors, but the key has been the inability to be able to convince large commercial producers to send significant volumes of product to their floor. That's the key, and I'm sure by now you're fully aware that that is a challenge that cuts across the entire country. And I think also as well in hindsight, from a Durban perspective, probably in the early days post-democracy, we've probably been far too ambitious with our goals and objectives as well when we implemented those measures of appointment. But in the main, we were attempting to transform one component of the value chain as such, as opposed to the source. And that's where the real problem lies, is the limited transformation in terms of supply when it comes through to the source, because the source is pretty much still the same in terms of supply, and that historic relationships that exist between your existing market agents and your producers is a relationship that cannot easily be broken. And by the same token, I think it's also important that we appreciate, even if we were to introduce a 100% white agent tomorrow, they will also struggle to infiltrate as a result of these deep-rooted relationships that exist. And in terms of your existing agents, it's just, to a large extent, family businesses that have moved down the chain, and with the next generation taking over and maintaining those relationships with producers. However, from a Durban perspective, one of the goals that we set out to achieve was a minimum percentage of black shareholding. So in terms of those 4 commission agents, the minimum shareholding in terms of black shareholding is that of 25.3%. So we have one agent that has a shareholding of 25.3% black shareholding, and then in terms of your other agencies, it ranges to 51%, and then 56.58% in terms of the bigger agent, and 60% in terms of the 4th agent. So in terms of averages, that amounts to 48.22% in terms of average black shareholding. However, it's important to note, if we were then to translate that into a weighted average shareholding, meaning if we were to take into account the turnover of those respective agents and apply the percentages I made reference to in terms of black shareholding, then the weighted average of black shareholding in Durban for the last financial year amounts to 56%. So whilst that sounds rather significant and a step in the right direction, I will quietly indicate to you it's not really true transformation in the sense, because if you were to dissect that black shareholding, you would find that it's nothing more than a business transaction in terms of wealthy black individuals who have purchased into those national agencies. And I emphasize the point, national agencies, in view of the footprint that exists on other markets. And the true measure should have been the impact in terms of broad-based, what transformation has there occurred within these respective agencies in terms of a leadership perspective, in terms of change that should have been occurring rightfully in that regard. Yes, but also aligned to that, you would find, even when there's been change in terms of acquisition of national market agents, of smaller agencies on Durban market, there hasn't been true change in that the new producers that were introduced as a result of acquisition by the National Market Agency hasn't transformed into meaningful change in the lives of your non-white salesmen, in that the increase in terms of their commission or sales has not been significant. However, it's been skewed yet again to more of one particular group that's been there to a large extent. Thank you.
Spot on. Just in terms of those, the sales agents, so the agents that are employed by the agencies, the salesmen, what percentage of those are BE accredited, or BE or HDI? Sorry.
I don't have the percentage offhand. We don't have the percentage offhand, but I would say in the region of 50-50. However, the figure looks like a balance, but the majority of commission salesmen are white salesmen still. So we have a lot of black and Indian salesmen, majority being on earning a basic. When I say not commission, they're not commission based in terms of the turnover. You then accrue a certain commission, but the majority remains the white salesman that commercial producers send their product to. So that aspect of the transformation trajectory also needs to be focused in much more.
Is that something that you're looking into?
Yes, we are at all times. So to such an extent that when a market agent needs to, for whatever business imperative, appoint a white salesman, they make special representation to us outlining the business strategy behind it. It could be agent that they are bringing down from Cape Town market or Johannesburg market that's currently employed to assist them in drawing more product onto their floor at Durban market. So it definitely is. And like Jason said, we've done this year 100% black appointed agent, and we still have plans for that going through to the foreseeable future of it, at least adding another 3 such within our market sales wall. Definitely.
Maybe just to round out the transformation theme, in your submissions you indicated that we should consider, or at least consideration should be had to the introduction of fresh produce market wholesalers to the NFPMs, and you noted you've got one that you've introduced now. Maybe explain to us how that may impact on transformation on the markets and could increase competitiveness within the sector.
Absolutely. Thanks, Chair. The market agent's success is the drawing of produce and attracting of commercial producers onto their floor. And they do that via various means from a marketing perspective. So the onus ultimately rests on that producer, farmer, to send to the particular market agent. Obviously, like Jason has mentioned, there's relationships that have developed over many years. There's also trust that has developed, not only in your agency, but in the fresh produce market system, vis-a-vis market agents also have the protection of the Fidelity Fund that's administered by APAC should anything happen to the particular market agent. And Jason mentioned that those relationships tend, when I have a good business partner and a trustworthy business partner that I've been dealing with for 4 to 5 to 6 decades, you're not simply going to move to my black agent because I need to make a statement or I need to embrace transformation. So we're saying that that has been the Achilles heel in the system, where we introduce a new up-and-coming dynamic black agency, and because the commission system demands that you receive your consignments on commission, you have to sit with all your marketing drives that you might have done throughout the country and your travels. You have to sit and wait for Mr. Madam Producer to send you produce. So even a black agent that comes onto the market that has access to finance or is in a position to access finance cannot go and lay out his finance to stock his floor. So you have a new market agent sitting there with staff waiting for a producer that he's phoned or went to visit to send him produce because it's a commission system. The wholesale system allows the wholesaler to go out and put his money where his mouth is, negotiate a price for the product, a guaranteed price, pay the farmer up front or have it set on terms, the price is set, the risks now move from the farmer to the wholesaler. The wholesaler then sets his price and his markup based on his negotiated discount that he received, and then he trades on the market floor. The other way around, the farmer maintains the risk because he is the owner of the product at any given time while it's on the market agent's floor. So the attraction of getting someone on the market saying to the producer, I would like to take your entire load, I would like to take your 2 horse and trailer trucks, what is your price? He negotiates a price. The producer is attracted to the fact that he has his money up front. On the commission system, he has to wait to see what he gets for his product. And all his product might not even move. 20% or 30% might get dumped in the process because of the shelf life, and it deteriorates over time. Other agents also got the same product on the floor. So the farmer doesn't get his product sold, he only gets paid for 70%. With the other system, the farmer's guaranteed his price up front, the risk then moves to the wholesaler. Secondly, it's also an attractive system for your emerging producers. Your emerging producers find it difficult to send their lock, stock and barrel to the market and don't receive anything in return. And the commission system says, I cannot guarantee you that this worth of stock that you've given me for 100,000 value, you're going to get 100,000. You might end up 70,000 because of the supply, demand, and the price fluctuation that occurs. The wholesaler attracts those emerging producers because he says, I'll take your cabbage, I'll take your butternut, I'll take the lock, stock, and barrel as is. Let's talk about a pricing, let's talk about the quantity and your transport costs. And then the wholesaler is attracted now to also supply your up-and-coming agent because he's got a guaranteed price on the market. So that's the idea of introducing this additional model that would stimulate and encourage growth of new entrants into the market. So, at the same time, it also improves access to the market. Because we might say, yes, it's easy to enter the commission market, there's no barriers to entry, but it's not attractive to an emerging producer who needs to have rolling finance coming in. When I move my stock, I want to know that I'm getting this price for this stock, the labor, the boxing, the transport costs. At the moment, a market agent cannot give that emerging producer that guarantee. But the wholesaler on the floor would say, I'll buy it lock, stock, and barrel. And I'll take the risk with moving it on my floor.
So this is in addition, so this will coexist with the commission system as well. Is that my understanding?
Correct.
Is my understanding correct?
Correct. And that was also one of the recommendations that has also come out from the NAMC Section 7 investigations.
So, yes.
Yes, just to add in terms of the commission, as part of that process, what we've done is introduced a discounted commission for the wholesaler over a period of time, and that will be for over a period of 3 years, but we've also as well, to ensure that it does not get out of hand and become somewhat unfair as well, there's ceilings that's been introduced in terms of year 1. The commission will be limited to a particular value, and over the 3-year period, it's going to be limited to a discounted commission of an cumulative amount of 2 million rand as such. So whilst we creating a platform for you to be able to compete, but also as well with limitations, so there isn't unfairness as well at the same time. With reference to the commission system fundamentally is based or operates on the honesty and integrity of the salesman involved in the process. So if you have salesmen who are not honest and don't possess the requisite level of integrity, then ultimately the effectiveness of a commission system becomes questionable. However, how do you measure the honesty and integrity of salesmen? Because the reality is that he's seeing the buyer every day, is engaging continuously every day. There's close relationships being formed. And whose interest do you then protect? Protect that now of your close buyer versus that of a producer? Yes, there's lots of talk about irregular activities that we don't get to see about, but we get to hear about them very often, but there's no evidence to back that up in terms of occurrence thereof. But it's a real issue in terms of challenge. I wish one day you could place all of them under a lie detector test, then maybe take you closer to it.
Isn't there an inherent sort of checks and balance in the system already? Because you are essentially supplying, two sides of the market. So, on the one side, if you're going to be giving, higher prices to your growers, your buyers are going to be upset, and vice versa. So, doesn't that integrity that's built into the system, is that what's not functioning right? I mean, forget all the other things that we've been dealing with and are still being dealt with. But
So that level of detail that you make reference is interesting. However, the manner in which markets operate, it's easy to be misled, and when you interrogate the data and the stats, all will look to be in order. However, when there's manipulation of consignment numbers and the like, no matter how good your auditors are, you're not going to be in a position to pick that up, because when I'm selling product that landed yesterday and sold against old consignment numbers and the like, you're not going to be able to put your finger on that level of detail. So unfortunately, those are the inherent challenges that exist out there when you operate of a commission system. And as a counter, with a wholesaler, it's your money that's outlaid. You would make every effort to protect that outlay that exists. And it's interesting to also note that the wholesale system that we've introduced has been a somewhat bitter pill for our existing commission agents to swallow.
Sure.
And we've
maybe just talk us through the process of allocating the licenses. I don't know if there's a license that was issued for that wholesaler, because
Yes.
you are creating a bit of buyer power and maybe potential distortions within the market by having a wholesaler operating on your floor under the conditions that you've sort of outlined.
Yes, we've responded to that in terms of our submission, but I'll ask my colleague to touch on that detail. Thank you.
So Chair, the approach addresses the government's imperative of transformation and access. You cannot expect change and do things the same way you've been doing it for the past 50, 100 years. The commission system works, but it prevents access. And when access is provided, it retards growth because of the nature of the system. Transformation means taking risks, increasing competitiveness, putting different models against different models. I say to agents, we've spoken over the years, including our big producers, about how excellent the commission system works. And the excellence of the system, which it does have, would sustain itself going into the future. So we need to embrace competition in whichever form or shape in a regulated environment that it takes to increase competition.
So maybe it's that regulated environment that I'm interested in.
Say again?
Maybe it's that regulated environment that I'm interested in. Like, how was the wholesaler appointed? Was it through a tender process?
Okay.
What is the duration of their terms to operate?
That was the second part. So I'll get to that. So the wholesaler is also governed in terms of the market bylaws. They encapsulated in the bylaws by name. And the standard operating procedures speaks to the compliance aspects. We have about 30 different SOPs speaks to the wholesalers' modus operandi equally like that of a market agent. In terms of the appointment process, so we went through a process of a public advert nationally, which appeared in your Sunday Times newspaper. It's also uploaded on the website as well. So there was a national call. Then an exposition document was created explaining what it is to be a market agent and a market wholesaler, and what documentation, etc., would be required. So you express an interest, you call in, you have the document picked up, or you had it emailed through to you. One of the points that I should mention is that we made it explicitly clear of our intention of wanting to address the aspect of transformation with regards to appointment of a market agent wholesaler. The exposition also allowed such applicant to choose whether he or she wants to go whichever model they see fit for their business undertaking. We then went through a second process of having in-house, on-site, one-day workshop to all interested applicants to explain to them what is the nature of it. Some people just hear market and selling, they think you got a little table where you sell fruits and veg from. So there's a lot of misunderstanding about the bulk market. Some think it's like our retail market in the city center. So we use that to explain, together with the agents, the nature of a fresh produce market. What are you dealing with? How the system works, the trading system, the price determination. We then did a market tour together with interest applicants. This is to help them in the construction of their business proposal, which they must then submit to us. There was a closing date, and we received in the region about 7 or 8 interested applicants from outside Durban as well and locally. And adjudication panel was appointed by the head. We did a shortlisting process first, and I think we interviewed five applicants. Presentation, full presentation, based on the business plan that you've submitted, point scoring system, and a successful agent wholesaler was ranked according to the performance and the quality of their business plan, and that's how eventually the successful person. So it was an open public process, advertised nationally, with an adjudication panel doing both the shortlisting and hearing of presentations like this and interview questions. And one of the aspects that's paramount, because you don't want to set people up for failure, and that's why we had that whole robust process before you even submitted your plan. We gave you Durban market brochures, information brochures, and booklets of the market, because we don't want to set anyone up for failure. And we've mentioned the financing part was an important part of your business proposal. Sustainability of your business from the outset, when you don't have produce on your floor for the first month, second month, third month, fourth month. What are you going to do? We've also discounted, not discounted, the rental for office space. Even with the new black agent as an incentive, we will only effect the rental once you start trading.
What is the level of investment for this new wholesaler?
Derek, say again, Derek.
I said, so what is the level of investment? You don't have to give me the exact numbers, but I mean, is it significant investment? And then also, how did you calculate the duration? Was it based on the recoupment of that investment? Just explain the thinking around that.
I can't remember the figures offhand, but them being a private business, they haven't supplied us with what has been invested directly to commence. I don't know if you have figures with you, Jason.
Chair, I don't have specific figures, but I can give you a guide in terms of the key cost drivers. One of the key cost drivers from a wholesaler perspective would have been that of the forklift, and then there would have been a choice as to whether you acquire or lease the forklift. And then the equipment, the IT equipment that would have been required in order to connect to the system for the purposes of trading. The other costs are more operational costs that will be progressively incurred in terms of your facilities that we offer, in terms of our tariff charges, more so the cold rooms. So the cold rooms, based on the volume of product that you utilize, will be a key factor in terms of cost drivers. But however, in terms of inherent outlay, it would be pretty much more so in terms of ranking, I would say, your forklift, your computer equipment, and then your other office equipment in terms of setup in the main. So that essentially I would classify to be the key cost drivers with regard to our outlay.
And then very important to those cost drivers is your capital injection that you're going to put into procuring produce to then bring it onto your floor.
Can we move on to floor space allocation? Maybe just explain the history of floor space allocation at the Durban markets and the formulas that you are currently applying in calculating that.
When you say the history?
Well, I mean, ignore that actually, forget about that. Let's talk about now. What is the sort of floor space allocation formula that you're currently applying?
Okay, Jason will give you the formula. We have a formula. We also have it approved in a standard operating procedure. So the formula is transparent and it's equal to all market agents. There's a formula for even a new agent coming into the market, and the formula is based on a tonnage of produce received and your trading, your growth of your agents over X period of time. Thanks, Josh.
Thanks, Chair. So with regard to floor space, it aligns to two key indicators of volume of product, essentially mass, and value in terms of turnover. So these are the two key determining factors that ultimately plays a vital role in terms of allocation of floor space. So effectively what we would do is proportion the two sales all in relation to activities of the particular product that is sold in that particular sales hall. So we have a fruit and veg hall and a potato and onion premises. So those two facilities would be proportioned in terms of trading space available, aligned to the dynamics of volume over a period of time, and then also as well, in order to protect emerging entrance into the facility, we also have a minimum space allocation, with the fruit and veg hall being of a larger size, 21,000 square meters. The minimum floor space allocation within fruit and veg is 485 square meters. And then in terms of the potato and onion hall, it's a minimum of 315 square meters, aligned to approximately 11,000 square meters in terms of size of that particular hall. And then also as well, historically, we used to review floor space every quarter. That's been amended more recently, and we now reallocate floor space twice a year because of the logistical challenges aligned to moving agents across. But in the main, there's no real challenges. Agents are somewhat accommodating and flexible in that regard. If there's small shifts, they tend to want to retain the existing space and overlook those dynamics. Yes, when there's issues or challenges, we always point out, yes, whilst we utilize volume of sales in terms of mass and rand value, there's no ideal model with regard to floor space allocation, because we did not incorporate into the formula the turnaround time of product. So the turnaround time for product to move is not factored into that equation, and if we factored that, then you'll get a more true and accurate allocation of floor space. If you were to then interrogate the number of days over the period of time that an agent is unable to accommodate his volume of product within within the space allocated. It's a very few and far in between, and even then, when such situations arise, agents, I must say, are accommodating to be able to want to assisting each other to overcome that challenge that may exist with regard to the particular supply. And as again we indicated, alignment to source of supply with regard to seasonal fluctuation. So there's no real.
Is there sufficient floor space?
Yes.
Is there? So it's not an issue for you.
Not an issue.
All right. And maybe just coming back to the new entrants, specifically HDI, SMME entrance into that market. How does the floor space allocation work there? I mean, are they given a grace period from the volume and mass a formula being applied? Because obviously they'll be disadvantaged initially, and how long is that grace period extended for?
So essentially, I made reference to that. That minimum space that I made reference would have been the space that's allocated. There's no effectively a grace period as such, as long as they're in existence and trading and attempted to increase the turnover and volumes, they would be allocated that minimum allocation. Okay. And here again as well, it's not based on the principle of we would take you and then push you to some corner or end of the market. We would attempt to allocate you space that ensures you're able to compete competitively, provided obviously that you've got the volume of product on the floor.
Thank you. Okay, I'm going to move off that now. I think, Mr. Young, you mentioned earlier, I think in your sort of opening submissions, that one of the benefits that the Durban market has is stability in management, specifically with the municipality, and also the cleanliness of your operations and the infrastructure that you have. I think one of the sort of main submissions that we've received, across the board is that it's sort of general states of deterioration of the NFPMs, and that's been attributed to the lack of the reinvestment of the 5% levy that is being charged by the owners of the municipalities into the infrastructure and maintenance of the infrastructure. Is that something that is affecting you as the Durban National Fresh Produce Market? And what are your views on that sort of statement in general terms?
No, it's not affecting us on Durban market. So the city plows back into the market what we put forward for infrastructural attention. However, having said that, again, our biggest Achilles heel is our supply chain management process. The procurement system is bedeviling us to an extent I cannot explain. To such an extent, we are going to look at a process of putting some type of proposal to the city that would be able to make us a bit more functional in terms of our powers of running a business. The procurement process gets derailed for sometimes simple aspects which has a direct bearing on your operation. For example, the smallest thing, or one would say is insignificant, like a pallet jack or a forklift. Both us as a market and a market agent can't operate without a forklift. You cannot operate without having cleaners on your market. Our cleaning company appointed, cooperative, also to address transformation, is handled centrally by the city. The urgency of getting the procurement process underway way in advance never happens. Up to the trading system that the market functions off, which is on a contractual basis, all affects our operations, maintenance contract. So I would say the procurement system is our biggest downfall currently in terms of delivery of certain services and infrastructural maintenance. In terms of financing, more Jason's department, we don't particularly have issue with regards to financing from that perspective.
Thanks, Chair. So, Chair, I think there's some interesting dynamics And I think we've got our past leadership to thank for us to being in a fortunate position in that it's never been a challenge for us to obtain the funding that we required to achieve our objectives. But as Andre indicated, the stumbling block is the SCM challenges. Yes, there's various different contributing factors. In addition to the SCM challenge, it's also ineffective and inefficiencies within implementing departments as well. So from a funding perspective, we've been fine up until COVID, and I need to emphasize COVID, unfortunately, in view of the cash flow impact that all cities within the country experienced during that period of lockdown. So that was the first time that we essentially experienced our first challenge, but unfortunately we understood the situation as such and attempted to deal with that challenge in terms of funding constraints. Other than that, we've never experienced funding challenges. We now somewhat are overcoming that challenge of COVID with regard to cash flow constraints, and we pretty much now are very so back to where we existed pre-COVID. And the two key areas for us would be capital budget allocation and then our repairs and maintenance in order to ensure the facilities is maintained of an acceptable standard, and then also to deal with the issue of modernization. So if I was to then look at our allocations over the MTERF, we fairly well placed to be able to deal with modernization from a capital infrastructure perspective, and at the same time as well to deal with the aspects pertaining to maintenance. So our challenge has not been the budget, it's been more so the inability for us to spend our budgets. But also, to be fair to some of our implementing departments, when you require to follow a transparent supply chain process, you're very much dependent on those responders. And Andre made reference to the forklifts. We've been struggling to get a new forklift over the past 4 to 5 years. And it's very much so aligned to the fact that your service providers have not been responding to our attempts to put out. So it's a transparent process, and if individuals don't respond accordingly, yes, our implementing department are now exploring other alternative options, but at the end of the day, it does not help us operationally when we don't have the requisite tools to be able to provide the service. And then also as well, the constraints as a result of supply chain and our inability to respond immediately to opportunities, but more so to breakdowns, also has posed a challenge over the years. We went through a period of approximately 3 years whereby we did not have a dedicated service provider to maintain our plant for the cold room and ripening facilities. So that was an extremely challenging period for us because we had no service provider on site to immediately respond to a challenge, and then we need to explore other mechanisms within supply chain that would expedite appointment. And then also as well, the challenge of having multiple different service providers coming through on your site to maintain the plant and the cold rooms, etc. Thanks.
So you mentioned that you're the fourth largest NFPM in the country, so I suppose that puts you in the middle of the road. In terms of the volumes that are generated, that are going through the market itself, is the 5% levy that is attached to that, is it sufficient to cover your operating costs and to, for further capex expenditure and things like that?
That question that you posed from an overall commission perspective, I will probably rank that from a national perspective, in my view, to probably be the key question. Because time and again, my response has been, understand the detail of what goes on in the markets. If you were to interrogate the detail of the number of markets, my view would be, from number 5 onwards, it would be a challenge to balance the books. And that's plain common sense if you analyze the figures, if you understand it, if you have a simple basic handle of financial matters, you'll be able to pick that up. So that's why at times when I hear individuals and stakeholders make these comments, I'm saying, but it's a simple numbers game. If you don't have the volumes on your market floor, it's going to be a challenge to sustain that business. However, equivalent is that the lack of understanding, because turnover versus profit is two extremely different points of departure. But to answer your question specifically from a Durban perspective, I would say we extremely profitable, fortunately, and our bottom line in the last financial year was 43 million rand in terms of profit. And over the last 5 years, the cumulative profit is in the region of 144 million rand. Coincidentally, today would have been the day that we would have been reporting to our Political Economic Development Committee with regard to those details, etc. Thanks.
Thank you. So maybe just on that point, where would you rank the independents, the privates, your fresh link markets, for instance, in terms of volume? Would they sort of be right at the very end, 15, 16, 17 plus, or would they be just in terms of the volumes that are going through there? And
okay,
you
so
might not have exact visibility of that.
My response, I wish I knew the answer, then maybe we would be able to compete more effectively with those groupings. There's lots of speculation in terms of those volumes. However, in terms of municipal markets as such, we have, via our organization, South African Union of Food Markets, have our own process and procedure in terms of how we accumulate and manage the product, and also as well share that data with the department in terms of accumulation as well. The detail applicable to FreshLink and the other private organizations out there, we don't quite get exposure to those particular figures. But there are individuals out there who speculate that some of those volumes are not as significant as what we believe that to be. I think the greater volumes is the acquisition that occurs via major chain stores directly from producers, as opposed to concerns via those other platforms. Thank you.
Okay. And if they were sort of had the same commission structures as the NFPMs, I suppose there would be a counter to the sort of viability argument that if they could do that on the small volumes as an efficiency.
So from a competitive perspective, as you're aware, the cumulative commission payable to a producer is 12.5% on average. We're led to believe that those private organizations out there cut the commission significantly because there's only one player within that space, as opposed to us with regard to the municipality and market agents. We have, however, also created a platform for market agents to be able to facilitate direct loads to bigger buyers at a discounted commission to become more competitive, so that we prevent these groupings whom approach producers directly. So if it's a common producer who sends product to Durban, you could then acquire that via your market agent, and we would adjust your commission in view of the fact that the product is not directly coming through.
I'm not conflating sort of the two commissions, because the one is your markets commission, and the other one is your agent's commission. The one is regulated, I think that's capped at 5%, or is 5%. That's
so to clarify, we obtained authority then to reduce our commission as part of the process, with agents collectively achieving the objective to be able to attract your bigger buyers who bypass the market. They also reduced their commission. So collectively, we attempt to be more competitive with regard to your private organizations out there. But however, having said that, there was a push for that to happen, but there has not been significant volumes that's been facilitated via that mechanism. Yes, but there are words out there. Yes, but there is direct happening, but you guys are just left out of the equation, but there's no evidence to support such allegations that exist out there.
Thank you very much.
And those private markets could also be successful. The private sector tends to do things more leanly and meanly. With their feasibility study, less staff, have the exact ripening rooms based on the region that they sitting at, and not sitting with 30 ripening rooms, but only 3 are filled. So their expense is relative to the size and the community that they serve around there. So yes, I think that they are profitable and they are running a mean ship. but they seem at the moment regionally based, but operating on a bulk type of market system in terms of their distribution.
Thank you.
Maybe it might be appropriate for me to also share that we've commenced engagement with our market agents in terms of exploring an alternative model, and that alternative model is that of online trading, so that we attempt to become more competitive and also play in that space of those other individuals who also transact online. So we're hoping in the not too distant future we would be operating in that platform and attempt then to work out how things work. The risk factor is minimum, but it could become a very viable platform going forward as such.
Thank you very much. Chair, that's all from the technical team.
Thank you, Mr. Bowles. Mr. Murray, do you have any questions?
Thank you, Chair. Just really two questions from me. And the first is, I think, Mr. Msami, you indicated this at the very beginning. It was one of your first sentences in your presentation about almost Durban fresh produce market facing competition from other places. What I'm particularly interested in is sort of the viewpoints relative to the retailers contracting directly with the producers, particularly the breed producers. So I think two questions there. I mean, do you regard that as competition for the Durban fresh produce market? And secondly, the trends relative to volumes. So is it a situation where you experience a volume decline or a volume stagnation at the very least at Durban NFPM, and those volumes being channeled through the direct means for retailers? Just those two aspects.
Thanks. So any product that could have been ordinarily purchased on Durban market that was not purchased via Durban market, we would view to be competition as such. So any opportunity to increase our turnover, and that would ideally fall within that grouping. However, as I indicated earlier, the retail chain stores, in view of the volume of product that they're able to purchase directly, enables them to approach producers directly. However, having said that, very often you also have those retailers coming through on the floor to purchase top-ups, etc. And then also it becomes a challenge from from an agent perspective. Who do you take care of? Your buyers who are consistently supporting you versus the retailer who is coming through on an ad hoc basis to purchase his product as such. So in terms of trends, it's difficult for us to pinpoint in terms of the volumes, because we don't quite know precisely the volumes or that are acquired directly via the source. And then if you look at your chain stores locally, there's different mechanisms or platforms via which they purchase. There's a DC setup in terms of where product is distributed via local distribution centers plus national distribution centers. And then in addition thereto, they also have authority to purchase product via groupings of wholesalers who supply those producers, and then also the direct acquisition from farms as such.
Right. So yeah, maybe it makes sense that you might not understand exactly, what goes through the retail sector. But in terms of your own volumes, have they been declining over, say, the last 5 years? Or if not declining, then have they remained consistent? We've got an expanding population, there's more production, you would think the supply should increase.
Okay. Yeah, so we've been fairly consistent with a small growth as such. And to make a comparison in terms of last financial year, we experienced a growth of 21.18%, and the overall national average was 17.4%. So if you was to benchmark us in terms of the last year in particular, you would find that our performance in respect of both turnover, mass, has been substantially greater than that of national average. Yes, in terms of those areas. So in terms of mass in particular, we experienced an increase of 3.38%, while national was a negative 0.08%. And then with regard to market share, we experienced a market share of 9.66%, and that was an increase of 0.31% more than that of the previous financial year.
When Jason says national, he's referring to Durban market in comparison to the national fresh produce markets.
Yes. Thank you, Mr. Msami. Thank you, Chair.
All right. Thank you, Mr. Mare. Just maybe some questions from what you have said. Maybe I'll start with this question of transformation, because I think you are raising a very interesting perspective of how maybe we should look at transformation or meaningful transformation in a way with respect to market agents. What would be that meaningful transformation that maybe we can think of if we are to address that concern through this inquiry, just so that we get that message quite clearly from you?
Thanks, Chair. I think the concept of this hybrid model system, market model system, should be embraced, where you introduce a different operating or trading systems on the market. The two can work in tandem to each other, improving competitiveness within the industry, and at the same time addressing the aspect of access. Access in markets is key to transformation. The transformation of changing the color of the face can be done, but you want that color of the role player to be a success within the industry. And therefore, certain hard decisions must be taken. Like Jason has indicated, the current role players were not embracing of the introduction of a wholesaler on the market to address the aspect of transformation, which leads to improved access to produce. Access to produce. The market audience is there in terms of your buyer population. The buyers are on the market. The market agents entering the system needs to get greater access to produce. And the emerging producers need a system that would affirm them, to encourage them to want to send to the market, because their financing repayments is guaranteed. So that aspect, I think, must be embraced. The aspect of attending to the structure of how fresh produce markets, the majority are still structured, it needs to be looked into, because I believe that could also impede transformation. Turnaround time in terms of service delivery, most important one being maintenance, repair, and upkeep of your facility. Markets need a system, because it's a business operation. You're dealing with business people. Your suppliers are business people. Your customers are business people. They want quick turnaround in decisions being made. Under the current model, it's not going to work. So markets need to be formulated into some form of entity, if they are to remain within the municipal setup, to give them power to act. The supply chain can still be followed, but it needs to be followed within the market management system for quick turnaround, while complying. The prescripts within the SCM process is good. It's there to protect us against fraudsters, corrupters, abusers of the system. So though we mention the negative aspects of SCM, there's good reason for those. But you cannot run a business within this massive local government system while you need quick turnaround with regards to business operations and business decisions. And that is when it impacts us in terms of how you would structure markets or how you would ring fence a percentage of your 5% which you accrue to the municipality, so you have a guaranteed injection each financial year without, as Jason said, at the moment we don't have those financial issues, but political structures change, objectives and policy directives change. You could have a ring fencing system that guarantees a re-injection of X amount back into the market, so that you don't have to compete with housing, essential services, but you don't have to compete with housing and local community services for funding to fund the market. If I was a politician, I would put my funding into community service that's going to make my voter happy at the end of the day. The market doesn't attract much votes. So we need a system that is conducive to business, that would give us the power also to speed up transformation and service delivery and business decision making.
Jim, so I'm going to read out the report that I make reference today that would have been presented, well, it was, but done by my colleague, in terms of our political committee. Durban Fresh Produce Market once again emerged as one of the leading markets in the country, despite increased competition from private enterprises. In order for Durban Market to remain competitive and relevant within the fresh produce sector, it is imperative that the facility is adequately maintained and requisite funds are set aside annually for the upgrade and modernization of the facility, failing which the market performance will diminish and food security in the region will be compromised. The current operating model is not ideal and certainly requires to be reviewed. But Chair, to more specifically answer your question with regard to transformation and some of the changes, I would say we need to explore radical changes. And the radical change I would propose that you look into, but obviously in terms of legislation and the constraints thereof, your process can investigate further, that we explore set-asides. Set-asides from two perspectives. Set-asides whereby a consignment of product can be taken out. The percentage can be whatever we believe to be relevant, depending on the product, 10%, 20%, and set aside for your informal traders. But here again, not limited to set-asides for those particular groupings only, but also set-asides such that non-white salesmen on the floor also receive a significant volume of the product that lands on the floor, would directly benefit from the commission of those products as opposed to the generations and generations to come. Because otherwise, we're never going to transform this sector. In 50, 100 years' time, we'll be exactly where we are now if we do not introduce radical change as such. So I believe set-asides is one area that we should certainly explore from both disciplines as such. And then we made reference to the issue of equity. Your equity shareholding in terms of black shareholders need to play an active and meaningful role within the organization and not be looking out merely for the dividend I'm going to earn at the end of the period. We've also found from past practice, in terms of those HDIs we've introduced, if there are business individuals who are involved in multiple other business factors and do not focus primarily on building relationships with producers and buyers, they're unable to draw the significant volumes that's required for those businesses to be sustainable. Thank you.
All right, thank you very much. I think that's quite clear. And on the, I think there's this question that we are asking if you are able to answer on price transmission. So I think there's a lot of price transparency at the fresh produce markets. And are you able to, do you track retail prices relative to prices achieved at the markets, and what have been your observations if you do track those prices?
No, Chair. We don't track retail prices at all.
All right.
Yeah, so Chair. So whilst we don't track the comparative pricing from a retail perspective, yes, but we will track pricing in terms of our key commodities within Durban and how we perform against other leading markets. But whilst we don't track the pricing on retail markets on a daily basis from our own daily shopping, etc., we're fully aware of the significant gap that exists in terms of retail pricing versus that of your average pricing on markets per se. But I think also as well, it's also important at times that we compare like with like. When a consignment of product that comes through to the market, the quality may not be exactly the same with respect to all product that is on the load, and that also will contribute in terms of varying product from the same consignment in terms of pricing. Yes, timing in terms of supply and demand also plays a role. The demand at 5 o'clock may vary to that at 10 o'clock when the market's about to close and there's last few pallets of product on the floor, etc. So those are dynamics that we've got to take note of and consider when we establish whether the pricing is fair and reasonable as such. And then also as well, the dynamics of supply and demand, in that if I selling a product at a high price and I consistently over a period of time have no takers for the product, then I would at some point in time lower the price. But maybe buyer number one, to whom I said no to with regard to an offer at 5 o'clock, may be upset when at 6 o'clock I've said yes to the equivalent lower price because of the dynamics changing as such. So those are some of those real challenges that salesmen encounter or experience, and it's a difficult place to be in terms of finding a balancing act. Thank you.
All right, thank you very much. And maybe just a last light one, just to get a sense of the capacity utilization at the market right now. What's your current utilization, capacity utilization?
Jay, maybe you need to clarify capacity utilization in context, in which respect?
In terms of the volumes, whether are you able to accommodate all the volumes that are coming through? Are you over or under capacity?
Okay. Yeah. So Jay, it's similar to a question that Derek had posed earlier with regard to our floor space. As such, yes, we're very much in the main able to accommodate, and in those odd instances where we have an issue for a particular agency, then there also is cooperation between agencies to be able to accommodate. Because remember, we will never have a situation whereby there's 100% across all of them. So the fluctuating demands based on supplier-agent relationship impacts on that. So whilst you may have a situation where one particular agent or two will have constraints because of the historic allocation, there's cooperation to be able to deal with that situation. Yes, we're fortunate in terms of how we located in that. So whilst we may not be able to accommodate the product on the sales floor itself, there's other alternative options that we explore to be able to keep the product for that period of time up until the need or demand for that sale on the floor occurs. Thank you.
All right. Thank you very much for those inputs. Do you have any closing remarks you wish to give?
Chair, I would say this commission is an aspect we've certainly been looking forward to, and we believe this is probably the ideal platform to bring about contribution to meaningful change going forward. And whilst in your submission you've requested information pertaining to credit credit sales. I didn't quite pick up any follow-up questions pertaining to credit sales. So from a Durban perspective, there was only just one agency that's involved in credit sales, and we pretty much shared the details applicable to that particular agency. But in our view, credit sales is certainly viewed to be a conflict of interest, in that you have a direct interest in ensuring that those particular businesses to whom you provide credit remains a going concern. Otherwise, you're not going to be repaid the funds that you outlaid to that grouping as such. So we've commenced engagement a while ago with APAC in terms of our concerns pertaining to that matter. But yeah, I think it's something you would need to focus home in on in terms of the details applicable to that aspect. And then also, I've noted that you didn't focus on late sales, but we've shared our details pertaining to late sales. But from a Durban perspective, the percentage of late sales is somewhat insignificant if you relate the volume of late sales in relation to the overall turnover. But admittedly, we've not historically dwelled into analyzing the details to that level of extent, but it's within a reasonable limit. But even that is an area that we're looking at to work out, is this something that we should really even be tolerating in the first instance? Thank you.
All right, thank you very much for those inputs, Mr. Young and Mr. Munsami. So thank you very much. You are excused. Thank you very much. Thank you. We will be taking a short break now, so because we have our next stakeholder, which is APAC. We were to start at 1:15, but may we just, at least we have a meaningful short break, maybe 20 past. Is that okay? Or you want a bit more? But I think the stakeholder is here. I don't know whether you have any constraints that if we... Or 1:15 or 20 past? 20 past. 20 past 1 we start. Thank you. Good afternoon. Are you good? Good. Thank you. Good afternoon. We proceed with our session. The next stakeholder is the Agricultural Produce Agents Council, and the evidence leader, Mr. Mfundongo Wese, will take you through the questions. Thank you. Over to you, Mr. Ngobese.
Thank you, Chair. Good afternoon, Registrar.
Good afternoon, sir.
Yes. If you don't mind placing yourself on record by stating your full names.
My name is Cornelius Francois Knowles. I'm the Registrar of APAC.
Yes. Registrar, are you willing to take the prescribed oath?
Absolutely.
Thank you. There is a sheet in front of you there. You can just read the first part of it.
I swear that the evidence I shall give shall be the truth, the whole truth, and nothing but the truth, so help me God.
Thank you. So, Registrar, this discussion we have today is going to be divided into two. The first part will be you telling us about the role of APAC in the fresh produce market, generally what you are doing in respect of your members, generally as well in your interventions in the market if there's any issues, the things that you do, and also speaking on the submissions that you have made to the Commission and this inquiry.
Thank you very much.
The second part will be me asking you questions after you are done.
Thank you very much. Thank you also for the opportunity to be able to address you. I would like to go through a verbal submission. We've decided not to do a presentation. I know it's always very difficult if you do this online, but thank you for that. So I would like to just at the onset, for the record that that APAC, the Agricultural Produce Agents Council, recognizes the importance of this inquiry, and that we give our full support to the work that you are doing. Prior to dealing with the issues that we're dealing with today, it is important to highlight that APAC's legislative mandate, as well as the restrictions on its powers brought about by statute, and I'll say something about that soon, as there appears to be a failure to strike a distinction between those roles required to be fulfilled by institutions such as relevant market authorities, we've just heard from Durban Market, the Department of Agriculture, DALART, and vis-a-vis those to be undertaken by APAC. So I think it's important that we start with who is APAC. APAC is a council established in terms of the Agricultural Produce Agents Act. Our mandate is to regulate fresh produce agents, export agents, and livestock agents. Today we will only address fresh produce agents. We have a council of 18 council members. They represent agriculture at large, and they are constituted as follows. We have 4 persons who represent producers. We have 3 persons who represent fresh produce agents. We have 3 persons who represent livestock agents, 3 persons who represent export agents, 2 persons designated. This is designated from the Office of the Minister. 2 persons who represent consumers, and then 1 person from the department. And you will see that in the work that we do with the oversight that we are covering the total value chain. And that's important to note. In terms of capacity, my office, we consist of 8 members, and we serve the whole of South Africa in 3 areas in excess of 130 billion rand per year.
That includes myself as registrar, my deputy registrar, Ms. Danielle de Plooy, who's with me on my left. We are both ex officio. We work in an environment where we are responsible for our own funding. We do not get any funding from the department or government, and we are based in Pretoria, from where we serve South Africa. Our legislative mandate, it's important just to highlight the fact that we are a creature of statute. That means that we work within a specific frame, and that gives us limited powers to move outside that mandate of ours. The Agricultural Produce Agents Act is our mandate. This was published in 1992. I'll call it the Act from here on. The Act was for the first time updated in 2003, and it was updated by the Agricultural Produce Agents Amendment Act, Act 47 of 2003. The Act in itself cannot serve to manage the detailed operations that we look at, and as such we have rules that we publish every so often, and we've got specific rules for fresh produce agents, livestock agents and export agents. Rules for fresh produce agents were published on 19 August 2005, so it's been around for a while. And as I have said and confirm that we have rules for livestock and export agents as well. The objectives and functions of APAC, I would like to specifically read from the Act. The objectives of APAC, or Council. The objectives of the Council shall be to regulate the occupation of fresh produce, export and livestock agents, and to maintain and enhance the status and dignity of those occupations and the integrity of the people practicing those occupations. In other words, we've got a great responsibility to look after the people that we work with, the people that we regulate. We need to enhance that occupation, and we do so in various and very specific ways, which I will address shortly. The functions that we perform is also encapsulated in our Act in Section 10. The functions are to formulate policy, and I must just stand still here for a moment. Formulating policy is not writing legislation. The legislation will always be given to us from the Minister of Agriculture. The second one that we do is to establish rules and codes of conduct, and I will talk about that as we go along. Then some more operational aspects that we contain in our functions: to hire, purchase or otherwise acquire such movable or immovable property such to ensure the effective functioning of APAC. And then the last one, generally to take any such steps as it may deem necessary to achieve our objects, and that is the objects that I've referred to in Section 9. It's important to just stand still for a second and talk about APAC's funding. We generate our own income as mandated in the Act, and this is in Section 11. We look at two specific areas of income. We've got yearly maintenance fees that's similar to you paying to participate on a yearly basis, and then we've got contributions to the Fidelity Fund, which is a very important portion of the work that we do, and that is defined in Section 12. If I can just allude back to Section 11, the funds of the Council shall consist of money paid to the Council in terms of the Act, and all other monies which may accrue to the Council from any other source. Again, just to reiterate that we have no external funding or no funding from the department or government. In terms of the work that we do, as a regulator, our focus would be to issue Fidelity Fund certificates. I think there was in the previous session a question asked by Mr. Bowles whether it's a license or a permit. We issue licenses, but it's referred to as Fidelity Fund certificates because we work with a Fidelity Fund after all. Then it's important to note that we also work strictly and established in a manner with rules and specifically code of conduct, where we look after the integrity, objectivity and independence of the agents that we regulate. The very crucial role of an agent as an extension of farming activities and marketing must never ever be dismissed. They represent farmers and they are responsible for their livelihood, and this is really, really important because they are very good at that. Now, to just take a deep dive in terms of some of the core functions that we employ to mitigate risk and to make sure that we have proper and decent control. First and foremost, we look at accounting records or financial statements, which we require once a year. And this is done by an auditor within 4 months after the final date of an agency's financial year end. In addition, there's also interim audit reports that we require, but I think just please take the message that we are very focused at looking at accounting records because it tells a historical story of what the business was like in an agency. Right, so with the submissions, whether it's done on time, it's all listed on our website. Our website is in the process of being upgraded, so you'll see something very exciting very soon. But it's available there for everybody to scrutinize to see what the condition and status of our agents are. Then I also need to just confirm this. The role of an auditor should serve as an early warning system. So if we do get any reports from auditors and it's not concise or clear, or there's something that is showing us a red flag, then we will certainly investigate further and we will determine if there's a problem or not. In addition to that, we also work with IRBA. IRBA is the independent regulatory body for auditors. We've established a guide for them which came into effect. The guide's name is Guide for Registered Auditors Assurance Engagements on the Fresh Produce Agents Trust Accounts. This guide was formally introduced in 2020, and if I can point out one aspect that is important in the guide is the fact that we are now auditing or asking the same auditors to look at the trust accounts and the normal business accounts. This is the logic behind this is that it works on a scale. If there's something wrong in the one, it might reflect on the other one. So that is important, and it's proven to be very successful in the work that we do. Further work that we do, on a monthly basis, we require trust reconciliations from all fresh produce agents. This is important because we need to have a very focused approach on the trust accounts, what is happening in there. This gets submitted within 21 days after month end, and if not, we will take a specific action against such agencies. Simply because it's important that we have a focus on what is the flow and what is the current status of trust accounts. We require this to be under the signatures of directors so that we know there's a proper focus on that. Then I think from the office perspective, and this was something that we greatly enhanced during COVID-19, we do what we call compliance audits. This is more or less a desktop exercise based on available information from agencies to see whether payments match consignment finalization efforts. And we use that across South Africa at there's three systems we use. We use a Freshmark system, that was also mentioned earlier. We use a Fresh Link system, and then the Joburg market has got their own SPS system. So we have a look at all those systems. For us, it's also very important to verify and check the status and the accuracy of those systems on a yearly basis. If we work with systems that are not stable, then we certainly will not be able to do our work accurately, and we will not be able to take agents to task if need be. Right, so in addition, and sadly so, over the last few years, the audit focus or the stock counting focus at markets have been diluted, and there's various reasons for that. So we have established the last few years, we do stock audits at fresh produce markets, in addition to what the market authorities do. These are done very accurately in terms of accounting principles. We do not waver on that one. Our legislation also makes provision for entry and inspection. This is defined in Section 27 of our Act. We evaluate shortages and surpluses physically on the floor. We do so in conjunction with market agencies. We do so in conjunction with market authorities, and we make sure that when we leave there, that the stock is checked, and if there's anything that is either missing or that was not properly recorded, we will make a case and build a case on that. We certainly, behind the scenes, need to protect our farmers and agents alike. So we also look at unmarked produce, and we do consider doing audits on weekends as well, which is pretty interesting because markets operate on Saturdays as well, and this is important. I think if we talk about systems that provide food safety, food security, especially food security, our markets are doing exceptionally well by providing that over a 6-day period. Never underestimate what they're doing. In terms of registration of agencies and agents, I'll give the statistics on that now. It's important that Section 16 of the Act, the APA Act, talks about no person may, whose fidelity fund or registration certificate has lapsed, and registration certificate refers to livestock and export agents because they're not part of the fidelity fund just yet. They may not, or they may not be directly or indirectly involved in the management of a business if there has been any conviction of sorts. And this is very, very important because we do vetting and criminal checking and financial checking on all agencies prior to their appointment. So we must make very, very sure that whoever we appoint in a position as an agent has been through a specific system. And if you will, Mr. Chair, bear with me on this one. I think if you drive too fast, it doesn't mean that you're going to be a bad agent. You're just a bad citizen. But if you're involved in fraud, we will not entertain you as an agent. So it's important that agencies inform us on the status of the agents that they work with. If there's a termination of sorts, we want to know what has happened, what's the cause of that, what is behind it. Was there anything that we should know of that will eliminate an agent from moving to another agency? Then, in addition to that, I just want to jump back to the registration process. We facilitate what we call compulsory online training to all agents. The IP belongs to APAC, and the pass rate is very high at 75%, simply because we want to make sure that whatever individuals we put in the industry know exactly what is required from them in terms of legislation and in terms of good governance on markets. Then I think an important aspect that we address is simply the evaluation or investigation of what we call incompatible practices. I'm going to say something more about that, Rule 4 of the rules. We also then do ad hoc inspections from time to time. We try and determine improper conduct, and this is defined in Section 23 of the Act. And part of this is we allow for the role of whistleblowers because that is where we get very important information in terms of work that we need to do. So undue discrimination is very important, Rule 5 in the rules. And then I just want to, at this point, I'm sure there will be a question about this, talk about remuneration and the monies that agents earn. So remuneration may not be higher than usually claimed unless with the prior approval of the principal. And that is what our rules say, Rule 6.1. It's also, if I can jump to the role of farmers and how they operate at fresh produce markets, and we've heard a lot of information about the commission sales system, which is one of the best systems in our opinion in the world. It allows farmers to be price makers as opposed to price takers. They have options. farmers can decide where to market. They can decide which market to use. And that's very, very important. And I would like to also, if I can say one thing that is really important today, fresh produce markets provide farmers with a price signal upon which they can act. And please hear me very clearly on this one. Even if that signal is very weak, it allows the farmer to make a properly informed decision on where to market. If there's an oversupply in one market, they are able to read that. Historically, of course. Historically might also imply a few hours, but that's an important aspect to please note and to document. The price signal from markets is really important and key for farmers and their survival. Okay, then there's many other things that we look at. We look at farmer statements which must comply to specific system requirements at the market where they sold. This is also defined in our rules, what we need and what must be addressed. Payments to farmers must occur within 5 working days. This is important. It's documented in Rule 26.1. And then, I'm not sure if this was addressed, but produce that is not fit for human consumption must also be dealt with in a specific manner that is transparent and open for the farmer to understand why specific produce elements are not sold. When we look at markets and when we work with market authorities, they use what they call environmental health practitioners. These are people from the health department. They have what we call a discretionary power, and they can write off produce that is not fit to be sold. Very important, because our markets, as formidable institutions, also need to look at the quality of what they sell. Again, Mr. Chair, if you will bear with me, a market is not a place for sick and dilapidated fruit. If you send something to a market and it's rotten, we will throw it away. It's important that we look after the health of our consumers, and they must only get the best from our fresh produce markets in terms of what farmers supply. Okay, so it's important to also note that any agricultural product, any product that is delivered by a farmer, and if it's not sold within 3 days, the farmer, or if it's not sold, the farmer must be informed within 3 days. Apology on that one. Thereafter, if it's not sold on a weekly basis, the farmer must be informed. It must be transparent, and this is defined in our rules. Again, Rule 25.1. Any deductions that are done by agencies and market agents must be authorized in writing, so anything that is deducted apart from the normal commission that an agent earns must be mandated in writing by the farmer. This excludes the commission. Okay, advances to farmers is something that we are working with. We're very worried about that. Anything that happens must be done in writing. That is our advice and that is our guidance to the agents we work with. It could constitute a conflict of interest, but I will also allude to that some more. Right, then if we do our work in a proper way and if we are very focused on what we need to achieve, we need to sometimes invoke disciplinary processes. First and foremost, APAC will honor the findings of internal agency disciplinary processes if the charges constitute improper conduct and it was done in a proper manner and by the proper people. That's important. But APAC also reserves the right to determine the relevance, seriousness and fairness of agency disciplinary outcomes. If we feel that it is malicious and if it is tested and properly dissected, we will take a decision in terms of a disciplinary process. It might even require us to take further more serious disciplinary steps. Let me just then phrase it. If improper conduct is identified by APAC, we will constitute a disciplinary tribunal. This is an independent tribunal, and it will deal with the disciplinary process. It's constituted of a senior counsel, normally an advocate, somebody else in the legal world, and then there's an industry expert that will advise that panel and the tribunal. This is defined in Section 25 of our Act. It's important, the powers of the disciplinary tribunal is defined in Section 26 and can lead to the following: hefty fines, dismissal of agents, or the closing down of an agency, and we have done so sadly in the past. But I think it's important that if there is any misconduct, that APAC is the last resort, and that we will do what is deemed right for the industry, and a beautiful industry at that. Right, so in terms of Section 23, improper conduct is defined in Section 23, and let me just quickly read that to you. A fresh produce agent shall be guilty of improper conduct if he or she contravenes or fails to comply with any provision of the Act or the rules. He or she is convicted of an offence involving an element of dishonesty, or the last one, with due regard to his or her occupation, he or she has, through any other act or omission, conducted himself or herself unprofessionally, improper, or disgracefully. So that is how serious we are in terms of the work that we do. The physical work and the work at markets, we are mandated through Section 24, which talks about inspection and evaluation of the work that we do on market floor level. We can do this on two bases or two premises. The one is by our own accord. If we believe that there's something wrong, we will go to a specific market, we will do an investigation, and on the outcome, then we will decide whether there's a case to be made or not. And we do this on a regular basis across the country at all markets. The remedies of the outcome of our tribunals are defined in Section 25. Talks about, and I did mention this, sanctions, fines, costs, suspension, and withdrawal of fidelity fund certificates. This is important just to, at this point in time, confirm that it's only applicable to fresh produce agents. All other processes that we follow for export and for livestock are done via court appearances and processes for now. Then some of the other work that we do, and this is just for you to please take note, we, with great passion, look after the fresh produce agent, and we do this through training and consultation on a continuous basis. We formulate policy, and we are very focused that we need to be very relevant in the rules that we write with the industry. We do this hand in glove with our partners in the industry and our friends at all levels of the industry, to make sure that whatever we do is going to serve the interests of the industry. Hence, our participation here today. Then we attend to transformation matters and partake in transformation forums. We promote the APAC brand. We need farmers to know who we are, and we do general administration and many more. At this point, I think it's important and right to mention the shortcomings that we see in our legislation. We believe that continuous improvement and continuous revival and renewal is required. So as such, the department, in consultation with the department drafted a new bill. It was referred to as Bill 2020 initially. It was placed through a process, and it was found to be wanting, and it was referred back by the Parliamentary Portfolio Committee back to the department to be reworked. So at this point in time, there's no bill. It's going to be redone. And it's important to share with the Commission and everybody partaking in this session today that we want to be relevant. We want to have a piece of legislation that will serve the industry and the industry at large. To better the markets, we also work with them. We assist them with their bylaws in terms of giving inputs and providing them with the relevant information. But I think it's important, and I'm not sure if this was mentioned in these sessions, but we need to put on record where the mandate comes from to establish a municipal market. In Chapter 5, Section 83(1), Sub 1 of the Local Government Municipal Structures Act, specific constitutional functions and powers are assigned to municipalities. These powers and functions are embedded in the Constitution. This is Section 156, Sub 1, Sub A, allocating to a municipality the extensive, or executive rather, authority to administer local government matters as listed in Part B, Schedule 5. Now, this is important. This authority allows for, amongst other things, the establishment, control, and operation of fresh produce markets by municipalities in their areas of jurisdiction, but by virtue of Section 156 Sub 4, the administration of a market is assigned to local government only if it can effectively perform and administer this function locally and has the required capacity to do so. The reason I'm mentioning this is markets are not getting the necessary attention that they deserve. And this is partly why markets are failing. And we heard earlier that markets, the smaller markets, barring the top four, are having a hard time to survive. Please note that and take that into account. At this point in time, I think it's right to also just give the demographics of fresh produce agents. This is relevant information that is that we can pin to October 2023. We have 36 market platforms. That is 21 what we call markets of national interest, and there's a new market that was recently added, that is the Rustenburg market. In South Africa today, in October, we have 924 fresh produce agents, which constitute 160 directors and 745 active sales personnel. Every one of these individuals have been placed through a process at APAC. We know everything about them and we work with them to enhance our industry. Then I would like to move to steps taken to narrow and to end barriers to entry for agents. We have done as a council, myself, the chairperson, and the council members, we've done what we call a strategic planning session for council, and we've developed 5 strategic objectives, of which I'm just going to mention strategic objective 4. This is available on our website if you would like more information, and I do believe that was included in our submission. Strategic objective 4 reads as follows: ensuring an inclusive, and I would like to emphasize the word inclusive, and level playing field, especially for new entrants, this is agencies and agents, in line with the relevant regulations. The date that this was done was 23 November 2021. In addition to that, we have decided to also focus on inclusive growth, and we want to try and enhance the people that work at fresh produce markets. It's important that we share with you as a commission today the real happenings at markets. Markets are very interesting places, and we would want to endeavor to ensure that the dynamics and the wonderful institutions that we are talking about are actually the core of food provision today. Please never underestimate that. So, as a matter of trying to enhance the people that work there, we've developed a career path program to try and encourage and accelerate the people that work at agencies. Let me give you a detail. Somebody that's a laborer, we want him to grow and develop to become a gate checker, to eventually become a market agent. They work at the markets, they understand the processes, and I believe that if that inclusive growth can start there, and we're driving that process and that program in conjunction with our partners, the market agents. Then, of course, I think the focus on the establishment of inclusive or transformed market agencies. We take into consideration the National Development Plan with D-Date 2030, and then, of course, the AAMP, which is the Agricultural and Agro-Processing Master Plan. We also, in conjunction with the department, DALART, provide information/training sessions to farmers. These are small commercial farmers, new entrants to the industry, and we inform them on the usage of the aggregated services of registered APAC fresh produce market agents. They must understand that if they do use a market agent, that there's specific focus and protection from a regulator. My team and I are very focused on that. Internally, the APAC processes, when we work with new market agents and market agencies, we provide mentorship, initial support. We do follow-up sessions with them to make sure that they understand the processes like dealing with trust accounts, reconciliations, etc. We do some coaching, guiding, communication, support, and whatever is needed. It's important, and I would like to reiterate that this afternoon. If we work with agents, it's very easy to be the big brother in this beautiful industry and to say we will crack the whip, as opposed to being a caring regulator. We choose the latter, and we want to work with our people to make sure that they are sustainable. Of course, if there's malicious intent in this process, we will address with that. Lastly, we work with academic and learning institutions like universities. We try everything in our power to enhance our industry for agents. It is, of course, sometimes said that agriculture is not sexy. You don't get a fancy car and a cell phone and a laptop. But we need to get young minds and young people in this industry. We need to focus on getting young people to carry the baton forward. And that is an important aspect that we are focusing on. Just in terms of transformation, we do a yearly transformation survey. We do that between January and March every year. We include that in our annual report. We have to submit an annual report to the minister once a year. We look at things like race distribution, gender, and age. We also then, once we have the information, we report that not only to the minister, but we also report that to the Agri-BEE Council and the NAMC, National Agricultural Marketing Council. So the summary of our success with transformation objectives, our enabling legislation is silent on transformation. So nothing so stated in the APA Act informs that we need to do anything on transformation. But we choose as a council, myself, my team, and the council members to work as best we can to ensure transformation. So we need to rely on other legislation and cooperation of agencies to assist us with transformation, and I can, without doubt, state here today that we need to do more, so much more. So just in terms of summary of rules and regulations that do away with barriers of entry, Council's conflict of interest is an important aspect. It's defined in Rule 4 of the rules in respect of fresh produce agents. It talks about incompatible practices, or as we know, conflict of interest. We cannot allow conflict of interest. It will damage the reputation of our agents and ultimately APAC. And then also undue discrimination. I've already talked about that. If we learn of something like that, we will act, and we will act swiftly and fastly and effectively, because that is not what our industry should stand for. In closure, I would like to quote Rule 11 of the rules. The behavior of fresh produce agents towards the market authority, other fresh produce agents, his principles and APAC shall be of such a nature that it will foster cooperation and good relations. And I would like to add to that, good intentions. And my last comment for now, we believe that we should work with all industry role players to better probably the most beautiful of industries, agriculture. Thank you.
Thank you, Registrar. I have a few themes I need to cover with you. We'll deal with conduct, we'll deal with remuneration, specifically commission, we'll deal with membership, we will deal with the alternative platforms, with direct marketing platforms. We'll deal with the small farmers, and then we'll try and see if we can be able to deal with the NFPMs as well. So, starting with membership, Registrar, how many agents do you have? Just remind me, you said you've got how many?
We have 924. Apologies, let me try again. We've got 924 fresh produce agents. They are constituted as follows: 160 of them are directors, and 745 are active sales personnel.
Yes. Got it. And of these, how many are HDPs?
I would like to, if you will allow me, give you a pretty comprehensive answer on that. We have worked with the Agri-BE Council to develop a new scorecard to evaluate transformation. Because we have many elements, and I think if we are true to ourselves, we need to do so much more to get accurate information. Information in our industry is key to the success of our industry. So the number of agencies with shares held by black people are 31. This is of course a national perspective. The number of agencies where BEE certification or a scorecard at least were done is 47. Number of agencies with BEE directors, senior management, 22. Number of BEE directors or senior management that are non-executive for 30. Middle management in terms of BEE, 21. Agencies with junior management, 20. Number of agencies with BEE registered agents, 32. Number of agency with BEE marketers other than agents, 3. And then also important that if we talk about transformation, we also need to take into consideration women and youth. And that is important for us to understand. So number of agencies with BEE women, 53, and number of agencies with BEE youth. And these need not be salespeople, they are people working at the agencies. Youth, 27. Disabled, we also look at that, 9. Then the number of agencies that contribute towards skills development levies, 55. Number of agencies that claim from the CETA, 41. I think if we look at the learning program matrix, we've got 6 of them. Agencies that undertake learnership, internships, and apprenticeships, there's 15. Let me see what's still important. Number of agencies that contribute toward development of small black-owned companies, 36. And the last one, number of agencies that purchase from BEE compliant companies, 59. So you will see that we are very focused in trying to get the right information to get a full picture of our industry. To me, personally, I don't think it serves a purpose if we say we have 15 BEE agencies. What does it mean? We need to be very, very focused, and we need to work very hard with our partners and our colleagues and our friends and agents to ensure that whatever we do is going into a very focused direction. So I hope that answers your question.
Yes, it's quite detailed. Thanks for that, Registrar. Who exactly registers with APC? Is it the agency? Is it a person, a salesperson? What is the membership made up of? Who is held accountable? Is it the firm maybe RSA, for instance, is registered with you? Or is it the individuals within the firm that needs to be registered with APEC? Or what is the membership?
The membership, which I must just add, is compulsory. It's legislated. We do both. So we have to register the agency, so we need to understand what the business format is given to us, to understand if there's possible linkages to other companies. So we have to be very sure that we know and understand that. Then I think if I jump to the individuals, we do individual vetting, simply because they all are issued with Fidelity Fund certificates, and if it works both ways. But if the individual does something wrong, certainly the agency are supposed to take charge of that. Then there must be some sort of oversight. So the one cannot be divorced from the other. And we, when we do investigations or disciplinaries, we will determine what the situation was. But I can tell you, in all probability, we will take both to task.
And the individuals themselves pay the fidelity fee?
No. The agency will pay the fidelity fee on the basis of a sliding scale. So in terms of historical information such as turnovers, they would contribute a amount which is determined by council, not myself, but by the total council, and that is revised on a yearly basis. But the individual salespeople also pay a fee, and that fee we use that to defray any costs that might be necessary if we take any of them to task.
Yes. Okay. How much is the fidelity fee?
I'm going to ask my deputy just to answer that. She's got that on her computer.
Do you need the sliding scale?
Yeah, I can give
the summary of the sliding scale. Okay, just a moment.
Maybe while she's still searching, we can go to conduct. So we have had issues around specific type of conduct that is taking place in the market. Specifically, there is 4. Today, I think we picked up another one, which makes them 5. So there is the issue of reserve purchases. There is the issue of after-hours trading or purchases sales. There is the agents purchasing stock and reselling it. And there is the credit sale. And then there is the unfair prioritization of produce from specific growers. So those are the 3 which have been flagged in this process. Maybe we can start with reserve purchases, and just to understand what is APEC's view on each of these. Oh, you've got the sliding scale. Yes.
Rudolph. Okay, can we give you the answer to the question that we've just
yes.
had a look at?
Okay, in terms of the sliding scales for the 2022-2023 financial year, so ending March 2023, varies from, it begins in category A, 6,400, and to category F, 43,000 Rand per year. And then I can give you the breakdown of the agencies, all of the agencies that falls into each different category if you need that detail. Okay, so category A, which is 6,000 Rand, 6,400, sorry, I'm rounding if that is okay. We have 24 agencies. Category B, which is 12,000 Rand a year, is 9 agencies. Category C, which is 25,800 Rand per year, is 14 agencies. Category D, 32,000 Rand per year, is 9 agencies. Category E, which is 38,000 Rand per year, is 16 agencies. And category F, 43,000 Rand per year, is 25 agencies.
And what is the basis for those categorization?
So we get the yearly turnover from the market. We obtain the information from either the independent auditors or the market authorities. They verify the yearly turnover. We calculate then the average monthly turnover, and then it depends on, the biggest scale is 20 million and above turnover per month. So yeah, the category A to F is divided. It's exactly like the income tax sliding scale.
Yes, F being
same
the,
principle.
F being the biggest.
Yes,
Okay.
F being the biggest.
Okay, thanks. All right, I think we can continue with the issue of the various practices in the market. We'll start with the reserve purchases. What is the council's view on that particular practice?
We're talking about something called reserved sales. So reserved sale is allocation of produce to a buyer that will ultimately come at a later stage. In principle, this is supported, but it must occur within a strict framework that is approved by the market authority and then superseded with approval from us. It's important that if you to understand that can be misused if it's not properly managed or scrutinized on a daily basis. So there's certainly room for that kind of business, albeit that it varies from market to market. But I think the principle is one of making sure that it is done according to the rules and probably an SOP at the market, and if not, what would the consequences be? Now, let me just mitigate or talk about the mitigation here. The question must be asked, how do we know what is a reserved sale? How do we know what happened? And how do we know if it did not occur within the rules of the game? At various markets, you get a proper printable audit trail that allows you to see if these transactions were finalized, if they were done in the proper way, and important, if the price is actually the price that was paid. Because price determination occurs at a point in time. So if you then, let's say, by the off chance that this happens a few hours later, then you must still make sure that the price is accurate as to what it was when it was determined. Mr. Young, in his previous submission, or no, Mr. Sammy spoke about the deterioration, not deterioration, but the sliding scale going down in terms of price, the closer they get to the end of the day. Then there's pressure on the system to get these things out, and that is when the price will drop. We must be very sure that if we talk about reserved sales, that this is done in the correct way, because it's slightly different, but it's all about price determination, and is it accurately finalized or not. And one of the mitigation issues here is that if it might be a way to sort of expand to the next day, to carry over, and that is a major risk, but APAC has a great focus on that.
Yes, so the requirements for it will be what? Who's the customer, perhaps, who has reserved the purchase, and when did that occurred, and what is the price at which the customer reserved that specific batch for? Is that what the requirements are?
That's accurate, and is it captured in the system? It's not haphazardly done. Is it captured? And that's the important thing, because the point in time allows you traceability back to determine if it was done in the correct way, and then finalized in the correct way.
Yes. So in your view, this does not, if done properly, it will not affect that price discovery process in the market?
No.
Why is that?
If it's done in a system, if it's documented correctly, it will not affect.
Why? Because there will be a reflection of the price at a specific moment
Yes.
in time.
Yes.
And then after our sales,
After our sales is something that I'm not supporting. You must understand that the concentration of buyers at the market is very specific to determine the price. So everybody wants equal access to the produce that is available at any given time in the morning. Sales occur normally between 5 to 10 or 6 to 11 at various markets. And the purpose for that is to condense everybody there so that they can barter or negotiate the best deal that they can. But everybody must have equal opportunity. And I think it was also previously mentioned that supply and demand plays a huge role here. So if we start diluting this and we start extending this and it goes beyond the regulations that we write and that we promote, then it's impeding on the price. And it is not something that we support.
yes. So have you observed it before?
Have we?
Have you observed have you seen it occurring or heard about it occurring or knew who did it? And what steps did you take?
The answer is absolutely yes. We are privy to something like that most recently, where produce get loaded out of the market. There's no authority, no signature, no capturing, and that constitutes a disciplinary process on our side.
Yeah.
If there's no traceability on that, it's not transparent, and we will not allow that. It's as
Yes.
simple as that.
Yes. Has it occurred recently?
Yes, sir.
How often does it occur frequently?
Well, I couldn't answer that in all honesty, but if it does occur, we will definitely take that individual or individuals to task. And you must understand that I don't think we are here to, as I said before, to bully or to be the big brother. We are here to ensure that there's consistency and good governance in a well-structured industry. So the matter that we're talking about is still sub judice, but we will deal with that, and if time comes, we will be able to share the information.
Yes. And market agents purchasing own stock?
There's two takes on this. Number one, if you, and it's a little grey. If you purchase something for personal usage, I don't think there's any problem with that. But where do you draw the line? If you start purchasing as a market agent, you cannot play that dual role. Because ultimately, where we sit and what we believe is you will benefit yourself, and if you then speculate with produce, it means you're playing both sides of the fence. And that is not allowed.
Yes. Has it occurred before?
It has occurred before, yes.
And you found someone?
So we are very strict on that, so we will definitely take some action on that.
You have found someone before?
Yes. And we, I have to be very careful, but I don't think we are here today to showcase how strict we are. We are here to showcase how fair and how responsible we are. And I can tell you that we will take action if need be.
Yes.
And have done so in the past.
Okay. And credit sales?
Credit sales, I would like to quote from the rules, if you will allow me. This is section 32, or not section, rule 32.4, that states the following. And I would like you to please hear specific words that I'm going to use. A fresh produce agent shall not be entitled without first having obtained the written approval of his principal, that's the farmer, which approval has been granted with reference to a specific purchaser. We need to know who the buyer is, the identity of whom is disclosed in such a manner, in such approval rather, to sell his principal's fresh produce on the credit of his principal, provided, however, that such credit shall not be granted for a period which expires after the date of which the fresh produce agent has to account to his principal's has to account his principal concern in terms of Rule 32.1. Rule 32.1 talks about the 5-day period, which I've alluded to previously. So payment must occur to farmers within 5 working days. And this is important because 5 days means that if you sell 1 unit of produce today, that you have 5 days to account to the farmer in terms of only 1 unit. That talks a lot to cash flow. It talks a lot to getting the money back in the hands of our farmers who need that to do their business. That is primarily one of the reasons why that rule was established, the 5-day rule. So taking it back to credit sales are allowed, but under strict conditions. If we find agents that are wanting in this aspect, again, it will require us to take responsible action.
Yes. It seems credit sales are related to agents purchasing on stock, because when the Joburg fresh produce market came here this morning, they indicated that an agent they suspect, because they don't allow credit sales in the market itself. So what they say is probably the agent is buying the stock on behalf of the customer who probably has ordered it, and then advance the credit to that customer. In other words, it doesn't have to pay the agent at that moment, because the agent has already paid the fresh produce market and hold the stock on behalf of the customer, and then for a customer to come and get delivery probably at a later date and then pay the agent. Is that not something which takes place in the market?
I'm sure that it takes place. Is it allowed? No. So you must again understand the conflict of interest. You cannot be a let's call it a credit provider. You have to focus on the job at hand. When I started this discussion, I talked about the role, the important role, and the enhancement of what we need to do with our agents. We have to enhance that career profession. If we don't do that, you can't be the master of everything. Yeah? There's a definite conflict of interest there. And yes, I believe we need to do more, but if we get to that point, it's not allowed. It's clearly defined in the legislation, our rules, how it should be dealt with.
Yes. So when the agent, how would you detect this? If the agent has bought and paid the market, how would you pick up that it might be a credit sale done in this fashion by the agent? How would you be able to pick that up?
It's very, very easy. The systems in use at fresh produce markets, the ones that we check and verify on a yearly basis, provides detailed information. Number one, if you have a buyer's card or a tag, it will be in somebody specific's name. And it will ultimately then be in the agent's name. Again, if you look at some markets, how can the market agents be amongst your top 20 buyers? Certainly you need to know there's a problem. Again, we need to also understand that this is done sometimes with the approval or authority of the market authority. And I think that is something that I do not want to venture on, but it's worth noting. Then on the other side, if you are the agent and you did buy this and you do want to speculate, there's some other legislation that comes into play. You cannot put a unit of a product, let's say it's Farmer X. You bought it as Agent A. You can't put that on the market floor under your name as Agent A. There's a specific legislation. The Product Standards Act addresses that the branding on the box only belongs to the farmer, Farmer X. And if it's wrong, then you are contravening their act. And you probably know of the company called Procon, They are the ones responsible to look after that. And we will work with them if so required. But you can't do that. It's gross mismanagement of the brand of the farmer.
Yes. But in this case, it might be that he buys it, but he doesn't put it on the floor to speculate on it. He's already an existing customer, but the customer probably can't pay at that moment. He buys it for that customer to secure probably the price, and then the customer only pays later, probably at a premium over the price that he has paid. Is the agent allowed to earn any other income other than commission?
No. Simple no.
Okay. All right. The other factor which probably is very important for small and medium enterprises, the practice of the agent, is this one of unfair prioritization of produce from specific growers. Well, what is your position on that as APC? For instance, if an agent refuses to sell, can an agent refuse to sell if he's approached by a grower to sell his produce?
The answer is no. We talked about enhancement of this career and this profession. The fresh produce markets serve exactly that purpose. That if you are a small grower or a small farmer, that even if you deliver one box to the market agent, that market agent must sell that, or at least endeavor to. We do not look kindly to agents who discriminate against any kind of farmer, whether they're good or bad or big or small. That is not the purpose of this value chain. That is why markets are established, and that is why markets play the important role as intermediaries to consumers. So remember the choice, and I spoke about that that price signal. The farmer has the option and the choice to decide where he wants to market. And if he chooses to market with somebody, and there's no good cause that he should not do that, the answer is no. And if I talk about good cause, I can't think of anything that would, or nothing solid enough that would eliminate a farmer to deliver to a specific agent. So the answer is no.
Yes. Now there is a subtle form of refusal where you will probably take the produce from the grower, but when it's on the floor, he markets the other guy's products more to the customers compared to the... How would you detect that? I mean, if he prioritizes on the shop floor?
Yeah, that's a very difficult one. I cannot properly answer that. I think it's got something to do with labeling as well. You know, sometimes when we get bags of pumpkins, they're not properly labeled. It's prescribed, both in our legislation and in the Agricultural Product Standards Act. So it must be properly labeled. So what happens is a buyer might buy what he believes to be the best quality, and it might be a different farmer. If it's not marked, then there's definitely a problem. Now, the interesting fact that our rules purport is the fact that the agent has the ability to deduct the cost of marking a farmer's bags if the farmer did not do so, which is not happening in practice, but there is a remedy for that. But difficult to detect unless you get a complaint. And I cannot give you an easy answer that we can see this or trace this or historically find this. It's very difficult.
Yes. Just then, probably in summary of these concerns, especially those which you identified as issues, would you say that they have an impact on what prices are discovered in the market, especially those ones which you've identified as concerning to you?
Again, a difficult answer, but I believe so. You know, if there's anything that in a market that is not properly in a box or marked or not traceable, you definitely will have a problem. Again, even if the quality is not consistent to what is on the floor, there will be an impact on price.
Yes.
And that is my personal experience and opinion.
Okay. Do you, just to move now to the issue of small agencies and also farmers, do you have an approach or rather a requirement for your established agencies or agents to do some sort of social responsibility thing to uplift other agents, enterprise development, things like that? Do you have something in place within APEC that sort of requires the established agents to assist the smaller agents?
The answer is yes, especially when we talk about new startup agents. We link them to larger agencies. That's a prerequisite, and we call it a mentorship program to guide them, to assist them, to help them, as long as it takes. I think it should be very clearly stated that larger agencies should assist the smaller role players. But the interesting thing is, and what we know and what we see and what we work with, is that there are amazing agencies there that do that by default. We don't have to ask; they do that. They play that role to assist. It's beneficial to our industry and the value chain that if everybody works together, everybody benefits more.
Yes.
And from our point of view, we try and guide. We cannot instruct, but we guide and we try and assist and we request. And we see wonderful initiatives happening. It's incredible.
Is there a form of reporting to you what they've done?
There is, and that is reported in the transformation survey. You will see and you will note that in terms of BEE compliance and the Charter Council, we report that and we've aligned with them. We've asked them, what are the elements that you look at so that we can enhance that further downstream in our business? And I think we're getting a picture at least. We need to know what we don't know, and now we know more. So that to us is really important.
Yes, and are the agents who have not complied with that?
Yes, certainly.
And what have you done with those?
Well, we always try and work with agents in a positive manner. As I said and stated before, we do not want to be a bully of sorts. We want to stimulate business. If I can explain it like a referee, if you're too strict, there's no flow of business. And if you're a weak referee in a game, then there's no proper game. So we have to find the perfect balance of trying to convince people, for the greater good, to do what they need to do to stimulate our industry. And sometimes when you go to markets, you find that there's a great responsibility amongst the people already. It goes and it works both ways. Sometimes your smaller agencies don't want to be helped. So let's just put that into context. I think if there's a proper balance and if we are responsible enough to see and identify that, certainly we'll try and do whatever it takes.
Yes. So you have not seen a need to strong arm anyone currently because they seem to be assisting where they can.
Yeah, as my deputy now points out, we work very hard on that. We had a session with the Matlotsana market yesterday, especially about looking at their composition and how we can enhance and how we can create more and more business, more competition, how we can serve the industry and the farmers better. So the answer to your question is no. I don't think we choose to go that route. We choose the route of least resistance and trying to work with the people as opposed to to try and push them in a direction which they do not want to go and where we will ultimately have trouble. Just bear in mind, our mandate
Yes.
is silent on this.
And the grower side, do you have any approach as well regarding the taking up of produce from small and medium enterprise growers?
Yes, I have a very, very strong opinion on that. I think if you put your fingers in the soil, you plant a seed, you're a farmer. Again, if we revert back to the markets, markets have a responsibility to deal with farmers and their produce. The question you're asking is, by default, is how do we enhance the SMEs? How do we make sure that we can better their position and better their growth, their turnover, their ultimate survival? I think we did touch on mentorship. We did touch on taking hands and partnering with other agencies. But there's a lot that people can do. There's a fallacy, and I'm going to choose my words very carefully here. But there's a fallacy that that black farmers believe that they should only do business with black agents. I don't believe that to be the case. Our agents, our phenomenal agents, are there to serve everybody. And if we can get that recipe right, then we will do well. Now let's just sort of dissect that a bit. If we can create a situation where your smaller or your new entrants from farming side are led to believe that they can do business and grow and be the next generation tomorrow, you can be very successful. The question is asked how. You must understand, perhaps you must sometimes consider starting on the buyer side. If buyers need specific produce, and we reverse engineer this process, and they tell agents, I will give you a commitment if you can give me this project, or this produce, or this quantity, or this specific quality. And in return, you can get specific acknowledgement, you can get specific BEE accreditation. Then we will be looking at a new model. We will be doing well. I don't think we've done that yet. So certainly there's always an option, there's always a plan B, and there's always a way to rethink, to remodel, and to relook. I hope that's answered your question, but I would like to just add something to the previous gentlemen that were here that spoke about the market and upgrading the market and fixing the markets. I think the same process also applies there. If we throw money at a market and infrastructure and we paint the roof, it's not going to enhance the business. We need to reconsider remodeling our processes. How that needs to be done remains probably future music. But I think we are at a wonderful time and point in our industry's current progress where we are having active conversations about that. This forum, this platform, is exactly that, for which we are very, very thankful.
Yes. So in your view, generally, then, you think there is no bottleneck for small and medium enterprise farmers to access the market agents?
I don't think so. As a matter of fact, I think it's a huge opportunity that our agents can enhance and grab with both arms.
Okay. On to the direct marketing platforms. Do you know which are those?
Just say that again, please.
They call them direct marketing platforms.
Yes.
Yes. Do you know where are these located?
You must understand that when I spoke about the number of agents that we have, we said we've got 35 market platforms.
Yes.
So we do have platforms that are off market. but they are not direct platforms. They operate within the parameters of the APA legislation, number one, and they fully subscribe to our rules and legislation. I think what you are referring to is possibly other channels bypassing markets, direct role players which are not registered with APAC. You must understand that again, when I spoke about the options of farmers, a farmer can decide how to market and where to market. They can also decide to bypass markets. But here's the kicker. If you do the direct channel, you have no protection from APAC. Our Fidelity Fund, which I have not alluded to just yet, serves the purpose if there's misconduct or if something goes wrong in that marketing channel. Ultimately, that Fidelity Fund of ours, as a fund of last resort, and that's important to note, will serve to remunerate farmers for losses incurred if we can establish improper conduct. So obviously it's a process, but APAC serves specifically the purpose to protect the interest of farmers.
Yes.
And we do that through our agents. And I can tell you the agent model, I said this before, is one of the best in the world. We must look after that. It allows that price message, that message going to the farmers. It allows them options. If we don't have a system like that, I believe our food systems are very, very cheap. We will pay much more. It will eliminate the smaller role players. Markets and market agents serve that purpose specifically.
Yes. So your observation then in general, when you compare the growth in these various platforms, are the national fresh produce markets stagnating, growing? What's happening to them when compared to these other alternative platforms for the sale of fresh produce?
Yes, sir. I've got a very strong opinion on that as well. The Durban market presented their growth. I would like to give you a national perspective on growth in terms of turnover and then mass, or the metric tons that was sold in the 2022-2023 financial year ending 30 June this year. So as opposed to the previous year, we had a growth of turnover of 14.93% nationally, and the mass grew by 3.3 million metric tons on a figure of 2.4% per year on year. So if you look at the model of supply and demand, both the mass and the turnover grew, but it grew in proportion that the turnover figures were higher. But is that good enough? Or if we consider that the amount of people staying in South Africa today is 60 million people, right? And the growth in the population rate is about 750,000 people year on year, given deaths and births and so on. Everybody must eat. And if we look at those figures, it does not talk to that growth of the population. And that should be a worrying factor. And for me, one of the reasons, one of many, is the mere fact that our markets are being neglected. We're not reinvesting in our formidable institutions. That is where price is discovered. That is where so many people create their jobs, their income, their livelihoods. And I understand this, municipalities have many issues. They have tough budgets, but your municipalities give attention to housing. They give attention to water these days, to electricity. And where are markets featuring? Right at the bottom, you know. So I think we need to engage the discussion, at least and at most, on how do we look after our formidable institutions. You know, everybody talks about all these other issues, but food is the core essence of what we do, and it's the basis of the economy, farming. So we need to be very passionate about this, and we need to be the custodians to make sure that these things are given the proper attention.
Yes. Do you see dangers in the growth of these alternative platforms compared to the national fresh produce market? Especially for the small enterprises, probably even small agents?
My answer would be no, on condition that the markets come to the realization that they've got new competitors that they have to compete with. Competition is good. The farmer cannot be the one selling his produce, and he will find a way. And if there's an alternative platform, and the private sector is very, very creative in finding ways and finding solutions and finding options. Those are functions that, in my opinion, should be better dealt with. We've had these, I don't say we need to stagnate. I say we have to expand and grow and try every new option. Let's be creative. We're a creative nation. Certainly we can find amazing opportunities and solutions. Ultimately, we have to look after the farmers, the interest of the farmer, and we need to grow the industry. I also on sharing figures. We talk about turnovers of 23.3 billion rand that we sold last year. Is that justified? I don't think so. We have people that only have one meal a day. How can we be arrogant enough to talk about figures that we're doing well? We need to feed a nation, and we need to find ways to stimulate food systems in South Africa, and we do that through dialogue, through all the necessary role players.
All right. Just one last question from me, then there's another question from the technical team. I guess the main question is what should be how does APEC ensure that the members of the public, maybe customers, the buyers, the purchasers at the national fresh produce market, of course the farmers themselves, are able to access the services that you provide? Do you have a way of making sure that whoever has a complaint is able to come to APEC?
The answer is yes. I spoke about two things. We do investigations by own accord, so we determine that there's a problem. We see something that's wrong, and we feel there might be an issue, so we will investigate that. But I think our biggest source of success in finding problematic situations is simply by getting complaints. And as I also said, we entertain whistleblowers. Whistleblowers is really an important part of the work that we do. Albeit that sometimes when you work with whistleblowers, you need an affidavit, or you need a complaint, or you need more subsistence to specific problems. But if we get proper guidance and we know where to start, at least we can fiddle. And I think we've got a great responsibility not to negate that in any way. We have to, when we hear something, we have to investigate.
Yes.
And we do so.
Yes, so your complaint process is easy to access for anyone?
Absolutely.
Okay, do you have a website? Is it appearing on a website?
Yes.
Okay.
Yes.
Thanks.
I would, if I may, sorry for the interruption, forgive me, but I think our social media pages are doing exceptionally well. We showcase where we are, what we're doing, and we also allow people to act on those pages, to contact us. And you must understand that I think as a last resort, somebody will phone us. It's interesting that if somebody complains to us, they must know that we will investigate. But we don't want to upset the agent. We don't want to upset the market.
Yes.
And those are practicalities that we deal with. but I think when we get the complaints, we act on them.
I see. You have received complaints in the past financial year?
We get complaints on a regular basis.
All right, just two questions then from the technical team. On the issue of credit sales, is there a limit on how many credit sales an agent can undertake?
No. The answer is no. There's a few conditions. If a credit sale is properly authorized and there's money and it's finalized within the specified manner and time frame, then the answer is no.
And the last question is, are you aware of cross-directorships amongst your agencies that are registered with you?
We are. As a matter of fact, what we have engaged now is to do a CIPC search on all the directors, because we have everybody's ID numbers. So we will be embarking on that project within this within the new calendar year, and that points out if there's anything registered, anything that is a problem that we should explore and look at.
A shareholdership as well?
Yes, no, absolutely.
Yes. Well, if you can share that with us when you are completed with that project.
Okay. I think shareholdership is just a little bit more difficult, but we are certainly going to do a CIPC search on our members.
Yes. All right. Thanks, Chair.
Thank you, Mr. Ngovese. Mr. Mara, do you have any questions? Thank you.
Thank you, Chair. I have a number of questions, but I think in the interest of time, I'm going to limit myself to two questions here. And I think, Mr. Knowles, the first thing is, when you spoke about the composition of the APAC Council, you mentioned 18 council members representative of business. 3 of those are representative of market agents. I also understand that the way the council is made up is prescribed by the Act itself.
Yes.
So the Act says this is how it has to look. So maybe on that, I understand the current representatives of that sit on the APAC Council, the market agents, or the RSA Group, Subtropico, and GrowFresh. Is that correct?
Yes.
Is there any sort of rotation, mandatory rotation, where the agents get swapped out? So what is the sort of length of duration of a market agency that sits on the APAC Council?
The period that they are elected for is 3 years, and they are eligible for a re-election for another 3 years, after which their term will end.
I see. So a maximum of 6 years, and then they have to vacate, and a new agency has to take their place.
Yes.
All right. And I mean, if you can perhaps just explain the sort of rationale of why the legislature wanted the sort of business representation as part of the regulator. And I think what is perhaps from an outside view strange to understand is that if you're a regulator and you're meant to regulate an industry, but the industry is part of your council, it's essentially self-regulation. And I think that's, I mean, from our perspective as a fellow regulator, it would be strange for us to have business sit on the commission executive and make decisions. So maybe if you can just explain the rationale for us behind the legislation being drafted in this way.
I can venture a guess, because I was not party to that constitution. But let me answer this in terms of the practical approach. Or let me ask a question to myself. What happens if we need to discipline one of the council members for misconduct done whilst being a council member? Do we do that? Of course we do. I think having people on our council from the industry actually allows us to better serve the industry. And certainly, if we talk about the word self-regulation, I think that is the direction where we are moving to. Self-regulation does not eliminate the drafting of the primary act or the APA Act. That is always going to be done by the department and then ultimately on behalf of the minister. But if we draft the detailed rules and regulations that we work with, this is done in conjunction with our industry partners who are agents and head of agencies. And ultimately, I think if they understand what needs to be done, and they are truly independent and not biased, then we get good results. And the size of this council is pretty large. It's larger than my workforce. But that allows us to properly explore, disseminate information about a very complex and probably misunderstood system. I said this in the beginning. I think if we properly understand what we are working with, and if we can convey that sort of message to you as a commission, to the industry, to farmers, to consumers, we will do so much better. It's not a place where you walk in and there's a till and you do a sow. The complexities, the detail of how we work, the detail of how we protect farmers, how we work with agents, how we work with markets, and it's an amazing journey that we are on. I can tell you that. So, just to answer that, I think having agents there better serves the work that we do.
Right. So maybe, I mean, in terms of their practical involvement, I mean, and you mentioned a small workforce. I mean, are these representatives? And I imagine I know there's a subcommittee for fresh produce. It's in your annual report, right? So in terms of the work of, for example, the subcommittee on fresh produce, I mean, how active are these council representatives when it comes to decision-making, drafting rules, the sort of day-to-day operations of APAC?
Yeah, it's an important question because they are very active in the decision-making and partaking in the committees and the committee system that we employ. But the day-to-day tasks are clearly defined in the Act, that is my responsibility, and my team and I will perform that. So if you really want to keep it simple, the council members serve to provide us with guidance and corporate oversight, and we report to them, and they give us strategic direction where we need to go and what we need to address. And that's why we have strategic planning sessions, and we've got strategic objectives. But the day-to-day functioning, on the basis of what we get from there, is my team and I's responsibility. Section 8. Yeah, Section 8 of the Act.
Right. So similar to a board of directors in a corporate entity.
Yes.
That's what the council is with their 18 members. Similar.
Similar, just more difficult.
Yeah. Right, and then moving on to, you mentioned also the amendment bill of 2020 being sent back from the Parliamentary Portfolio Committee. I'm particularly interested in if they identified specific deficiencies in the fresh produce amendments. If you can maybe touch on the sort of major ones that you're aware of. I mean, the Act tried to correct some things and update some things. It was sent back. We're obviously interested in the fresh produce portion of the deficiencies, if you can just touch on those.
Allow me to then just say why the Act was, why we've done what we call a bill. It's an amendment of the Act. You need to understand, if you amend an Act, you can only amend specific issues. You cannot add or slip new issues in. So you can't try and use an amendment to promote a credit policy or something new. You can only focus on amendment. And I think the last amendment that was properly done was in 2003. That's 20 years ago. You can imagine in our environment how things change over 20 years. So probably we need to consider a total revisement of the Act. So I don't think there were major issues in terms of fresh produce. We predominantly focused on looking at livestock agents and export agents and things like trust accounts, and we had a lot of problems with that. And it was referred back because the parliamentary committee, they were of the opinion that we have to, via the DALAT, we have to do a lot more work to public participate, to industry participate, to get to a document that will be watertight and take us into the next few years. You will note that between the initial publication, 1992, and 2003, there was about 10 years. And I think that is a good, solid structure to work on if you want to do an amendment or an update. But if you want to start fiddling with new things and you have to enhance and come up with new ideas, you have to consider putting a new act in place.
Right. So is it safe to assume that, I mean, the focus is not so much on the fresh produce amendments, more towards the livestock, or is the sort of public engagements and the sent back to the drawing board, is that all encompassing of all sectors of the APAC?
Yes.
The second, just to clarify.
Yes.
Right. Thank you, Chair.
Thank you, Mr. Murray, and thank you, Mr. Knowles. And let me just ask you one or two things. Because I think there's a submission on these issues. Is it produce reservation, late sales, price discrimination, credit buying? And I ask you from the point of view of the regulator as to who's probably best placed to deal with this. It seems to me this could be behaviors that could distort the integrity of any fresh produce market and price discovery. So they could well be distortions, but who's best placed to deal with this? I think there's a submission that says, well, we could look at this in terms of the Competition Act. I'm still not sure about that, but it seems you do have some powers to deal with these issues. What's your view on this?
My view is a simple one. We must be very careful to believe that APAC can do everything. We can't. Our primary mandate is looking after the agents, working with them, enhancing that career. Right. But there's definitely a linkage in working with markets, simply because that's the platform where our agents function on or from. So if that is a dysfunctional platform, it will ultimately affect the agents. And that is important enough for us to at least engage or take a stance where we will indicate that we will work with those structures and we will give our input and guidance where necessary. So we do not want to shy away from anything, but we do not want to take a task that is not supposed to be with us by default. So we do not want to be superheroes. We want to just focus on the task at hand, do our regulation of agents, and then, where necessary, support and give inputs, and do whatever it takes.
Okay, so thank you for that. And just on the number of agencies, now I need to really use the correct phrasing. The number of agencies registered, not the agents, not the individuals. Of the number, what number did you say again? I think
98.
98. How many of those are active?
All of them.
So in all the, because I think so they're scattered throughout our markets. So all of these are active.
Yes.
So 98 active. All right. But do you know active in which markets?
Active in most markets. There's one market of which we've removed the agency, and that is the Umtata market. Sadly, the market is not operational now because we had to remove the agency, and that was done on a let me call it a process which is still also sub judice.
And on the, maybe if we can just clarify, on the commission, the agents commission, so the agencies commission or agents, I hope you understand, what's the regulatory landscape now on the on the commission, do you have any role to play there?
If you will allow me, let me just go there. Yeah. Okay, just remember what I said. Remuneration, that is commission, may not be higher than the usual claimed. So if you look at fresh produce markets, the going commission rate is 7.5%. And then with the ad valorem commission, which is the market commission, it equates to about 12.5%. And that is the cost of marketing for the farmer. Not the only cost, but that's through the market channel. You'll have transport and you'll have packaging and all the other costs. That's what I'm referring to.
All right, so on the going rate, I just want to understand this 7.5, because I think it was regulated before. And
Yeah.
currently, what's the state of play? Do you have any role to play? So if the market agents or agencies are charging maybe exorbitant commissions, would you have a role to play there, or is there a cap, as it were?
There is definitely a role to play. So if that is misused and we can identify that, we will act, and we will make sure that it is in line with legislation. But I think the biggest focus we have is looking at price discovery. So farmers will complain with us. There's a fluctuation in prices. Your normal tendency is it will go down, a very solid curve. And then if it is a problem that you sell at a very low price on day one, and we get a complaint, we will investigate. There might just be something there, and we found that in the past, that something is wrong, or it's booked incorrectly, or there's malicious intent. Whatever the case may be, we will act on that.
All right. Okay. Thank you very much for the clarification. Do you have any closing remarks?
Sorry,
you
Chair,
wish
before you
to? Oh yes. Sorry,
Yes.
sorry. I didn't see you, Mr. Ngobese.
Yeah, thanks for
you-
asking about the commission, Chair. I'd forgotten about it. You've covered it. So there is one question of clarity. The figures that you've given us of agents, are those just fresh produce, or they also include livestock?
That is only fresh produce.
Okay.
We have the other information or the other figures available, should you be interested. We'd gladly share
We
that.
just needed fresh produce.
Yeah, just fresh produce, yeah.
Thanks.
Okay. Thank you, Mr. Ngobese. In fact, there's this point, and I know that there's a lot of personal information around it, around cross directorships, because we also have put it as our own question. And I think we might have to engage with you and see how best maybe we can access some of the information and maybe fast track the CIPC inquiry process for ourselves, because I think we need, we at least have to know this in the next 2 to 3 months at least. I don't know what are your timelines. Maybe if your timelines are quicker, then at least it helps our processes.
Mr. Chair, my deputy is just asking me who's going to pay for this, so please don't hold that against me. But I think please allow me to work with you and let us find a solution. I think for us it's very important that we put answers on the table, and if we need to expedite this one, let's do so. You have my firm commitment on that.
No, thank you very much, Registrar. Do you have any final remarks?
Yes, sir. Can I just say the following? Number one, I would like to sincerely appreciate the work of the Commission. I think we have from the onset indicate our intent to work with the Commission, and we've done so extensively, and we appreciate the time that you've spent with my team and I. We have all grown a little older, but that's just a natural occurrence. So please, thank you very much. We absolutely work in the most beautiful of industries, and it's my appeal that going forward we look after this industry and we do whatever it needs to take. We need to know what we don't know, and I think this is the session that will provide us with that. So thank you very much.
Thank you very much, Mr. Knowles, the Registrar for IPEC, Ms. Duploy, Deputy Registrar or Registrar for IPEC. Thank you very much. You are excused. Thank you. We will be proceeding with the next stakeholder in the Tshwane fresh produce market. We are probably just 10 minutes behind schedule, so what we'll do, we just ask for 5 minutes to prepare for Tshwane, and then we will resume at in 5 minutes time. Thank you. Thank you very much. We proceed. This is our last stakeholder for the day and for this first set of public hearings. The Tshwane Fresh Produce Market. The evidence leader is Mr. Bowles, yeah? Mr. Bowles, yeah. Yes, is Mr. Derek Bowles, yes. Thank you. Over to you.
Thank you, Chair, and good afternoon, everyone. Gentlemen, can I just ask, just for the record, please, can you just state your full names and your designations?
My name is Chifiwa Matibe Madima. I'm the divisional head responsible for Tshwane Market.
Good day, my name is Ruben Jones. I'm the Director Market Finance.
Thank you very much. We've been conducting these proceedings in, well, at least under oath, and you'll notice that there's a document in front of you that's laminated. If I can please just ask you to, first of all, state that you don't have any objections in taking the oath, and then second of all, just reading from that, and just confirming your names as well. Thank you.
I, Chifiwa Matibe Madima, I do not have any objections in taking the oath.
I, Ruben Jones, don't have any objections to taking the oath.
Thank you very much. So what we've done is we've divided these sessions up into two parts. You'll be allocated a certain amount of time up front, I think it's 30 minutes, just to tell us a bit more about just going to have to read that note. Apologies.
I, Chifiwa Matibe Madima, swear that the evidence I shall give shall be the truth and the whole truth and nothing but the truth. So help me God.
So the scriptures tell me not to swear by heaven or earth, so I will affirm my oath, if you don't mind. I solemnly affirm that the evidence I shall give shall be the truth, the whole truth, and nothing but the truth.
All right, thank you. Now it's official. So as I was saying, we're going to divide the session up into two parts. You'll be allocated some time up front just to tell us a bit more about the role that the NFPMs, the Tshwane NFPM plays, and maybe just raise some issues that you would like to discuss. And then the second half will just be the technical team has prepared some questions for you based on your submissions, and we'll just run through those. If that's all right, we can maybe kick off. Thank you.
Thank you. We are from Tshwane Fresh Produce Market, Tshwane Market. So Tshwane Market is a fresh produce trading platform. We were established way back in 1918, that makes the market 105 years old. But the premises that we operate from, which is in the west of Pretoria, we moved there in 1964. So we've been there for 59 years. I'm saying this because at some point, I think in our submission, we'll talk about the aging infrastructure, which is one of the things that was highlighted in the questions that we received and which we have already responded to. So it's quite an old market. The infrastructure has been there for quite some time. So we are an active participant in one of the country's marketing channels. We actively participate in the domestic market. We're one of the national food municipal-owned fresh produce market. There's 16 in number. And we occupy the second spot in terms of market share. We are responsible for 18% of the market share when you compare us with other national fresh produce markets. So we are wholly owned by the City of Tshwane Metropolitan Municipality. That makes us a public institution. And in the main, we service the agricultural industry in the country. Here we're talking of fresh produce industry. We, just like other markets, we charge a 5% ad valorem commission to farmers. So that commission is paid by the farmers. And this is for using our platform in trading fresh produce. We have a total of 11 market agencies that are operating at Tshwane Market. The charge agency fees or commission just like any other agency operating in other 16 other fresh produce markets. It's in the range of 5 to 7.5%, but mostly 7.5%. So all our transactions, they are done through the Freshmark sales system. And this will include sales, it will include deliveries, consignment control, cold stores, banana and banana ripening. We ensure that our market agencies are paid on a daily basis, meaning that for the business that was concluded today, payments will be effected to agencies the following day, which will be tomorrow. There is a fidelity fund, which I think APEC spoke about, which protects, the farmers, in the main. And we also offer complementary services to our farmers. This will be our ripening facilities and also our cold stores. And then we charge a fee for that, and those fees are renewed or reviewed on an annual basis. We also have a retail center at the market. We have tenants that are operating from there, trading with fresh produce, trading with meat and also dry groceries. We also have a processing center where processors in the main, they are processing fresh produce. And also, we also have got a meat processor there. And we charge rental for use of those, facilities. Yeah. Thank you. Mr. Jones, maybe you want to add something on that.
Yeah, I haven't really prepared anything, but maybe just a few observations. And that is that where do you get a place like the market that is open and transparent, where a producer can deliver his product to the market with minimum entry requirements? In other words, all he has to do is comply with existing legislation as far as his product is concerned. He can choose any of 11 market agencies to sell his product. And no one tells him, what the volumes must be that he must deliver. Whereas if you look at other distribution channels, if that same farmer wants to supply the existing retailers, they have very stringent requirements in terms of that. And they pick the eye of the crop from that farmer. And even as you have heard with Tiger Brands, they won't even take the excess production. The market offers all of that to the farmer. You can send your crop, right, whether it's A grade or B grade or C grade, and the market will then try and get you the best possible price. And I would like to correct something. The market is an out-of-hand sales system. The product is sold out of hand. It's on a one-on-one negotiation basis, and the price is determined on the basis of the current supply to the market and what the perceived demand is for the product. But on a one-on-one basis, it's very, very difficult to truly perceive what the depth of the demand is. So it's not a perfect supply-demand model. So if anyone is trying to assess this institution on the basis of a perfect supply-demand model, you're not going to get it right. I think it's important to understand that. And it's important to understand as well that when you look at the market from a holistic perspective, in other words, you look at what potatoes are selling for as a commodity group, you're going to have significant variances, or fruit, or whatever, across the spectrum. Because the product mix in itself is very influential in terms of how price is determined, and even your customer base is very influential. You cannot put, and we know this from experience and from talking to our stakeholders, you can put a shop down in one place, and you will have that shop booming, and you can replicate that same model somewhere else, and it will not boom in the same manner, because the customer preference changes in area to area, even within one city. And so that would be true even of a country like South Africa, where you have all these markets spread across the country. You have different socio-demographics. you have different income strata across those different regions and the ability to pay for a product. So you cannot expect that a product sold in Tshwane for 10 Rand is going to sell in the same ballpark figure in another area. Not even in Johannesburg, because Johannesburg is a totally different demographic to Tshwane. Totally different customer base, maybe even a totally different product base in terms of the mix, and that all influences at the end of the day what the price is. And I see that the Commission has been grappling with this issue of why can't we get some kind of parallel between the markets? You can't get a parallel between the markets. This is not like a manufacturer or a retailer that has a set price for which the product is sold. That's a very easy parallel to make. So I just want to point that out to you. You have variations. You have variations in brand, even with the same quality. Brand plays a role. You know, why do people go buy a certain brand? I'm not going to quote brands here, but we all have our preferences. Even within this room, we don't buy the same box of oats if we want a porridge. We go buy different brands of oats. We buy different types of shirts and whatever else. And that filters throughout the market. So it's important to not to try to put markets into a perfect box when you're trying to understand the supply-demand mechanism of a market. You're not going to get there. You're going to have to be flexible and understand that these deviations are going to be there, and you won't always be able to understand them. And the only way to understand them is you're going to have to go in deep. I mean, you're going to have to go in really, really deep. Because products are not just 1 kg on the market or 2 kg. It can be 200, 500 within any product grouping. And they all have different prices. And they all have different demands for those products. So I just want to say that because I think one of the questions you really are grappling with is the whole issue of price and how price is determined. And I really want to say to you, get away from thinking you're going to get this wrapped up nicely. You're not going to get it wrapped up nicely. There's just no ways. The important thing that you should be seeing on the market is there a fluctuation in price or not? Do you see that based on certain volumes coming to a market, the price is changing? Is the price reacting to volume? And if the price is reacting to those volumes, then already you have some form of evidence that price is volume sensitive. And I've also heard it said that the buyer is a price taker. The buyer is not a price taker. That is a wrong statement to make. The buyer can be a price taker and a price maker, just like the agent can be a price maker and a price taker. It depends really on what product is on the market and how much of that product is on the market. If the market is oversupplied, the buyer becomes a price maker. If the market is undersupplied, the agent becomes a price maker. So that role is interchangeable. It's definitely interchangeable. Sorry, that's all I want to say for now.
Thank you very much. And maybe let's start with that then. We heard a little bit earlier about the sort of demographics, at least on the supply side at the Joburg market, and that they were talking about a 90-10 principle there. 90% of the produce was supplied by your sort of commercial farmers and 10% by the small-scale farmers. Does that picture look pretty similar in Pretoria as well?
Yeah, that picture looks very much similar to that of Pretoria. And probably it will be similar with also other markets, because we must look at where this is coming from. This is coming from the primary stage of production. If you look at what is happening at that stage of the value chain, 90% of the produce that comes through commercial streams, they are produced by, in the main, large, wide-scale commercial farmers. And not more than 10% you find that it's coming from black farmers. So that it mirrors what is happening, in the country as far as the production stage of the value chain, is concerned. So that will then transfer from that stage even to the marketing stage, of the value chain, which is where we operate.
Does the Tshwane market have any sort of initiatives to assist those small-scale farmers in getting more traction in the market and increasing their market share?
Yeah, what we do is mostly we engage with the provincial departments of agriculture. We want to try, and our focus is more on exposing, those farmers to the Tshwane market, and also help them understand how the market operates, because there are a lot of farmers out there those who are not participating in fresh produce market, or who are not trading through Tshwane market and also other municipal-owned fresh produce market. They don't have a good understanding of what is happening there. They don't understand even the deductions that apply. And that's why most of the time then they will say things like they've been cheated, things like their product was not sold, or the agent didn't make an effort in ensuring that the product sells. So our focus is more about helping them to understand the market requirements, because there are market requirements, and also the farmer's responsibility. The farmer is responsible for preparing the product for the market. So basically, the product sells itself at the market. It's different from other areas where products are sold, where you'll find someone who will be presenting that produce, to potential buyers and trying to convince them, to buy the product. But then when you look at the approach of fresh produce markets, Tshwane in particular, it's a practice which it cuts across. The produce is displayed. So that's why I'm saying that the produce, sells itself. So the product must be appealing to potential buyers. So it is the farmer's responsibility to make sure that it appeals, to potential buyers. It's just like all of us, in this room. When we go to food supermarkets where we shop, the normal thing for us to do when we get there is we look at the product, we touch it, we turn it around. So what is it that we are looking for? We are looking for something which is appealing, that we find to be appealing. So whose responsibility is that? It's the responsibility of the farmer. So some farmers, they think that that is the responsibility of what? Of the market agent. So our program, I would say our intervention, when we're working through provincial departments of agriculture, and this happens, regularly, when they come through to the market, or when we participate in events like market days, we try to put that message, across. And that is how we assist them to, to be active, so that at some point in the shortest period of time, they can be active participants in the fresh produce markets.
And how long have you been sort of implementing those programs? And have you seen some success in terms of that, in terms of the numbers coming through?
Well, it's difficult, to say that it has been, successful as such. But there are farmers that are, participating. The numbers will fluctuate over a period of time. The program has been there for as long as I can remember. I joined Tshwane Market in 2019, and then that's something which I found them, doing. But I think overall, I think it's beneficial, because if we don't do something like that, then we will not touch people or farmers that we have touched, or that we have already touched, and we have sold this market as a market channel, of choice, for them. Some of them, they started participating in such in bringing the produce to Tshwane market after we have engaged, with them.
All right. Maybe moving onto the buyer side. I mean, I think we received a lot of submissions, and I think it's almost trite now that the retailers have moved away from the NFPMs, and for whatever reason. But so what does the sort of demographics look like on the buyer side at Tshwane? Is it mostly informal traders, wholesalers? Who are the major buyers?
Well, in terms of value, when we look at our numbers or statistics, it's kind of like split, 50-50. We're getting a lot of, informal buyers, or buyers that are coming there, they procure, smaller quantities, and they come there on a regular basis, like on a daily basis. So it's around 50-50.
And I mean, the strategic...
looking at the value, of the transactions. Yeah,
But I suppose
the
one
process.
can't discount the strategic importance, and you were mentioning, Mr. Jones, about how important these markets actually are and the function and the role that they play. But what is sad to see is that the submissions are coming through about the general states of the markets themselves, the infrastructure. You mentioned that they're aging, but also the lack of maintenance and the lack of the reinvestment of that 5% commission, which is generated from the markets. I know you had some very strong views on the recommendations in the Section 7 report that was I think the latest one was 2006. Maybe you can give us your views on in this public forum about what's happening at the Tshwane market and the relationship with the municipality.
Okay. The Tshwane market is a division within a department in the city of Tshwane. So we are treated the very same way that any other division is treated in terms of budget allocations. We go through the same process. We make submissions just like any other division and the department, and our submission will then be considered. So when the city allocates budget, through our engagements with them, we wanted to better understand how allocations are done. What are the things that they look at when they decide to allocate the budget to departments, to divisions? And then in the main, they look at what is contained in the IDP, Integrated Development Plan, which is a contract between the residents and the city. And they also look at what is available in the kitty, what they can afford. So by just looking at those two factors, let's talk the IDP. When the IDP is put together, there is public participation. The municipality will call members of the public in a given region and then listen to what they consider to be their priorities. So the market, it's not a residential area, it's a business area. So, and as far as the IDP development process is concerned, then you find that the market and also its stakeholders, in the main the farmers and the market agencies, there's no active participation in that process as the market. So meaning that the priorities of the market, it becomes very difficult for those priorities to be considered and be included in that document. Our stakeholders, they come from different parts, in the main different parts of the country. There are those who are outside the province. So they wouldn't come to Tshwane market even if it's arranged, such a forum, it's arranged to come and make inputs. The same also with market agencies. They are there in the early hours of the morning, and after trade, then they leave, they go home. And those public participation forums, usually they take place late afternoon or in the early evening. Most of the time it's arranged like that. So it means that because of that, then the market's requirements and priorities, they don't get considered, in that process. That's the first thing. Second thing, what's available in the kitty. The municipality, naturally, I think they will look at what their priorities are. Municipalities are there to provide basic services to residents. So when you look at what we do at the market and you look at what municipalities are expected to do as part of their constitutional requirements or mandate given to them through the Constitution, we are 2 worlds apart. We are there to trade. We are there to provide a fresh produce trading platform. Municipalities are there to provide basic services to residents: water, electricity, roads, houses, health services. Stormwater drainage must be working, roads should not be pothole infested, things like that. So we find that the difference in terms of the business that we do and what the municipalities are responsible for, it has an impact on resource allocation. And what we have done about that is that we have started a process wherein we're looking at an alternative service delivery model, because we have the view that for as long as the municipality, the market, it's under the municipality, under the current institutional arrangement, it will be difficult for the kind of resources that we are looking for to come through, and for the municipality, for the market to be adequately, supported, particularly from a budget, perspective.
Yeah, I think that, one has to consider that when you look at the Tshwane market, we were, in fact, I would say, the flagship of the industry at one point in time in terms of the standards that existed at the market and the general perception of people that were dealing with our market. Our facilities were really well kept, well maintained, and we had a very disciplined market in terms of how we were doing things. We had a organizational structure where 210 people were employed at the market, and we're talking as far back as 20 to 26 years ago. Today we have 139 people that are employed. The market has grown. We have a second market hall that was added. We have a retail center that was added. We created new processing facilities. We extended the ripening center. The market has grown and grown, but when you look at the operational level, what has happened to the market, there's been cutbacks in terms of staff, there's been cutbacks in terms of budget allocations. There are years where the market doesn't even get a capex budget. In your first session this morning, there was reference to say that the market's investment is R1 billion. That figure is wrong. The market, if you want to build a market today, you're going to need far more than R1 billion to buy a market like ours or like Joburg. You're probably talking 2 to 3 billion minimum to build a market such as ours, the one that has all the infrastructure on it. And when you consider that you don't even get a capex budget, how can you upgrade your facility? How can you repair leaking roofs? That's not possible. You can't give an institution like the market a capex budget of 10 million and expect management to do miracles. If you want to call management incompetent for getting 10 million, then I think that you're misguided. I don't know what you're on, but you cannot see the reality of the situation. Market management has to get far more than a paltry budget allocation of 10 million or 15 million or even 20 million. Just the whole approach to the market is wrong. When I first started working within local authority, the market was a department. We reported directly to the city manager. The market's budget was discussed with the market back then. Since then, the market has become a division within a department, and we are now part of a bigger budget within a department. Back then, the market was able to have its own tenders, but all tenders have been centralized. So we become reliant on tenders within the city to try and do what we're doing. And there are many challenges with that. You've heard about the SCM processes from the Durban market. I'm not sure if the Joburg market also referred to the SCM processes. But the SCM processes are really problematic. And the appointment of service providers is equally problematic. So how can you expect market management to be agile and to respond to the stakeholder needs when it's dealing with a system that is so bureaucratic and slow to address our challenges that when you look at where we are, one is afraid to say that the ship has sailed. That's the reality, as far as the infrastructure that is concerned. And I would want to ask that the issue of infrastructure shouldn't be the primary discussion here. Does it make a contribution in terms of, how competitive the industry is? Yes, it does. It makes markets less competitive. That's what it does. Because how do you attract buyers and producers to the market? But when they come to it, horror of horrors, must I do business here? You don't want to do that. You'd rather turn around and go somewhere else, as an example. But we must also be realistic. The decline in markets is not recent. The decline in markets comes over decades. And one must look at this holistically. But the problem is that people are looking at the current problems, and they're trying to say that this is the major problem with markets. This is not the major problem with markets. This is one of the problems with markets. And quite rightly, Mr. Medema has said that we are looking at, trying to get approval for the market to have a different service delivery model. If the city was in a situation where they were well funded, where they didn't have their own financial challenges, where they didn't have their own service delivery challenges, I think the city would be an ideal place for a market to be governed from. But I think, unfortunately, the city is no longer an ideal place where a market should reside, unfortunately. And I think that the city needs to look at that, and I think the city needs to change the service delivery model for the market. And I'm not saying that the market must become privately owned or privately run. One must always bear in mind that the market has many different dynamics. And you need an impartial management body at the market that has regulatory strength and that can bear to weight the regulatory aspect that applies to a market. If you don't have that, if you allow the stakeholders to self-regulate, I don't support that at all. And in fact, I've often questioned why APAC does not have representatives from the market, from the cities, from market management on its board. Surely we should be on that board, but we're not. And I don't understand why that's the case. Because surely we should balance the other stakeholders in that forum and bring a market view and perspective to APAC. But we're not there. So I disagree that one should allow self-regulation on the basis that people will act properly, when we know in our society people don't act properly. We can't go around with rainbow-tinted glasses and think everyone now is going to do what we want them to do. We know they don't. So you can't build systems solely on the basis of trust or an ideal society perspective. So I think I might be rambling, but the ideal for a market, it has to come under the skirt of the city. It's got to become independent, and it's got to be able to prepare its own budget. It's got to have its own SCM processes. It's got to be able to recruit its own personnel. If you really want to turn around here, everything else that you're doing, you're going to be putting a Band-Aid on the system. And I've repeatedly said, whenever these interventions come up to address the problems with markets, there's an action that takes place, but an action without a sustainable alternative is basically just a Band-Aid. And that is all that's been happening. So the truth of the matter is, I think this has to be elevated into a national dialogue where all the role players are present and where the future of markets is once again determined and what that future should look like. I don't think any one role player within this industry should be making that decision. There should be a collaborative effort between all the stakeholders. And I would venture to say that if they change this model, they really are tinkering with a system that is going to have even far more negative consequences long term. If you're afraid of saying, if the markets are not there, right, there are consequences in terms of what's going to happen with the supply of fresh produce. And you can go look at, the rest of the world, and you can see how it works there, and you can try and get an understanding of that's the path we're going to follow. And if you don't want to follow that path, let me say to you, you take out the regulatory aspect of market management from the system and you self-regulate it, you're going to head down another path which is not going to be any better than the one that you are now trying to change, or the one that you don't want in terms of the markets not being there. Markets have a role to play. We are a national asset governed by a local authority. This entire system is a national system. You've been told here today, and maybe even in the past by agencies or whoever else, that this is a national system. But it's not seen as a national system. It's seen as a local authority system. In the Constitution, it says the local authority must manage the market. And yet we've seen that when the local authority manages it, there are discrepancies across the system. So how do you address the discrepancies across the system? You've got to come with something different. And maybe the local authority is no longer the ideal partner for a market. And maybe that has to change in the Constitution. I don't know. I'm not the lawmaker. But I'm saying we are destroying the system. And role players are reacting right now, and they want to take over, and they want to change things, and they think they can put down a better alternative, and I don't support that. I think they're heading in the wrong direction. They need to look for this solution to be migrated into a different type of environment, and where market management stays totally independent of them. If you want to go have a look at markets that at this point in time have its own challenges, go have a look at markets where certain role players are dominating those markets, and you'll quickly find certain things there that you don't want to find. That's all, Chairperson.
Thank you. Look, so I take your point about the faults and the problems in the system, and we heard from two other national produce markets this morning, and who also had similar problems to what Tshwane has. But it does seem, at least insofar as Johannesburg is concerned, that the city of Johannesburg, things are turning the corner, at least the impression we got. I mean, it might be different on the ground. But, and I'll ask them the direct question whether they supported the model as it currently stands. And they both did. Durban and Johannesburg both did. They said that it's working. So is it possible that the system can work in its current guise? Or is it maybe just a function of the local municipality, being Tshwane municipality, which has dropped the ball, and like you say, it's maybe just gone too far? Can it be pulled back without a system change? Because we know, we've heard from Delrad about the issues around the constitutionality of the system change. But, is there something that we can do now in Tshwane to turn this around?
Well, I think if the market is supported with adequately supported with what we have been asking for a long time. But having said this, at the back of my mind, I'm thinking that it takes me back to the discussion that we have had internally on several occasions, wherein we came to a conclusion that we will be putting a band-aid, to the wound. We need a more sustainable a solution which is sustainable. If the market is allocated enough resources in terms of budget, and the market is exempted from things like moratorium on filling of vacancies. He has indicated that way back we had X number of people, and then the market expanded in terms of facilities. Put up the banana ripening facility, cold stores, retail center, processing, and all that. And then if you compare the number of people who worked at the market then, compare them with people that we have now in our current staff complement, we have got fewer people, right? We've got more work to do and fewer people, and we have not been able to, employ people when people leave the employ of the market in the main due to natural attrition. We have not been able to do that, and that has put a lot of strain on our operations and put a lot of pressure on management, because we're expected, to run that facility with the legal resources that we have. So it's like the attitude is make do with what you have. And for how long? So a lot of things are not going right because we don't have, resources. We don't have adequate funding, to do proper repairs and maintenance of the infrastructure. I indicated earlier on in my submission that that facility is like 59 years old. A lot of things will have to be, stripped and then new things put in. So allocation of resources, that's very important. Then the second thing also that is also important is if those resources are allocated but you can't implement project because of a supply chain process which has been centralized, then it's a big problem. If the market does not have its own tenders, and what do we mean by that? We are overly dependent on other departments. Let's say, for example, we want somebody to do general building maintenance. We'll have to check maybe with the department like group property management if they've got contracted services for that scope of work. And then we make use of those service providers. Because in the city, in the municipality, you can do that. So if they don't have them, then you're in trouble. And we have been in trouble before. And some of the services that we require from service provider, they are specialized. We have an ammonia plant. It has to be maintained. I don't know of any other department or a section of the city that has got an ammonia plant. And this ammonia plant is connected to our cold stores. It's for our cooling system. We have a ripening facility. The type of expertise that we require there is different from what is required generally, in the municipality. The type of cleaning that we do there, it's specialized. You are cleaning a food handling facility. It's different from cleaning a public space like parks, offices, and the like. So we need our own tenders. We need our own, we need a supply chain process that will support us in executing the projects and doing the work that we should do, so that the market can be turned into a market of choice for the farmers and also for the buyers. As it is now, it is very difficult, to sell the market to our stakeholders, to say to them, bring your product here, because we are found not to be compliant on a whole lot of, areas. Occupational health and safety, food safety, fire, and the like. So we struggle with, with such things. So to answer your question, can things be turned around? I think the solution to the challenges that we're experiencing, it's an alternative service delivery model, totally different. Because for as long as things will be going through the very same channels that they're going through, we are likely to experience, the same frustration, the same delays. Because remember, the supply chain process, which is centralized, is there to service the whole city, all the departments, in the city. So we compete for the attention, for lack of a better word, compete for the attention of the supply chain management department. We want our tenders to go through, or contracts that will service us to go through, that supply chain process. And we are not of the view that, the current setup, even if money can be made available, but then the way in which we do things like procurement, and also if we're not exempted from things like moratorium on filling of vacancies, we don't think that will turn the tide. We need a more sustainable, solution, which is an alternative service delivery model. Thank you.
Why did you question whether the Tshwane market should still be placed? Mr. Jones, I'm referring to what you said earlier about, I mean, with all the problems that you've got, and I mean, there's many, you're still the second biggest market in South Africa. So I think strategically and maybe, you know, regionally and where it's placed, and maybe it's got to do with population and all of these other factors, but there's a need for this market, as bad as it is. So, I mean, I understand what you were saying, that you know, the stakeholders are maybe placed elsewhere, but this is food security. You know, we've received numerous submissions about how important it is and how important it was, you know, became during COVID times, you know, in securing food for the population. And I mean, we're also dealing, you know, most people in this room are not buying from the market themselves. They're not buying from street vendors. We're buying from the retailers, and the retailers have moved away from the markets. These markets are important because they're serving the person on the street, the most vulnerable people. So I can't fathom that the municipality somehow feels that this is not a priority. I mean, if this isn't a priority, then what is a priority? So why is there no will from them? I mean, you know, saying that the IDP and there wasn't stakeholder engagement and people weren't making submissions because they didn't know that this was important. I can't believe that. That's not possible. So how do you get the will from their side? I mean, why are they holding on to this? You say there's no resources, but you know, 5% of whatever gets sold through the second busiest market in the country is going straight there. Where's this money going?
Okay, what do you want me to respond? Let me try and respond to you and say to you that there is a false perception that the market is a cash cow for the city. That is not the truth. The market is not a cash cow for the city. The Tshwane market has a turnover of 4.1 billion rand a year. Of that 4.1 billion rand, 5% gets generated in revenue. So if you just roughly calculate it, that's about 205 million a year. That's what gets generated in revenue for the city. And from that revenue of the city, approximately 40% goes to the expenditure of the market. So, 60% goes to the expenditure of the market. So about 40% then is a net income for the city from the market. So you're talking about the market contributing approximately 80 million a year, 88 million a year to the coffers of the city after expenses. And I'm talking about, you know, salaries and wages and all those different kinds of expenditure that the market may have. So if one looks at it from that basis, you know, why does the market not get back that 80 million? You know, it was said earlier on that their market is not subsidized by the city. That truth also is relevant to the Tshwane market. Everything you see on the Tshwane market was actually financed out of the income of the Tshwane market. It was never financed by the city, ever. The buildings you see there that are worth hundreds of millions, billions, or over R1 billion in value, up to 2 to 3 billion maybe if you want to replace it, those were all built out of the market's income. And I can say that with confidence because in terms of the old ordinance, there was a very specific ordinance, a very specific part of that ordinance that ring-fenced the market. And that meant that the city was obliged to fund the market out of the income that the market has, because it was written like that in the local ordinance. And that, to a very large extent, was one of the success factors of the market. And that is why, when one looks at the market in the past, you know, people were generally happy with the market, but generally happy with the standards, generally happy with the services. I'm not saying there weren't problems. Of course there were problems, but generally it was at a level that was, you know, acceptable to the different stakeholders. But that ring fencing was scrapped. It was removed completely. And when that was removed, it meant that the income of the market was no longer ring-fenced for the market, and therefore the market had to stand in line with its bowl to compete for the budget allocation with all the other departments in the city. Now when the market, and I think you're asking the question why, and maybe it's because the level of, I need to tread carefully, I don't want to be insulting, but maybe that perception of the market is not as strong as it should be. Maybe the market is just seen as another retail center, like like Menlyn Mall or, one of those malls, and there's many of them. So, and those malls also sell fresh produce and whatever else. So, what makes the market so unique? When you look at the landscape. And those are the market's competitors at the end of the day anyway, because that product is not bought from the market, or most of that product is not bought from the market. And if any product is bought from the market, it would normally be because there was a shortfall in supply to those specific institutions. So I do think that when one is confronted with possible burning tires in previously disadvantaged areas versus investing in the market, I think you're going to invest where the tires are going to burn. I mean, that's just going to happen. That's the bottom line. And maybe if the market, does eventually come to a demise, the private sector will step into the gap and ensure that that supply continues. But there will be a cost for the city when that happens, unfortunately. So I can't really talk about what's going on there. What is also important to understand is that the cities are evolving. Ever since the country became a democracy, you will not find continuity in leadership. You have changing, you have a changing political rearguard all the time. And when these things happen, those discussions that take place, as Mr. Medema has quite rightly pointed out, focus on those political priorities that social contract with the constituencies to deliver. And you will not find the market in that social contract. You can go read those social contracts. If you find the market in that social contract, you know what, I would be prepared to, in some way, take you out for a meal and reward you in a manner like that, right? But at a restaurant of my choice. So that's not in the social contract. It's not there. So when these deliberations are done, it's done in terms of addressing that backlog. And it's right. I'm not, as market management, we're not angry or upset or demoralized by the fact that the city is doing what it's doing. We understand that. We understand what they need to do. And we're saying we're happy for them to do that. But we think the market should be looked at again, and a different service delivery model has to be put in. And any kind of internal attempt right now to address the market situation will be temporary. It'll be a Band-Aid. Because it'll change. The CFO will change. The city manager will change. How many city managers has our city had? How many top managers in the city have survived from one political term to another? And every time there's a change in administration or in governance of the city, the market has to begin from the beginning. And when you have to tell people, this is how the market operates, but they are now in the private sector and they think they know better than market management, then basically their view supersedes your view, because they are the ones that are now the decision makers. So it can be very, very hard to convince the decision makers. I must say that we're getting a sympathetic ear, right? Mm-hmm. So it seems like there is greater understanding for the market right now, and there's a greater willingness to look at the market right now and to come up with a solution. But I would really just plead that the solution can't just be an internal solution. You know, I know the role players don't like a municipal entity. They have the issues with that, and that's because of this volatility within local government, within the volatility with, you know, the people that are managing the market, and that is a legitimate gripe. You can't change your strategy every 2 or 3 years, because all you're doing then is you're creating uncertainty and you're being disruptive, but you're never really moving towards a goal where you want to be. You have to have a long-term strategy in place that you can follow. Otherwise, forever, you're just shuffling your feet and you're staying in one place because your strategy and direction keeps on changing and you can't really make any ground. I mean, strategy takes time to achieve. It's not something that you achieve in 1 month, 1 year, or 2 years, or 3 years. So people need to be realistic. And to say that when you change the market, you need to also ensure that the vehicle that you're going to use, the mechanism that you're going to use, that you're going to approach it in such a way that you only change whoever is managing or running that if required, if necessary, but not based on a change in political leadership or in administrative leadership. If those people are there and they're doing the job and they're making progress, leave them there and let them carry on with their jobs. Don't interfere. And the role players say that. Stop trying to change something that's working. You know, when we speak to our stakeholders and we want to change something, one of the first things they say to us, why do you want to change something that's working? And you need to answer that question before you can even, you know, go forward with the changes you want to implement. Because people need to understand why those changes are necessary.
How bad is the situation at Tshwane compared to Joburg?
That question I really can't answer. Sorry, Mr. Medina, do you want to take that one?
Well, the impression that we're given is that at Joburg market is better. I mean, now and then when we engage with our stakeholders, they will tell us that, that is the stakeholders in Tshwane market, they will tell us that so-and-so, who is our biggest farmer, has left and is now doing business in Joburg market because Joburg market, you know, it's better. Joburg market, you know, it's well maintained, it's cleaner and all that. The same they will say about the buyers, because for the market to survive, 2 key stakeholders that you need is the farmer that will send his produce to the market and consign it to an agency, and then there's got to be buyers that will buy the product. So the product will not stay there for too long and will stay buy and will be sell at a price that, you know, the farmer will be happy with. So those 2 stakeholders, the farmer and the buyers, we are told that they are leaving, and it's very difficult, you know, to get them back. For you to get them back, you have to prove to them that, you know, where they are, or where the place they left is now better than where they are, where they currently are. So we are told that it's better. Well, I think maybe colleagues from the Joburg market, they can also give a view in terms of whether they believe that they are the challenges that they have there, because all these markets, they've got challenges. There are challenges which are very common in all these markets, and I think from the submissions that have been made thus far, one can come to that conclusion that there are challenges that are very common. The fact that we are under a municipality, which these municipalities, their focus, their business, it's very different from what markets do. Markets, we are operating in the agricultural sector, not in local government, but we are owned by local government. And these local governments, they have to allocate resources. They have to have different, programs, to support or to enable, the delivery of the mandate that has been entrusted on them through the Constitution. So when you look at that mandate, it's very different from what we do. So that's where most of our problems start. Yeah, but we are told that Joburg market is better than us. But I know they do have their own challenges, and they struggle with this issue of allocation of budget, amongst other things, and what Mr. Jones spoke about, the changes that happens, political leadership, and then you find that the board changes, and after the board is changed, CEOs, they change. By the way, I worked at Joburg Market for 5 years before joining Tshwane Market. In the 5 years that I was there, I reported to 6 CEOs. So that tells the story. Has that stopped? No, it hasn't stopped. So yeah, so this is what management goes through in all these markets. Probably maybe in other markets, maybe there will be a little bit of stability, but allocation of resources, I think, to me, and also being able to, having the support or the environment being enabling for you to do what is required of you, and so that you can meet your stakeholders' expectations.
Maybe just lastly on this, who's best placed to sort this out? We've obviously spoken to DELRAD. They've indicated that the recommendations that were made from the 2006 Section 7 report, those recommendations, they're still very much on the table, at least in their eyes, but they've hit a stumbling block in terms of the legislative problems that they've encountered. But is DELRAD the best placed institution to solve this problem? And do you feel that DELRAD still has the will to sort that problem out, considering that this has emanated in, 1999, these original problems?
Sorry, which institution is that, Del?
Department of Agriculture.
Oh, Department of Agriculture. Whether markets would be better off if they are placed under...
To change the ownership management structure, yes.
Well, that's the conversation that we have had for quite some time, and that has to be tested. But we tend to lean towards that idea or that thinking because the Department of Agriculture's mandate is to develop agriculture, and the agriculture that they have to develop has different stages. It's a value chain. One of the stages of the value chain is fresh produce markets. We think that in terms of alignment, will be more aligned to its programs, and the likelihood of us getting the kind of support that we require, it's much greater, or it will be much greater. That is, if we are under the Department, of Agriculture. That's the thinking. There's that argument. But however, if we are placed there, but then still in the setup where, things like supply chain is centralized, over-dependence on other, departments within the department or sections within the department, if that is not resolved, that can be, problematic. But, you speak to different managers, probably also Mr. Jones may have, a different view. But we have had this conversation, internally. Because probably sometimes you feel out of frustration, you say, hey, I think we'll be better off, maybe we'll be better off if we are with somebody who understands our environment, somebody who is in the same, who is responsible for the development of the sector within which we operate. Because fresh produce markets, like I said, you deal with agriculture. It's more agriculture than local government. But it's just that we are located in terms of ownership, in terms of the structure, in local government. But what we do there is not local government. The city can be the best city in the country without a fresh produce market.
Thanks, Ulrich.
Yes.
Yeah, I actually also wanted to say to you earlier on that our contribution to the city is less than 1% of their revenue base. I don't know if I actually said that, but let me just inform you today that when you contribute less than 1% of any institution's revenue base, then, how seriously will they actually take you? But then also, why do they want to cling to you if you're only contributing less than 1% of their revenue base? Then surely they should be willing to let you go. Surely get rid of this pain that we're receiving right now, called the fresh produce market, and let's try and find a different solution for them. Yeah, I think that the market should be a utility. I don't think it should really report directly into any specific government department for the very reasons that Mr. Medema has touched on. I think we need to be autonomous, and all the markets should come under that utility, and the utility should manage all the markets, and that may even we are a non-profit organization. We're not here to make profit. And in fact, the market is a social investment. There's just no ways that if you are an entrepreneur, you think you're going to build a market and on 5% you're going to get an ROI, then you're dreaming, right? You're not going to get an ROI. Not on what is required for a market like Tshwane or Joburg. So we are a social investment. I mean, we get 5%. Agents get 5 to 7.5%. And they don't even have to put in the kind of investment that we've put into the market. So if you want to look at all those buildings there, it's been built by the city. And no, this is not the farmer building the market. It's the city building the market with the income the city has received. It's the city's money. Just like when you buy stuff from Pick n Pay or whatever, the profit that Pick n Pay makes, it's their money. You don't come to claim because I send all my product to you now, you belong to me. The market belongs to the city. The income generated by the market belongs to the city, even if the farmers paid 80% of the income to the market. But that was built out of those proceeds. So yeah. My personal view is, I think a utility would be best suited for all the markets. It means that the markets that are generating the surpluses can try and pick up the slack for the other markets and try and assist them in terms of how those markets are run. And maybe going forward, the markets as a whole within the country can turn around. You see, to me, this discussion is not about the Tshwane market. Really, I mean, if we think that this discussion is only about the Tshwane market, and even if Joburg market sits here and says, oh, they're okay, they're not that okay, because the whole role players have not been happy with them either. And even if the Durban market says, oh, they're okay, no, they're not okay, because the role players have not been happy with them either. And markets have stagnated, They've stagnated. I mean, that's the truth of the matter. If you want to look at the kind of market share that we had 20 years ago, 26 years ago, 30 years ago, if you want to look at out of the production of the country, what came to markets, and you look today at what's coming to markets, it's been dwindling ever since. And that's why I'm saying this is not new. This whole discussion about where markets are going and the situation markets find themselves in is not new. What's exacerbating it is the fact that now the investment in markets is faltering as well. But the system has been under pressure for a long time. And it must be said, people mustn't bring you under the false illusion that the pressure has only come now. This may be accelerating it. It may be an accelerator. It may be an accelerator to change. But the system itself has been under duress for a long time.
Thank you. Chair, we're mindful of the time. And I think we, as the technical team, can leave it there.
We're in your hands. If you still have questions, please feel free to ask. Maybe 5 minutes or something. Yeah, because I don't want to constrain you.
Okay, that's fine. Look, let me just speak with the team quickly and see.
Yeah.
Thank you. Chair, I think we covered. Thank you.
Thank you very much. Thank you very much, Mr. Bowles. Mr. Murray, any questions?
Thank you, Chair. I'm also mostly covered. There's, I think, one topic that hasn't been necessarily raised in the submissions, but I do think it links with the discussion we're having today and earlier today as well, particularly about the sort of CAPEX, capital expenditure requirements versus sort of what is available. And what I'm referring to is the publicized court case brought by AMASA that ordered the city of Tshwane to essentially reinvest, the figure was 18 million rand. And so what I want to cover there is perhaps your perspectives after the court case. I mean, if you are able to talk about it, I'm not sure if the court case has reached finality. But if it has and you are able to talk about it, I mean, what I'm interested to understand is, I mean, firstly, your perspectives on the need for role players to go to a court of law and to get a court order to have the city invest in the market, but also the amount of 18 million relative to the need. I'd like to hear your perspectives on that.
Okay, let me start with the budget which was cited in those court papers. So the 18 million, 10 million was the CAPEX budget for the financial year, I think 2022, 2023, yes. So that was what was allocated as CAPEX. And then the OPEX was 8 million. By that 8 million, it was specifically for the repairs and maintenance. It's not like the whole, OPEX. OPEX, it covers a number of items, but that was specifically for, repairs, and maintenance. As to whether that was sufficient or not, we've been saying, it wasn't sufficient, but that's what the city could afford, at that point. And this is what we were advised when we engaged, with the finance department, of the city. Then the second issue is about, you spoke about, getting stakeholders, involved, taking, the city to court to get them to do what they believe, is their responsibility. We don't prefer, that approach. We would prefer a setup wherein we are able to resolve issues, without, going to court. Because going to court, it comes with, attracts a whole lot of, costs, in terms of legal fees. But then the stakeholders that took us to court, which is IMASA, we know they've expressed that they've been frustrated. They've been trying to get the attention of the city for a very, very long time. And there's not been, a satisfactory response from the side of the city, and then they were then forced, to take us to court. And this is what they've, said to us when we engaged with them. And they've indicated to us that, they are not fighting market management, but they just want to get the attention of the city, to say to the city, we are bleeding. We have these issues, and it's hitting our business. We are losing business. Producers are turning to alternative, markets. Buyers are leaving us for other markets. And when I say markets, I'm not necessarily referring to maybe any of the 4 markets located, in the province of Gauteng or even outside. But this morning we also heard of, online or virtual markets, which are coming up. So those are the type of markets that they are also referring to. And also what we consider to be direct. Direct to us is when the produce moves from the farm and then it goes straight to a retailer DC. So in the past, Mr. Jones spoke of that years ago, the markets had a sizable share of the total production in the country, but things have changed. The share has gone down, or the slice of the cake, if we were to use that analogy, it has decreased over the years. So I would say we had hoped that we'll be able to resolve these issues without going to court. We'll get the allocation and also the support from the city that will enable us to have these issues, addressed and avoid, legal processes.
Right, and then maybe it's sort of linked to the same topic. Is I just want to understand exactly what it means to say a utility has to be created. Are we talking about an SOE that sits outside of the municipality, or like Joburg does, an SOE that sits inside the municipality, so still subject to MFMA rules, but I think you mentioned earlier, has its own budget, has its own board, has its own recruitment processes. The only sort of influence we heard this morning on the budget is in the appropriation proceedings, which is once a year as far as the municipalities are concerned. But as far as the SOE is concerned, it's a fully functioning separate entity than the rest of the city of Joburg. Are we referring to that, or referring to a sort of national entity that takes control, I presume after a constitutional amendment, takes control over all national markets or municipal markets in the country, but from a utility perspective, so like an Eskom or a Transnet, those sort of utility perspectives? What exactly are your thoughts on that?
Yes, I think you understand what I am saying quite well. It cannot be a local solution. If Joburg market continues to survive and the system collapses, you don't have a system, you have Joburg market. That's the bottom line. If Joburg market and Tshwane survives and all the markets collapse, you still don't have a system, you have Joburg and Tshwane. So how can you then ensure that the system survives when the institution managing the system is a local authority? That's not going to happen, because every local authority is going to deal with it in terms of their own priorities and in terms of their own specific views and perceptions as to how to manage their particular institution, which includes the market. How do you find a solution for 16 fresh produce markets across the country where there is a regulatory aspect that is relevant to those markets? And when you look at all the other markets where they are struggling and they need funding, they're not going to get it. So what do you do in this place? I really think that an SOE at national level is the only way to do it. I don't think we should be part of any other government department. I think the market should be run as a utility across the country, one set of bylaws for all the markets, one set of management for all the markets with local management structures in place, one strategy, one direction for all the markets, one standard at all the markets, and the larger markets supporting the smaller markets in terms of what they need, systems, investment, or whatever else. You need to treat it like you treat like the chain stores are. Pick and Pay is all across the country, right? And they are big institutions. They are turning over money, probably even more in terms of their turnover than what markets are turning over as a total. I mean, we've said what markets are turning over as an industry total. So let's compare it to what Pick and Pay is doing. How different is that to what I'm suggesting? And maybe then markets can start taking a step forward into the future, because they're all facing in one direction. They all have one vision, one goal. They all run the same. The producer knows what to expect from every single market in the country. The buyer knows what to expect from every single market in the country. If you're a chain store and you're doing business with the market, you know that if you're buying at the Tshwane market, you're going to get the same thing at the Joburg market, the Cape Town market, the Durban market, the Bloemfontein market, the PE market, the East London market, wherever they are. And isn't that really what we need to do with markets? Shouldn't we really put a platform down where markets are in one homogeneous environment and people know what to expect from markets as an industry?
Thank you, Mr. Jones. Thank you, Chair. I'm covered.
Thank you very much, Mr. Murray. Just some questions, because I think maybe on this price discovery question, do you monitor prices at retail as the Tshwane market? So do you ever look at what's happening at the retail level, looking at your own outcomes on a day-to-day or monthly basis?
No, we don't. Chairperson, the short answer to that question is that no, we don't monitor, the retail prices. But now and then, I mean, one will come across, articles that have been published that will give one an idea as to how much consumers, paying, and retail. But we don't have, a system or go into an exercise where we compare our prices to that which consumers at retail level, are paying. Yeah.
Let me just say something, please, sir, if you don't mind. Look, we would not be interested in retail prices, and we would expect retail prices to be higher than market prices. The market is a middleman. It's you have your producer, and then you have your bulk, your wholesale system, which is the markets, and then you have your retail system. So that's basically at the end of the chain in terms of the distribution of the product to the final consumer. We would be far more interested in what price is being made between the producer and the retailer. And we already have part of our answer. We know they are negotiating two things as part of their leverage with the producer. We know they're negotiating the commission structure because the farmer has to pay a minimum of 12.5%, and we know they're negotiating the transport with the farmer. And that's what gives, and that's where the Achilles heel of the market is. Because I can go to the farmer and I can negotiate that, okay, you know what, the market is taking 12.5% from you, right? And, I can even take over your transport, and I can do it with my own trucks and take the product from you. So we know that's part of the discussion. And then we also know that part of the discussion is continuity. You harvest your product. You have a destination for your product, which is my distribution center. So you can send it there, but you can't send all your product there. You can only send the product that meets our specifications there. So what does a farmer do? He enters into that contract, and then he sends the rest to the market. But would he not maybe get a better price at the market if he sent all his product to the market, and that very same retailer had to come to the market to buy his product? And then that retailer would have to compete with every other single buyer at the market for that same product. Really, all that direct system is, it gives the retailer continuity of supply based on the rules of the game that the retailer sets and is prepared to set with the farmer. And let's just say it, because that's what it is. And the risk is still the farmers. Clearly the risk is still the farmers, whether that crop survives or not or whatever, but the retailer now gets hopefully a guaranteed supply to his stores. Why doesn't he want to come to the market? Because he's not guaranteed that. He's not guaranteed that he's going to get that product at a fixed price for a 12-month contract. He is faced with the fact that on day one, he's going to get the product for 10 Rand, on day two for 15 Rand, or 12 Rand, or 11 Rand, maybe on another day for 8 Rand, or 7 Rand, or 6 Rand. So it's all about the retailer minimizing his risk, making sure that he has continuity of supply, making sure that when Mrs. Housewife comes, she will get a price that's going to be relatively the same month after month. So that's, and what, am I trying to trash them? No, I'm not. I understand why they're doing that. I mean, if I was a retailer, I would probably do the very same thing. Bottom line. So I'm not saying that, what they're doing, I'm griping about. I'm just sketching the reality of the situation when it comes to fresh produce markets. And they do that. And the one thing that I've said, even at our market and to our stakeholders, is that, you really need to realize that once a buyer starts reaching a scale of economies where he no longer is just taking a truck or a part of a truck that buyer is definitely going to start looking at direct. He's definitely going to start looking at entering into contracts with farmers or buying from the farm, because what is he after? He's after a cheaper product. He's after reducing his own cost. This is economics 101, it's business 101. So that is our Achilles heel. But what has added to our Achilles heel now, unfortunately, is the financial constraints of the city has become part of that Achilles heel right now. And it cannot be separated from that. So Ntate, we think the farmer may be getting a better price, maybe not, we don't know. But we think it's being leveraged in terms of the commission, the transport, and the philosophy of, you have a buyer for your product, so you can send it to us for the next year. Your harvest is basically guaranteed to come to us at a price that you yourself can also then work out your own operational needs and requirements and cover that and so forth. And obviously the farmer would be foolish to enter into such a contract if whatever price is entered to between him and the retailer is going to cause him to suffer loss. So obviously there is some leverage there, but could the farmer be making a lot more at the market? Possibly. The farmer could be making a lot more at the market instead of entering into these contracts with the retailers, which I actually think benefits the retailer more than what it benefits the farmer.
All right, so thank you for that. So just on the, maybe, I think when you started, you say we would really battle to do product comparisons. But just broadly on quality, when you compare product that's being sold through the markets and the product that goes through maybe the retail channels, what's the quality comparison, like for like, graded like for like? Are there any quality differences that we should note, at least from a Tswane point of view?
Earlier on, APEC spoke of PROCON, which is an assignee of the Department of Agriculture. That is, amongst other things, what they are doing in this fresh produce market is to ensure that the product standards, in terms of the Product Standard Act, is complied with. Meaning that if you say this product is Class A, then it should be Class A and it must meet all the requirements set out for Class A product. So at Tshwane Market, you will get Class A, which you will also get at any food retail supermarket. That's one. Two, you have some of these food supermarkets, when they have challenges in sourcing the product. Mr. Jones earlier on spoke of contracts that will be signed between the producer and the retailer, and then the producer will be locked in those contracts to supply for an extended period of time or specified period of time. But then what happens if the climatic condition change and they become unfavorable for the producer, such that the producer will not be able to meet, the terms of that contract? The retailer wants the product, wants to sell the product. The customers want to see the product in the stores. So where does the retailer turn to? Come to us. They go to National Fresh Produce Market to source the product from us. We have Class A, which you'll find in your major food supermarkets. So, to answer your question, Chairperson, I don't think there's a difference in terms of the quality. I don't believe that there are people who will say that the market is like a dumping ground for substandard products, but the products which are sold there, they are of the quality that you'll find in food supermarkets. And there's an organization which is assigned by the Department of Agriculture called PROCON to ensure that the standards that are prescribed in the Agricultural Products Act, are complied with from quality point of view. Thank you.
No, thank you very much. Maybe it could be my last question. I think you say you have 11 agents, right, currently?
Yes, we have 11 agents.
You have 11, yes. What's the profile, I call it demographic profile, and maybe you can share a bit more about that, and maybe I'll have a follow-up question.
Out of the 11 agencies, 3 are 100% HDI owned or black owned, 3. And then we have the other 3 with black shareholding. So 3 out of the 11, 100% black owned. And then on the balance, then you have 3 that has got black shareholding.
Have you put any measures as Tshwane to sort of assist with transformation, either, enabling these agencies or even the farmers? Because I think you have already confirmed that 10% of the produce that's coming through, it's maybe from black farmers. So just want to hear from you on the transformation front. And despite the challenges, I think, in the market, but I think it's still a functioning market.
Now let's start with the farmers. With the farmers, earlier on I spoke of our involvement in a number of interventions where we engage with the provincial departments of agriculture when they have got events wherein we engage with farmers. We are given an opportunity to make presentation and also to engage with farmers, at those events. And also there are instances wherein the farmers they come and visit, the market, and then we engage with them, we take through the process. And the whole idea, we want them to start participating in the formal sector. As far as supply and production of fresh produce, is concerned. So that's one. Then when it comes to agencies at Tshwane Market, the 3 black-owned, 100% black-owned market agencies, they are guaranteed a space in the trading hall. And this is in terms of our standard operating procedure when it comes to, space allocation. So when we allocate space to them, we don't look at how they have performed, because we know that if we look at their performance against the performance of other bigger agencies, chances are they will not get a space where they could trade from, which will be practical for trading, to take place. So we guaranteed them on the 10 running meters.
1.5% of total net available floor area.
Yeah. It may sound small, but then when you look at the actual area, it's sufficient. I would say that it's sufficient because most of them, even now when you check, when you go and if you go to what we call those the trading barriers or trading areas.
Sales barrier.
Yeah, sales barriers. They don't have, they will not be stocked up so much that they will not, they don't have sufficient space, or they're running out of space. Yeah. So that space, yes, we want them to, if the question is, do we want them to grow? Yes, we want them to grow. We want to be them to be like, other agencies that have been there, for quite some time and that are doing quite well. Yeah.
Thank you very much.
Just to,
yeah, please.
Chair, if I can just
please
share with you that the 300% HDR agencies are less than 1% of our annual turnover as a group. So just to give you a context of the 1.5% versus the 1%, and as Mr. Medema says, the area that they occupy in terms of product on that floor, you will rarely find that they will have a full barrier at all. Most of the time it's not fully stocked as a point. And the other point I want to make is that this is a problem. And you know this already, and from Shani's side, I'm reaffirming to you, these agencies haven't been there for 6 months or 1 year. They've been there now for several years. And after being on the floor for several years, they still haven't been able to penetrate beyond 1% of the market's turnover. I've seen them come into the market with great aspirations that they'll be able to penetrate the market. And I've never wanted to discourage them. But the truth of the matter is, forget about new startups on the market. They have to come through the system. They have to become part of the existing agencies. They have to walk the walk with the existing agencies. They have to be exposed to the industry through the existing agencies. Even one of our existing market agencies was a salesman with an agency, and then he took the opportunity to start his own agency. But he is struggling to penetrate further than that. He'll be able to continue with what he brought with him, but it would appear that there are serious growth constraints for these agencies. And it can be expected, because the market is not a simple retail outlet. You really, as a salesman, have to understand the market. You really have to understand your buyer. You know, it's not easy if you want to come in there and you want to sell a product line and you actually don't have a proper product range and depth as an agent. You know, as a buyer, you would go to an agency that if you want to buy 20 pallets of product, the 20 pallets are there. You don't want to go here and buy one pallet and then go buy the other 19 pallets there. I mean, these are the realities. It's like anyone when you go shopping. You don't go to Pick and Pay and then to Checkers or whoever else. You go to ShopRite or Pick and Pay and you buy what you need there. It's the same kind of concept. So, and if you want to buy more than one product, you know, and you can find the quality of that product in one agency barrier, and there's several different products on that floor, you're more inclined to buy all your product from that agency. And these guys are further disadvantaged because if they want to try and sell the product, they're going to be negotiated hard by the buyers. There's just no two ways about it. I mean, you know, when you're dealing with somebody and you're in a stronger position than them, and they want your business, or you want their business more than than what they want your business, you're the one who's going to make the compromises. That's the bottom line. These power dynamics exist. They exist within markets. They exist between producers and retailers. Do not believe they don't exist. Those power dynamics definitely exist. And they definitely influence. They definitely influence the price that is made. There's just no two ways about it. If anyone wants to tell you these power dynamics don't exist, they're misleading you.
So thank you for that. So what do you think ought to be done? I think the Durban market suggested that maybe perhaps it's easier to enter, to have this wholesale channel. And I think some agencies have said, well, maybe they should start as salespersons. You know, but I don't know what you make of this and what you think maybe ought to be done to address this participation challenge.
Chairperson, we are so obsessed with the fact that a company has to be 100% black owned. Isn't it just important that there's black ownership within companies at the end of the day, irrespective of whether that was at one point in time a 100% white-owned company? Is transformation also not white companies transforming and becoming more black, for instance? I think that if a person wants to be successful in this industry, join the successful agencies and work your way up in those agencies, get more product in those agencies, and maybe as time migrates, right, you will end up into being a part owner in that company as well. When you do you know how you get ownership in an agency, chairperson? You have to have loyal producers supplying you. That's it. When the salesman, right, has the power, because the producer is loyal to the salesman, then the agency then is in the lesser position. And the salesman then is basically romanced by the agencies to work for them, and part of that then, they offer them ownership in the companies. That's it, simple business 101. But when the agency holds the power, because the supplier is loyal to the agency, you leave that agency, you're still pretty much on your own. And agencies their game is they have to protect their supplier base. But once the salesman usurps the agency, the power dynamic and relationship changes. And on markets, there are salesmen who are more powerful than the market agency when it comes to certain producers. And the agencies definitely romance them to be part of their agencies and offer them ownership. That's how it works, sir. Don't think you're going to go there, producers, and get massive product delivered to you. It doesn't happen. It's a fool's errand, if that's what you're thinking, sir. And I'm sorry, I don't mean to be insulting in any way. And I apologize for that.
I don't intend to start an agency, so
I'm
okay.
Chairperson, maybe just to add something, probably maybe it's like we're moving towards conclusion. Yeah, so this is a very interesting dynamic in our industry. So the relationship between the farmer and the seller of the product exists strongly between that farmer and the salesperson, and not the company that the salesperson works for, and the company being the agency, and the person that sells the product being the agent. So much that when the salesperson or the agent decide to leave company A for company B, he moves with his producer. That's how it is, by and large. So that's why he spoke of the power that some sales agents have. So when they move with the producer. This is my producer. I went out. There's this concept. They say pulling a farmer. I went out and then I pulled him to this market, to this company. So that brings a very interesting dynamic when you talk transformational issues. So that's why sometimes he spoke of, as a salesperson, go into an agency that is successful and then bring your farmers and then develop relationships with more farmers, get them to trust you with their product, because that's what it is. The farmer must trust you with this product, must believe that this guy that I'm giving this product to is going to sell it, is going to take care of me. Taking care of me, make sure that the product sells, then I get my money, I get the reports, and then it keeps me up to date as to what is happening, with my product. So the farmer communicate more with the salesperson and not the company. So the relationship is much stronger there. Yeah.
No, thank you very much for that. Mr. Bowles, you are fine. Maybe any closing remarks from your side?
Well, I hope the session has been helpful, Chairperson, for the Commission. And I just want to take this opportunity, to thank, the Commission for inviting us, and thanks for those questions. When we received that set of questions, we went like, how many were there? It was like 30. I think I'm not sure if I think I was communicating with Advocate Mare, and then I asked for postponement because they were taking really a lot of our time, and then the information which was asked for was quite detailed. But I think this is a very useful, exercise. I think for the market, it also opens an opportunity for us, to engage on other matters. I mean, we presented, some of our frustrations to you, and those frustrations, they start to affect, our operations. They start to affect, also the perception of the buyers and the farmers, or our stakeholders in terms of what is actually happening, in our environment. And I hope that something good, will come out of, this process, and we want to be part of that. Something good that we're expecting, from this process. Thanks very much, for the opportunity, and thanks for being patient with us and granting us, the extensions that we have requested for, so that we're doing that so that we are able to respond to your questions in such a manner that those responses, will be useful, for your process. Thank you. Mr. Jones, I don't know if maybe you want to say something.
Yeah, Chairperson, when the Competition Commission says that they want to investigate markets for the third or the fourth time, then one starts feeling a little bit, well, okay, are we being targeted again? And and you have that feeling because you're in an industry A that you love, right? And you are aware that the industry is in trouble, and it's not in trouble only because of the issue of the neglect of what's going on with the market facilities. The industry is in trouble, and the industry as a whole has to sit up and take note that the market's in trouble. Do they really think that our market share is not going to continue dwindling, even if you, do address the issue of the facilities and all the rest of the stuff, So we appreciate the fact that we've been able to candidly have these engagements with you, and we have tried to be as candid as possible on it. We don't intend, it's not our intention to insult any other party within this. We just think that as far as our perception is concerned, that is our reality, and that is what we are sharing with you. And we're not saying that our reality is the only reality or the only perception that's valid or that must be listened to. But we do think that things need to change. And I think we do need you to look at these power dynamics within industries, within the market. This whole system is a system of the utmost good faith. Really, that's why you need APAC. That's why you need the market at local level, the market management, the independent regulator. Because the farmer is putting his product into the hands of another person, and that person is not paying for that product. And that person can do all kinds of things with that product. I mean, the questions that have been asked are pointing to that. That product can be sold for two different prices. One which is given to the farmer at the lower price, and another where the agency is making additional money on that selling price. And it could be happening. So I don't want to say it is happening, and I don't want to say that this industry is in total demise. I think that there are good people in this industry. There are good agents in this industry. And I think that even within market management, there are good people, right? We have our challenges. But we can't move on from here and leave it unchanged. There's just no ways that we can do that. And we really need to find a future for all stakeholders. within the setup. I think if any one stakeholder thinks they can run off with this on their own, I think it's a delusion. And I think there's a bigger nightmare waiting at the end of the road with that kind of thinking. So thank you. We've given our inputs. There's lots that we said in our inputs that weren't discussed here today, but we think that they are very relevant. But I think there can be another time and place maybe to have those further discussions. And we wish you Godspeed with your endeavors. And that whatever you do, it will make changes to this industry that will actually strengthen this industry going forward and not weaken it and damage it further. That's really what I would like to see out of this, that we can go from where we are to a better destination. Thank you.
Thank you very much, Mr. Jones and Mr. Madima. Thank you very much for your time and your contributions. We appreciate it. Thank you. And you are excused. Thank you. We have today reached the end of the first round of public hearings for the fresh produce market inquiry. During this round, we have had oral submissions from 15 stakeholders who cover most of the fresh produce value chain. These stakeholders include industry regulators, government departments, market agents or agencies. I think we had agencies, fresh produce markets and retailers. Their submissions have, and I believe, made a positive contribution to the inquiry's understanding of not only the challenges facing the South African fresh produce value chain, but also the potential solutions which the inquiry may consider. The inquiry's immediate next steps will be to consolidate the information that arose from the public hearings, in some instances with follow-up information requests. In addition, the inquiry will continue with further analysis, including detailed data analysis of pricing and other information, as well as continuous engagements with all affected stakeholders. As I had indicated at the start of these hearings, the inquiry had extended invitations to a number of firms, some of whom had declined to participate in these hearings, either on the basis of availability or that they believe they do not have further input to provide to the inquiry. In the coming weeks, the inquiry will commence planning for the second round of public hearings. Such hearings may provide another opportunity to attend public hearings for those stakeholders that were unavailable for this first round. In particular, the inquiry will consider whether it agrees with those stakeholders who are of the view that they have no further input to provide, or whether to invoke obligatory measures to ensure their attendance at the next round. Having come to the end of these hearings, I want to extend my thanks to each of the stakeholders for availing themselves and for their cooperative and constructive manner of engagement. I want to also thank the evidence leaders, the technical team led by the technical director, and the support team for ensuring that these hearings run smoothly and efficiently. The inquiry is progressing in line with the administrative timetable and remains on track. With that, I now bring these hearings to a close and adjourn proceedings. Proceedings are adjourned. Thank you.